Come on, wake up now. Pour that coffee down your throat hole. It's hot. Now you got a hole in your throat. Oh no. Just call your boss. Take the crust from out your eyes. So tasty, not a coffee.
Good morning, you knuckleheads. Welcome back to the show, Tasty Live, Millennial Takeover. Round 100. Mike Butler, Vanetta Logan, Nick Batista. Good morning.
Good morning. We are boomer free today.
We got some freedom. It's awesome.
It's pretty nice.
I know the boys are in Mexico.
Break free from the chains.
Amazing.
I love it. An unexpected vocal surprise from Mikey. That's nice.
Mikey has some musical talent.
Mikey has the range, as the kids say.
He can serenade. It's quite something.
That's
Piano.
Yeah.
You are a musician. Some people don't know. You play the piano, and you play the guitar too, or
No.
just the piano?
It's that my brain breaks. I play the guitar and I try and like do the different strings. I'm just like,
See, I'm the opposite. I can play guitar, but I can't play piano.
Piano is like I look at the keys. I'm like, this is the easiest thing you could ever learn because
It's
all
just-
the same. It's the same things in chunks.
Yeah?
But yes, I've got a couple songs up my sleeve.
Chris Butler, too.
Yeah, Chris.
The Butler
Your
boys.
little brother was here yesterday. It was
say?
it's nice to see him.
I'm like, are you sure you want to get up and come here at 7 a.m.? He's like, yeah, I got to rise and grind. I'm like, look at that. Yeah, he can play guitar. I can play piano. And that's
Basically the Partridge Family.
Yeah.
Yeah. It's pretty good. Mm-hmm. Pretty good. So what'd you guys get up to? I'm relying on you guys to go out and live life.
I went to the UFC fight on Saturday.
Oh, I saw on your Instagram. How was that? What was the card? Who was playing?
It was
Or fighting, sorry.
Dricus Duplessis, who was the title holder, against Chimaev, who's this Dagestani wrestler, and it was just Dagestani wrestling where he just laid on him for 25 minutes. It was a really like everyone was booing.
Awful.
It was a boo fest for the final fight,
yeah.
but all the other fights were great. There were actually multiple massive dogs that knocked out the favorite.
Oh, okay.
Those were really fun. And then
Is that your first UFC event in person?
yeah.
Have you ever been to a UFC event?
Not UFC, but I went to one in Cicero.
Just like an
which was-
unsanctioned
Yeah.
backyard
Basically.
brawl.
Yes, and I think I was like,
Sometimes that's even better.
yeah, I was like 17 or 18. I went with my dad and Chris. We had like front row, like on the cage.
Sure.
When people would be on the
Oh, they were bleeding on
they
you.
were like bleeding and sweating on us.
Oh.
And
It's perfect.
you know, I was under 21, so they stamped.
Yeah.
They stamp you if you are over 21.
Right.
And so we licked my dad's hand and then did one of these.
my God.
Sure, yeah.
Give me the pass. So I was just drinking like Mike's Hard.
Oh no.
Yeah. and just watching these fights. But it was very.
So your dad's legacy of terrific parenting goes back a while. So not just from Vinny and his hard cider, but
Yeah.
back to you and the hard lemonade.
Yeah.
Wow. Okay. Okay.
And the fights were incredible. It was certainly, this was like borderline unsanctioned.
Yeah. Yeah.
See it?
Yeah.
Was it sold out?
like
Was it?
idol.
It was sold out.
Yeah.
Did you take your girlfriend, or you just go with a guy friend?
I went with one of my guy friends. Yeah.
Okay.
But yeah, it was sold out. It was a full day event. We got there at like 4:30. It went till midnight.
Oh, see, that's too
It
much.
was amazing. Loved it. But it went by so fast. It was
How much did you spend on food in that window, though? That would be
Not as
my
much as
concern.
beer.
I haven't looked. I don't want to look.
You know.
Beers, yeah, the beers are
$12 a pop.
at least more.
Yeah.
It's like you go to get 2 beers and it's like $40.
Yeah. Oh my
insane.
goodness.
But
See, that's when you put like vodka in your bra.
yeah. Should have done it. But yeah, it was a great night. I would do it again in a heartbeat. But it was expensive. It was very expensive.
Yeah. I get that. Yeah, I've never been.
Luckily, they only come around Chicago like once every 10 years.
Oh, the UFC does?
Yeah.
We get WWE. I know it's not the same thing.
Yeah, depends
but-
on who you ask.
At Allstate?
Yeah.
That's
Or at the
something.
United Center too. Sometimes,
Do they?
right? I don't know.
I thought they usually
It's
are.
mostly Allstate, I think.
Yeah, mostly
They
all
have-
is
they
in
have
Rosemont.
the United Center
I
stuff.
know.
Yeah.
One of these days we're gonna go to the monster truck.
Yeah.
At Allstate.
Yeah.
Oh, I'd go for monster trucks.
They
Grave digger.
Yeah, they're still there.
Yeah, I know. But I saw one lady on TikTok, but she has like a unicorn truck, and I'm like obsessed with it. I'm like, okay, girl boss. But she's like a lady monster truck driver, but her truck is like pink and purple, and I love it.
Yeah, we could go hit some golf balls and then huff some exhaust for 3 hours.
Did you see that viral video where there was some monster truck rally and the tire fell off of the truck, went over the stadium, crushed a guy's car in the parking lot? Because each tire weighs
Oh, yeah.
like 800, 900 pounds, and you could just perfectly see it go over. And
Yeah.
like, imagine explaining that to your insurance.
Well, what happened was
But at least it's on a viral TikTok.
Yeah,
so
that one is probably easy to explain.
Yeah.
You got the video. You know, it's harder to explain.
Yeah, but you don't anticipate that when you go to
Yeah.
a monster truck rally that your car could get crushed. But
Yeah.
just be on the lookout, I guess. I don't know. How about you, Nikki? What'd you get up to last night? You have club business.
Played some pickleball.
How's that going?
It's very good. It's very good.
Do you have a partner or is it singles? How does that work?
I mostly do like open plays. I do some ranked stuff as well.
Okay.
But yeah, I'm feeling a little tight. A
Oh,
little tight in the back. It's really sad.
your
I feel old.
your warranty's expired.
Yeah, the warranty has expired. So yeah, that was.
Have you ever played pickleball? I've never played pickleball. Do you like it?
There's actually a like semi-pro exhibition today
Oh,
for the Cubs game at
Oh.
Wrigley.
okay.
Or like in the
pickle area.
yeah,
in the
like,
Gallagher Plaza or
yeah,
whatever it's called,
yeah.
Gallagher Way or something, whatever.
So some of the semi-pros were there playing with us.
Nice.
Which was fun.
Wow. Okay.
Yeah. So it was kind of cool.
What does this semi-pro pickleball athlete make? What do you think?
It's a great question. I don't know if the semi-pros are making anything, but like the pros, I think they make like a decent amount.
A pickleball pro,
There's
really?
a lot of sponsorships and
Sure.
stuff like that.
Sure.
Where they're making, I don't think they like get paid a ton.
Right.
Or-
But you do like brand
Or-
deals,
yeah.
you do social stuff.
Yeah, and they all have like product marketing deals.
Yeah.
Their own paddles and grips and bags.
How many paddles do you have?
I have 2, but it's just because I upgraded.
Oh, okay.
I keep the second one if I'm playing with friends.
You keep that thing on you?
Yeah.
The AI buddy is saying average professional pickleball player earns around 33K with then you can get up to millions if you have deals and all that stuff.
Yeah.
Not looking great for the average.
So we should keep our day jobs, is what you're
side
saying.
gig, side gig. You know, I'm working my way up the ladder.
Yeah. Yeah. I thought that was funny.
See it?
Yeah.
Side hustle pro pickleball.
Yeah.
But are
Not
you-
if my back keeps doing this.
But is it a good way to meet people? Like, are you making friends? You're meeting people? Yeah.
I got some
okay.
pickle friends.
Okay. Are there
Pretty good
pickle ladies?
There are. Yeah.
Yeah.
You know, I play at kind of a higher level, so
My God.
you know, it's very competitive.
Okay. So women aren't on your level.
Yeah. You know, it is what it is.
It is okay.
I get it.
That's fine. Well, if you were wondering, Tom and Bat and Scott are on the way. The 3 amigos, literally, to Mexico City. But the 3 amigos.
Yes.
So you don't know what time your dad's flight was. You don't care.
Again, I mean, I'm the last to know family updates as well. So
Yes, there you go. So Tom's going to be giving a talk on AI, digitization, and the future of risk taking. It's going to be good. I don't know if
this has way too much editing. This picture.
You take it up with production. I'm not going to cross Cassie. I'm scared of her.
That's a fake Tom.
I like to just call it GLP-1 Tom.
Yeah. But this was before GLP-1.
I know.
This was like 5 or 6 years ago.
I know.
Yeah.
Remember when he was just walking around his house during the pandemic? Just like walking in circles. It was good times. But anyway, you can see Tom live in Mexico City. There's still time to sign up if you happen to be in Mexico right now. But he might be putting his presentation online. That's TBD. But if you would like to see Tom in America, you can go to tastylive.com/events to see if we are coming to a city near you. I believe they are headed to San Francisco next.
Yes. And we will be in Dallas.
When are you going to be in that?
October 12th.
October 12th in Dallas. There you go at the Kessler Theater.
Yes.
That's
It's a
pretty
football
good.
Sunday.
Ooh.
I know.
You know, that's a religion in Texas. Are the Cowboys at home even? Are they on the road? Or you don't know?
They're not that night.
I think
Okay.
they have a Monday night. Don't they have a Monday night game there?
Not sure.
That weekend?
Because I was going to say you probably wouldn't even be able to get hotel rooms. I don't know.
All I know is we're going straight to the rodeo.
Yeah.
You're going to the rodeo?
Oh yeah.
Yeah.
We went to the rodeo we actually did a first rodeo trip as a Tasty Live crew. It was
Wow.
amazing. It was everything I could have expected
In Texas?
in Texas, in Fort Worth.
Whoa.
And the cool thing about Fort Worth is it's kind of like if you were to take Fulton Market
Yeah.
and Randolph,
Yeah.
they shut down the streets. If you were
Yeah.
to combine those two and turn them on an angle, and then in the middle of that area is the rodeo. So it's like bars, restaurants, rodeo, right there.
Bars, restaurants,
difference-
hot cowboys.
Yeah.
That's what my mind hears.
It's also like an hour outside the city.
Sure.
Not exactly in the middle of the city.
But Fort Worth, 10 out of 10.
Wow.
We enjoyed it.
I want to go to the rodeo.
Come along.
Yeah.
Oh, you want to be a
You got to get like one of those big belt buckles.
Oh, there were plenty of them.
Yeah.
Yeah.
Yeah, when we went there last time, the announcer, before this girl actually crushed the national anthem. She
Amazing.
just destroyed it. It was
Yeah.
But he was like, and now, the best song ever written, our national anthem. I was
Ooh.
like, hell yeah, this is what I was here for.
Hell yeah, America.
Yes.
Have you seen like those little kids that do like the barrel racing
Oh, yeah,
and like the
that.
sheep rope? Like they are getting after it.
Yeah.
Like they are fearless.
Yeah.
I like to watch those videos.
That was
on
the part of
TikTok.
the show where we were like, ah, because they had like the little calves just getting roped. And
Yeah.
But then you had the grown-ass men drinking their whiskey, getting on a bull, and then getting bucked off. Perfect.
Would you get on a bull for enough money?
No.
Absolutely not. Absolutely.
I just saw a recent video of one of the guys in the what's it called where they're racing in the streets.
Oh, the running of the bulls in Pamplona.
Yeah. So
Yes.
the guy thought he was so cool and funny, and then a bull came and hit him in the face, and you just see his face flapping. So I'm just like, no.
So that is not looks maxing.
Was that like a live leaks or something?
It was just I saw it somewhere on some social media platform. But I
So
was
you
like,
wouldn't
yes.
run with the bulls either in Spain? No? That's a no for you?
Yeah. I
Yeah.
think so. No.
All right. That's okay.
Yeah.
It's probably for the best.
Yeah.
Also, I don't think they treat those animals very
No.
well afterwards. I think they die. So
Yeah.
I'm not a fan of that.
Not good.
Well, we are doing the Millennial Takeover. Me, Mike, and Nick will be holding it down today and tomorrow on the live show. Friday, make sure you tune in because it's the Estrogen Takeover. That's right. Me, Liz, and Jenny on Friday. So are you jelly?
Yeah. I'm going to be watching.
Always a good time with the ladies. But yes, Tom is going to be out for about a week or so. Bat should be back on Monday.
Yes.
So with that, we got a great show for you today on this wonderful Wednesday here at Tasty Live. At the top of the 8 o'clock hour, we have an options jive, a quick way to get expected daily move. Looks like we're going to break down a little back of the envelope math about how you can quickly figure out what the projected expected move of an underlying or an indice is going to be. Always helpful.
Yeah.
That's at 8 o'clock. And because it is Wednesday, it's Assume the Position Wednesday. So we got What's Your Assumption at 8:40. Mike and Nikki doing some trades. Tom said on the show yesterday that IV is cringy low, but maybe the viewers have some good trade ideas. Do you think?
They always perform.
Do you prefer What's Your Assumption or Fast Market? for viewer submissions.
Tomato. I
Okay.
agree with that. I mean,
Okay.
they're both great. But I mean, last time we hosted on Friday, we took all the trades.
Yeah.
And we've already taken a couple of them off. So.
Oh, nice.
And it's always good. I mean, I like it because it gets you out into like new underlyings that you might not trade all the time.
Right, yeah. Yeah, because people see things that
Yeah.
they're scanning for things that may not be on your radar. So,
Yeah.
but these people are writing in with their trades and they have a specific directional bias. That's going to be at 8:40. Then 9 o'clock, part of our market measure series, the 1/E law. What? The 1/E law. That's how it's written on my screen. I'm messing. I don't know. Like 1 over an electron? What is? I don't even know what that is.
Well, you'll have to tune in to find out because
Okay.
he's going to join us.
Yeah, that does have Jacob written
Yes.
all over
Yes.
it. But drum roll, please, because Scott is out. Special guest bringing you a tasty extra at around 9:20. We're gonna have guests: FX, Glenn, and crypto.
Yes. So we're going to do like a little variation of the top 20 symbols
Oh, okay.
because Scott is out. So
That's right.
we're going to do kind of a top 5 from crypto and FX.
Oh, I love
Just
that.
an interesting little, discussion. Put something new on your radar.
All right.
If you don't have Tasty FX, you sign up right in the platform. It's
There you go. It is easy peasy.
Yes.
And prior to his departure, Tom did record a Truth or Skepticism with
thank God.
Dylan. Oh my God, I know.
How
Yay.
could we go
How could
on?
we live without our favorite liberals? Yay.
thank God.
But if you
Thank
want to
God.
watch that, again, no one's making you watch this segment. So
Very true.
if it triggers you, then don't watch it. But if you love it, which some people do,
Yeah.
it's going to be live, Tasty Live, at 1 p.m., also on our Tasty YouTube channel. So make sure you like and subscribe and hit that bell notification so you never miss any tasty content headed your way. But hey, in the meantime, in between time, you guys want your daily dose?
Yeah.
Yeah! Hit me with my theme music. Let's go!
Our leading story.
today's
Breaking
headlines.
news. Coming across the wire. Our leading story. Top story. Jump in.
In today's headline,
Breaking news.
All right, everybody. Today is a wonderful Wednesday. It's August the 20th. This is the part of the show we like to call the Daily Dose, where we talk about today's financial news and headlines. My name is Vanetta. Are you ready for the news?
Yeah.
Yay. Any earnings on deck for tonight or tomorrow morning, Nick?
So this morning we had Target
Okay.
is down about $12. So pretty
The CEO announced he was stepping down in February, so that kind of also is a big sort of seismic shift because unable to turn things around, CEO's leaving.
stock was near lower end of where it was trading.
Yeah.
Now at lows, Target at 93.75. You also had Baidu, which looks basically unchanged at $88 and change. It might not have reported yet.
Okay.
China stocks are a little,
Get it together, China.
are a little funky. After the close today, you really got nothing, and then in the morning tomorrow you have Walmart.
Okay, that's the.
Walmart.
Are you guys gonna trade Walmart?
I have a position on it. It was in the cherry picks. Clearly, you didn't read cherry picks because you would have taken that trade.
All right,
tastylive.com/newsletters if you want to sign up.
you right. Hey, getting to my first headline of the day: S&P 500 seen stalling as AI rally meets tariff jitters. I know this is just a headline, but I wanted to get your guys' perspective. Is this just sector rotation, or are you feeling like this is kind of like a market top? Kind of blowing off here. What are your insights to what's going on?
Well, I keep an eye on the FedWatch tool to check for interest rate cut probabilities, and it seems that every single day the 25 basis point cut is reduced. The probability of it is
Okay, and we have Jackson Hole today, tomorrow, so that, or I think Friday, so that's could be interesting.
yeah. It was at like 98%. Now it's at 82%. So stronger case for not cutting yet again. But I think I just saw some data from Frankie related to Europe having highest inflation in a long time. So
Uh-oh.
I think maybe, just maybe, we might be in store for some not so great market chop.
How about you? What are you thinking?
I think it's a fairly routine move. I think it was good to see some of the froth get taken out. You had like Palantir
Sure.
down
I'll get to that, yeah.
$50 in the last like week or two. Reddit, you see some of these like, secondary kind of tech stocks taking it on the chin a little bit. Nvidia had like what seems like the first dip it's ever had.
Sure.
It was down $4 or $5.
So again, though, is this just a sector rotation out of some of the top hot names, or
Sure, maybe it's just a breather. I mean,
Yeah.
sometimes things go down.
Can't go up.
You can't go up every single day.
Yes, we
forever.
can.
No, you can't.
Yes, we can.
I don't think we need to spin a story as
No, I know.
like if the market was down 5-10%,
Sure.
you can say there's some problem here. But a routine
Yeah, this
half
seems
a percentage
normal.
move, everybody should be prepared for those.
Yeah,
in their
2
trading
point-
career.
Hey, in other news, small cap stocks may be running out of runway after a recent outperformance. The Russell 2000, a gauge of U.S. small cap stocks, is beating the S&P 500 so far for the month of August, risen around 2.9%, exceeding the 1.1% gain for the S&P. Are you guys doing anything like RUT, IWM specific?
I'm pretty neutral delta in IWM. I have like a wide iron condor / iron fly. That's right at the money at like 220, 225-ish is kind of my sweet spot.
Okay.
I normally don't get caught up. This is the small cap move is always a news headline.
Sure, of course.
You want to be long something, you get long the NASDAQ.
How about for you, Mikey?
I do not have a position in right now. It is pretty low implied volatility, so I think if we saw some kind of directional move, specifically to the downside, maybe I would throw on like a calendar spread or diagonal. But yeah, normally the historical story is like after a big market sell-off, small caps can outperform.
Yeah.
Like leading up until the recovery, but we have certainly recovered. So
Yeah.
I think I definitely agree with Nick. I think if you're gonna invest for further upside, it's more than likely gonna be in the bigger names.
Japan's July exports clocked the steepest plunge in over 4 years. Dropping by a more than expected 2.6%. The fall was sharper than the 2.1% contraction expected by economists. Exports to the U.S. from Japan also continued to fall, dropping 10.1% in July. Let's talk the dollar. Let's talk the yen. Let's talk some currencies. What's on your radar in that aspect?
Well, I'm hoping I get a couple trade ideas from the FX team.
Come on, Glenn.
Glenn, if you're listening, bring some heat. I have been leaning long dollar for more than just the slight rally that we had from July to August.
Okay.
So I was able to take some profits there into that move. I currently only have a position on in the Euro futures, just selling premium. It's got relatively high implied volatility, especially when you look at a currency, but I haven't been trading any of the FX products specifically, certainly looking to get into them right now.
How about for you? What's on your currency radar?
Similar story to Nick. We had long dollar trades on forever. We were taking some heat, adding some more tranches with the Tasty FX embedded platform on the Tasty Trade platform. But yeah,
You had 1 week to do that.
Yeah,
that was it, and they all moved big.
Yeah, I got out of all of my positions. It's been great. This account's up a couple $100.
Nice.
10%, 15% with taking very small risk.
Yeah.
But yeah, I think we'll see what Glenn has to say. He's always the one that shows us, the under the hood stuff, like the Aussie dollar franc, like that kind
But the best way to experience it is, like you said, just put on a couple of small trades yourself, see how they move in relation to the market, relation to each other, and like you just have to get into
You can
it.
get really small with them.
Yeah.
very small.
Which is
25,
great.
50, $100 in terms of like your P&L swing.
Right.
Which is
Which is nice.
Yeah.
Like not everyone needs natural gas sized contracts.
And currencies generally have they have ranges that they like. It's not like you have like this massive tail risk of like the euro, going to,
Like Greece is not going to exist anymore.
Yeah, I mean, there's currency risk, but
Right.
for all intents and purposes, they're 6, 7, 8, 9% implied volatility. So, the tail risk isn't sort of there. The leverage is where you can get into problems.
Sure.
Why you have to stay small with that sort of stuff.
Well, bad news ahead for consumers as U.S. President Trump's administration is hiking steel and aluminum tariffs now on derivative products. So that now includes aluminum and steel derivatives. So that includes appliances, things like butter knives, baby strollers, the can of aerosol that I use for my setting spray, your deodorant, car parts, motorcycle parts, anything that literally has steel or aluminum. Before, this was not included, but now it is. And that's nothing to sneeze at. It's more than 400 products that could be affected. The department said 407 product categories are being added to the list of derivative steel and aluminum products covered by a 50% tariff. So, yay. Yay. Yay.
Everything's taxed. Everything's tariffed.
Yeah. Because before it's like, I don't care because it's like I'm not building anything with steel girders. But, I mean, I do buy stuff that comes in cans and motorcycle parts and motorcycle, whatever. Yeah, it is what it is. Hey, in other news, crypto stocks tumbled yesterday as investors go into risk-off mode. This is a dumb headline, but I do want to talk about crypto and what was happening in crypto stocks yesterday. Let's reframe it as that, like your circles, your Coinbases, your bullishes, things like that.
Yes. Some big moves. I mean, Coinbase has gone from 450-ish to 300. Like some of the treasury companies like MSTR is down $100 from middle of July. If you look at some of like the Ethereum ones like SBAT or BMNR, those are all getting killed too. Circle as well. Bitcoin itself, 113,000, 114,000 this morning. So it's come down from,
Do you think the move in the crypto companies outpaced the move in Bitcoin? Like, do you think it's equivalent or like what's going on?
Yeah, I mean, the treasury companies and then the specific stocks like a Coinbase or Circle or even like Robinhood has kind of been grouped into that. They traded a premium in terms of like, a higher beta, and they have a premium to whatever their holdings are. So they tend to have a higher beta, which means that they move more in both directions.
Sure.
Typically.
Okay.
So yes, I mean, you certainly have seen that play out over the last month or so where Bitcoin is kind of unchanged from where we were a month ago or near the lower end of the range. And some of these other companies are down, 20, 30%.
How about for you, Mikey? What is on your radar when it comes to your crypto exposure?
I've got it all, baby. I've got it all. I have a year-long strangle in IBIT.
Okay. Oh, I forgot about IBIT. Yeah.
IBIT's an easy way to get exposure to Bitcoin price fluctuation without diving into actual Bitcoin exposure. But yeah, I agree with Nick. I think when you think of these other companies like Circle or even like MicroStrategy, a lot more people are trading in and out of those things where a lot of people are hodling Bitcoin. They're just buying and holding it.
Okay.
Which creates more of a floor until there's some kind of violent liquidation move, if that's were to happen. But for right now, we're kind of chopping around the lower end of the range, but it's still significantly higher than something like Circle, which has gone down dramatically over 100 or over 50% in the last couple of months.
And there's all sorts of other stuff like the lockup from the IPO.
Sure.
It's like there's a lot of binary stuff that for Circle specifically.
Right, that's going on under the surface. Yeah. Well, here's something interesting. Wyoming has become the first U.S. state to launch its own stable coin. They promise lower fees and instant transactions. The Wyoming Stable Token Commission, girl, what? That's a thing, was created in 2023, and it announced yesterday the launch of the mainnet blockchain network for the Frontier Stable Token. FRNT.
I gotta say, I did not have Wyoming as my bingo card for the first state to do this.
Right? Like you would think it would be like Florida, right? Because like Miami is like the Bitcoin crypto capital or what? I don't even know.
Yeah.
Or
any other state.
Yeah, right.
Any other state.
It's a small population,
Yeah. They probably had like a 10-person town hall to get this passed.
Yeah, it's harder to. I mean, but this is interesting. I don't like.
So
I don't
the
like
governor. So
government
I didn't know this. So since 2016, Wyoming has passed over 45 pieces of legislation on blockchain, cryptocurrency, and digital asset regulation. Who knew?
We got to go to Wyoming.
Yeah.
Yeah, I guess I've never been. I would love to go.
Yeah.
I know JPZ is there this week, so.
Hell yeah.
Hey, is Meta's super intelligence overhaul a sign that its AI goals are struggling? I reported on this story on Monday, so your girl had this news ahead, but more news came out in a scathing New York Times article last night. I said the company's breaking up into more divisions. Now, the company is dismantling the division it built 2 months ago. Executives are leaving. Remember, they were giving people $100 million signing bonuses and all this jazz, and they're poaching people
That's
from
what I did.
OpenAI. But people are saying online that if Meta scales back their AI ambitions, that will literally put us into a recession.
A salacious headline.
I know. Is that hyperbole or? But if companies, if they're like on their earnings call, if their capex is like $100 billion for just AI, like those are big numbers.
Yeah, no doubt. I mean, I think the pendulum swings.
That's true.
Wildly in both directions. And
Meta did have a massive down move yesterday.
Yes, it's good. Well, I mean, it's you're that's kind of like a Tom thing. You're down $50 from highs. It's up 400 from the lows.
But are you still long Meta, Mike, or no?
I am not.
Okay. Good.
I used to love to short it.
Yeah, I know.
Then Zuck got his glow up.
Right.
Now it's harder to short it. But at the same time, like my thing is a lot of these companies are expected to post insane numbers every earnings quarter.
Sure.
And they do. So in the company executives' eyes, like they know they're going to crush numbers. They have to do these other crazy things to give the market a reason to keep investing. And I think it's getting harder and harder to do that because they're already just crushing everything. So it's like, I don't think you can fabricate a continuation higher without.
Well, but people are also just saying Meta's AI product flat out sucks.
Yeah.
That it's buggy, it's laggy, it's trying to hit on your kid. Like it's bad in a multitude of ways. The way that ChatGPT, how that it instantly just like clicked. Like the first time you use Chat, you're like, okay, this is amazing. I get it.
Yeah.
You know, whatever. But the Meta actual product that they're delivering that's consumer facing is not really measuring up with the fact that they spent hundreds of billions of dollars on it.
And
but
humans are habitual too. So like I've already gotten into a habit of looking at AI overview or using ChatGPT or Claude, you know.
Sure, yeah.
I feel like if the overall population leans towards ChatGPT, like that could be the new Google search.
Right,
So it's harder to get people to switch over to something else.
Yeah. Hey, you talked about this earlier, Nikki. Palantir stock slumped another 9% yesterday, falling for a fifth straight day from the record. The AI software provider had stellar earnings reported earlier this month. They reported their first ever billion-dollar quarter of revenue, but maybe it's just people taking profits off the table. Your dad did a strategy in Palantir for his podcast yesterday. What are the opportunities that you guys see in Palantir?
the shorts finally got their Coke. Remember that crazy one where he was like, we're gonna take their Coke from them. And
No, I don't remember
that's
that.
That's
Okay.
a crazy one.
Okay.
Yeah, I mean, I think, it's good to see a little bit of a pullback, a little bit of a pop in volatility. This is, you need this for markets. So I think it's overall a good thing. I've been playing with broken wing butterflies on the call side, so this kind of helps my positions.
Okay.
If you don't have a position on here, strangles.
What's the IV?
Something like that. So you've got a 28 IV rank.
Okay, that's good.
Which I think will be higher this morning because the stock is down like another $4 or $5. But you've got monthly implied volatility that's around a 60 handle. What it reminds me of is kind of the early Tesla. And by early Tesla, I'm talking like pandemic time Tesla.
Sure.
Where you had, 60 to 90% implied volatility. You had some two-sided action. That's what Palantir has kind of turned into.
Okay. We will see what happens in Palantir. Databricks says that they are now valued at over $100 billion in the latest funding round. Again, I scratched my brain to think of, I was like, I don't even know what this company does, but you're worth $100 billion. It would make Databricks only the fourth venture-backed company to eclipse the $100 billion mark. The companies that already have that S-tier level are SpaceX, ByteDance, and OpenAI. That's crazy. The data analytics software vendor says that they are raising a funding round that values them at $1 billion. That funding round is going to be over $1 billion itself.
I mean, it's a similar company to what Palantir does.
Sure. Yeah.
So that's kind of another, you can compare the market cap of Palantir is what, 400
Sure.
billion?
Also, Snowflake is one of their
Snowflake is
rivals.
another one.
Yeah.
I mean, Snowflake is more around that, it's at $66 billion company.
Right.
I mean, so when you look at the Palantir move, going back to that, 9% down move, Palantir is 3, 4, 5 times the size of some of these other companies. So
That's wild.
yes.
Apple is reportedly going to produce its new line of iPhones exclusively in India for the first time. The tech giant has upped production at 5 of its factories in India as they ready for the launch of the new iPhone 17 models. They're going to have a big sort of little binary event coming in September. But for the first time, the iPhone 17 will be produced in India. What are you guys doing in Apple?
Maybe that's why the Apple Airs are on sale on Amazon.
Oh, the computer. I think they're just going for dominance. But at $599, there's no better computer that you can get.
Is that what they are now?
Yeah, $599.
There's $599, $799. They're all $200 off. Pretty much,
Yeah.
depending on what you're trying to get.
Only on Amazon.
Maybe at Best Buy. I'm not in the market for a computer, but I have seen it. But I know lots of kids obviously are going back to college or school or whatever. But hands down, like if you want to get in on an Apple product for $599, it's a great deal.
I mean, our computers are just tracking us all day long, so it might be good for me to get a little something on the side.
On the side.
Side piece?
Yeah,
Little side piece laptop?
Yeah.
Are you guys doing anything in Apple, or Ivy's still just too low? Not really.
We have been trading in and out of it. I don't have a current position.
We hit it to the upside. We
smashed it.
Nice.
bought that. Yeah, we
Nice.
bought that.
Yeah, late.
Pretty much to the day, too.
Yeah, like literally 2 weeks ago, I exited a position
Yeah.
for a small winner. But yeah, big gap up from 200 to 230. Now we're kind of chopping around there. I would like to see a little bit of a pullback. I want to be bullish on this rather than bearish.
Sure.
Because this is one of those Mag 7 stocks that's not at all-time highs.
Right.
Which I think is always interesting when you're trying to find something to.
It has lagged the rest of the Mag 7, so.
Yeah.
Yeah. I've got some neutral delta here. Iron condors, wide iron condors.
Hey, here's something interesting. Alibaba has a new software program called Quinn Image Edit, and it's basically an Adobe Photoshop dupe. It does AI-powered text-to-image edits that work in seconds. Obviously, Adobe's Photoshop is one of the most recognizable pieces of software ever created. It's used by more than 90% of the world's creative professionals, but Baba was like, hey, how would you like this for free?
How's about it?
Adobe has earnings coming up here, too.
Oh, okay.
They are on September 11th. So
Oh, okay.
you got another couple weeks here. But yeah, I mean, these stocks, a lot of these stocks.
Are you doing anything in Baba? Like Baba, Baidu?
We haven't really traded a ton of Baba, but I had like a crab trade there. But I've been looking at a lot of these stocks, like the Adobes, the CRMs.
Oh, okay.
Stuff that has been massively disrupted by all the AI stuff.
Yeah.
And there's been some volatility there. But
Okay.
Baba and the China stocks, I try to trade sparingly.
Gotcha. How about for you? Are you also playing in Adobe or things like that?
Yes. So I have a short put spread in Adobe in September. That's
Okay.
35,330. That was from Fast Market, if I'm not mistaken. So another viewer trade that we liked. But yeah, just playing for a small short premium there, trying to paint the bottom at 335, which is where it was, which is basically the lows of the year.
Mm-hmm.
I mean, it's getting a little out of control because I edit photos. I'm like a hobby photographer, but I edit photos on Adobe. And instead of just being like, oh, make this brighter, make this darker, adjust the exposure that I had or whatever, you could literally type in, put this in a space, and it will AI generate like a space. So I could take a picture of my parents in their backyard, and I was like, put them in space. Right, yeah. But instead of having deep knowledge of knowing how to use Photoshop and stuff, like I literally just type it in, and Adobe does, and I'm like, what are we doing?
What is this?
Yeah, you gotta be careful.
Yeah. I was like, why are my parents in space?
Yeah.
Hey, Nvidia is reportedly developing an AI chip for China that would be more powerful than the HTO. First of all, that seems like trouble. But you do you, Nvidia. They have the green stamp from the administration, so Nvidia is going to keep on keeping on. But like Nikki said, they are also down a little. What are the opportunities in Nvidia?
So Nvidia is at 175.93, basically unchanged from yesterday. Yesterday's move was probably the biggest move we've seen in a couple months, going from 182-ish to 175. So it's down.
But you always have to buy the Nvidia dips.
That's what it seems like. I have not been buying the dips. I have a little bit of short delta there. I have a put diagonal spread going into earnings. I just think like the good. I'm not like bearish. I'm not playing for a crash here.
Right.
But it seems like a lot of this space, like the good news, has been baked in, and like maybe it's a buy the rumor, sell the news type situation where everything is priced for perfection. So actually, I have a crab trade.
How about for you in chip stocks and Nvidia?
I like the chip stocks. I like Nvidia, but I'm going to be waiting for earnings on this one.
And when are their earnings?
Earnings are next week.
Okay.
August 27th.
Yeah.
Okay.
So 7 days from now after the close. So yeah, I'll wait for earnings. I'll let it chop around. Hopefully it goes lower. I'll want to play it to the upside. But yeah, plenty of implied volatility there. When you look at the 9-day cycle with a 12-point expected move and the 30-day cycle only with a 16-point expected move. So
interesting.
Yeah.
And we will also be looking at how to calculate expected moves later today. So
Yes.
it's all coming together.
Yeah.
Hey, I'm skipping a story here, John. I don't know if you trade a ton of this, but VKTX stock crashed 40%, more than 40% yesterday. This is again why I say out of biotechs, because the pharmaceutical company did not have good results after a phase 2 trial of their weight loss pill showed a high patient dropout rate. The most adverse treatment-related symptoms were gastrointestinal in nature. People were basically crapping their brains out, and they were like, we don't want to do this anymore, so then they stopped the trial. And then so the company has to, of course, announce that, because then they don't have any patients left in their trial, because, again, they pooped their brains out.
Yeah. That seems like
Not
a
great.
problem.
It does.
not great.
You know what, though? If I could get skinny enough,
You would do that?
I'm just one stomach flu away from my dream size. No, I'm just kidding. No, it's a The Devil Wears Prada reference. But VKTX, I don't know that you are trading it, but a 40% move in one day is wild.
Yeah, that's why we just generally don't trade these type of stocks. These biotech stocks, they have, they look very interesting because they'll have 80, 90, 100, 150% implied volatility. These options, are very, very juicy. It looks like it's a perfect trade, but they have binary risk and stuff like this where you wake up and something's down 40% because of some trial you probably had no idea was going on.
Right.
It's just not worth the risk. So if you play in these stocks, long shares or long options, you want to buy a call spread, buy a put spread, sell a put spread, sell a call spread, do something like that, but it's not something that I like to.
Yeah, but everyone I interact with on the internet has an advanced medical degree, seemingly. No, I'm just kidding.
Of course. So if you're one of those people and you know exactly what's going to happen, you don't need us anyway.
This is a great story, and then I put this in here just for me. But Labubu is set to be $1 billion business as sales surpass Barbie and Hot Wheels. Now we feel old because we're elderly millennials. But Labubu is on track to be $1 billion business by the end of the year. Pop Mart reported their earnings. The parent company reported their earnings yesterday, and they are made by the Chinese manufacturing company. What is your take on the Labubu trend?
I mean, it's Beanie Baby type
Mania.
Yeah.
Boo mania.
I burn it to the ground.
Really? You don't like I think they're cute. Your dad brought me one, and I've been getting like little outfits for it, and I want more.
Yeah.
They're kind of like, they kind of remind me of...
the wanting more thing is like, yeah, you can get one.
It's a whole cottage thing. Like, I'm on Etsy. Like, so you can make, so they have Taylor Swift Eras Tour outfits for the Labubus. Walk with me here. So you can get the different colored Labubus that represent the different colors of her albums, and then outfits that she wore on tour for your Labubu. Shut up and take my money.
That is the problem. That is the shut up and take my money. I think that's.
I'm good for the economy. I want to help small businesses.
Yeah,
anyway.
It's all good.
Well, speaking of Labubu and things you may not know, this is great, and I'm glad that I have the two of you and not Tom and Bat here. So a couple new words got added to the Cambridge Dictionary. I'm going to ask if you know what these are. So the first one is skibbity.
Skibbity.
Yeah. Do you know what skibbity means?
That's just like bad, you know.
It means like anything. You know what skibbity means?
I'm about to learn.
Well, skibbity can mean cool or bad or nothing at all. It was coined by the creator of the YouTube series Skibbity Toilet. Do you guys know what delulu means?
Oh yeah, that's delusional.
Yeah, I am delulu.
No doubt.
Delulu.
I am delulu, and I'm proud. Yes, it does mean delusional. It's a play on the word. And you guys know what tradwives are?
I don't.
You're right there, yeah.
Traditional.
Yeah. So tradwife is short for traditional wife, coined by Hannah Needleman of Ballerina Farm. But the reason that she can stay at home with all of her kids is because she has brand deals and sponsorship. Anyway, but it's just being, a more return to a conservative, traditional gender roles. So be a tradwife.
I really would have liked Boston to be.
Well, Luke is Lewk, because I say that like Tom stole my look.
Do you have to do it with the?
Yeah, you have to say Luke. You have to say Luke.
Okay.
But it's not every day you get words like skibbity and delulu and look. Like we are just ruining the English language.
Yeah, we're in late.
This is
late. This is late stage. There's not much left.
There's not much left.
There's not much.
Pack it up. We're done.
What they're throwing in the dictionary, like
we're late stage.
We are lazy.
It's been a good run. We had a good run.
Speaking of we had a good run, when I saw this headline come across the wire last night, I just shut my laptop and I was just like, it's fine. The FDA, this is true, is warning the public not to eat frozen shrimp from Walmart because it is radioactive. What are we doing? The shrimp imported from Indonesia was somehow exposed to radiation, and they're like, it's not gonna kill you, but it's not really good for you. Look, this is your superhero origin story. You eat radioactive shrimp, you become Shrimp Man. I don't know.
I saw this too, and I was like, what? How?
How did we get here?
Yeah. Just how?
Yeah.
Luckily, I already got my Costco shrimp. I don't need this radioactive stuff.
I actually have plans to make little shrimp bowls tonight. I got all the ingredients for it, so I will have to double check my shrimp.
Yeah, make sure that it is not the great value shrimp
I feel like
from Walmart, which is set to report earnings tomorrow.
Wouldn't it have a color or something to it? It was radioactive.
Not necessarily, no.
Really, it just looked normal.
No, I think it just lights up on a Geiger counter, you just see. I don't know. I don't want to live in a world where my shrimp
I feel the little baby shrimp, if it's radioactive, with something, the flesh would deteriorate a little.
It'd be like neon green.
Yeah, something with.
It would have two tails
or it's
something.
Slimy or something.
I don't know.
I don't know.
But just beware. Walmart does have earnings tomorrow morning. so according to that. And just real fast, finally today, McDonald's is teasing a new Happy Meal. They are partnering with BTS, the viral Korean boy band, with tiny tan toys. I don't get any of this, but K-pop Demon Hunters is like the #1 show in the world, and all the songs from it, like, yeah, it's great. So McDonald's, I was excited for their Hello Kitty Teenage Mutant Ninja Turtle collab, because that's like my childhood, but not sure what McDonald's is doing on this news.
They are leaning into the gacha craze. But yeah, I feel like they had mini Happy Meals too. Didn't they just have that recently?
Yeah, I don't.
Everything they're doing is like
Snack wrap. The snack wraps are back. I
Yeah.
appreciate that.
That's-
I actually had them.
Are they good?
pretty
Is it as good as you remember? Because sometimes
It's a little different.
Yeah.
It's a little different, but it is.
you do the
good.
ranch or the.
I got one of each, obviously.
Oh,
but I
okay.
try 'em
Okay,
both,
gotta try
you
'em
know?
both.
But I appreciated how they wrapped it. It was nicely wrapped. Like
Oh, okay.
the old ones, you used to just get them like on like a tortilla.
Right, yeah.
These were kind of like folded together and like packaged
Oh.
like on the go, You know.
How much is one snack wrap? In this economy?
Everything's like $20 now, so. 100 is the new 50. The 50 is the new 20.
Right.
So, I think they were like, you get 2 in the meal deal, and it's like 10, 12.
Oh, gotcha. Okay. Man, that's crazy.
It's insane.
Hey, finally today for my viral video of the day. Did you guys grow up? You had pets when you were growing up? You had a dog when you were growing up, right? Were your pets like
I had
ever?
fish too.
Okay, were your dog or your
Riddler
fish?
was the fish.
My God.
Were they ever protective of you? Like growing up, I had a border collie, and he would like herd me like to stay in the yard or whatever,
Oh, yeah. My dogs would probably let me die for like a bone or something. Like it was very food. It was more food motivated.
Food motivated.
Protection.
How about you? Did you have a protective dog or animal at home?
Maybe indirectly. Like he would be insane if you took him on a walk.
Okay,
in
it
the
was like
house,
reactive. Yeah.
But yeah, if someone was like approaching the house that he didn't know, he would go nuts.
Okay, so that's
There you
good.
go. Yeah.
So this lady found out the hard way that her dog does not have her back. I think this is in Australia somewhere. I'm just scared of Australia. But watch this. She's fine.
We're gonna go for it because we've been standing here for
So it's like an emu.
Oh.
Stupid thing!
But her dog is down the
Gone.
street.
Already come!
He's like, bitch, catch up.
Yeah,
That dog was like, nope,
He's like,
gotta go. Yeah, those things are terrifying.
yeah, the dog was like, good luck with all that.
Yeah.
I'm gonna see you later. I just thought that was funny.
Right.
But luckily she's fine. But it was just the camera work and her screaming that was.
Yeah, I feel like
was funny.
emus, they could probably do like a lot of like annoyance.
Right. I think he was just curious more.
Maybe their legs if they like.
Yeah.
Yeah, you gotta jump on the back, get a rear naked choke in there.
Grab that thing. There you go. You watched the fight this weekend.
Seen it
You,
live.
There
you
you go.
probably know all the jokes.
Yeah.
Hey, we're gonna take a quick break, Nikki. What's happening when we come back?
So we're gonna come back with confirm and send. We've got some questions, but also if you got some stuff, you can throw it in the YouTube chat. We'll try and pull as much as we can. So we'll do that.
Perfect. You're watching Tasty Live.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move.
One of the things that was most intriguing about the financial space to us is just that there wasn't a lot of vision, there wasn't a lot of innovation, and I think that left a door open for us, which we really liked. After almost 20 years of open outcry, standing in the pit trading, I felt like all the markets were moving from kind of traditional open outcry to electronic trading. I saw the writing on the wall, and I wanted to be first. Building the best technology in the world for traders was one of the coolest things anybody could ever do. I loved every second of it.
Thinkorswim will always be my baby, but this one, it's different. We built ours literally from scratch. It's a much thinner, it's a faster, it's a slicker application. Everything's on one page. So you're always looking at the core page and then bouncing around from there to get to whatever you want to get to. Most of our competitors have legacy technology, and some of them are multiple firms. Their technology has just been rolled up into a single platform. That's not the best way to build a platform. We built ours literally from scratch. It's from the ground up, so we were able to design it in the way that we wanted to design it with the flexibility that we wanted. And obviously beyond that, we do have, in my mind, the greatest customer service in the industry. It doesn't make a difference who you want to talk to. We're always available, and not only are we available, we look forward to your questions. We're here to support whatever you're looking to do. So you can trade stocks, you can trade options, futures options, crypto. We're agnostic to product. We have the tools that you need to be a successful trader.
Wolf! The first half of this year's market has been giving the good guys the business.
It's certainly been back and forth for sure, Pete, and I'm getting whiplash over here.
With good mechanics, we can see Team Tasty stay strong in the second half.
Absolutely. Let's check out our starting lineup.
Tony Bat Batista, the John Jay College of Criminal Justice. Number 69, because it's one standard deviation plus one. And you know, I'm the Bat.
John McLaurin, Wisconsin, number 2, because I'm Beth's right-hand man.
Vanetta Logan, the Indiana University, number 3, because that's how many shots of bourbon it takes to make it through the first hour.
I like the looks of that lineup.
Well, be mechanical is always better than just trying to run plays and see what sticks, Pete.
When you got skin in the game, you stay in the game.
That's right. Now get off the couch and get into the game.
Watch Tasty Trade.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
Mikey, we are back, my friend, for Confirm and Send. But first, quick little market update. We've got E-mini S&P 500 futures are down 6 here to start the session or start the morning. NASDAQ down 44. You got the Dow down 5. You got the Russell down 3. Everything pretty muted. They were down. The E-minis were down about 15-20 in the overnight session. But kind of a nothing burger here. Oil catching a little bit of a bid, 62.51. You got oil up 74 cents. Volatility futures, they rolled today, 18.45, up 10 ticks. Bonds basically unchanged. Gold up $29 and silver up 31 cents. So a big move in gold and silver. Bitcoin as well, taking a tiny bit of a bounce, up $500 and change. You got Target, one of the stocks that had earnings this morning, down $12, well outside the expected move. And Baidu here, basically unchanged, down $1.60-ish.
Yeah, Target back at the lows of the year, pretty much.
Yes.
I'm glad I forgot that was happening yesterday, because I would have definitely played a long call spread. But yeah, I feel like now we'll see where the market's open with implied volatility.
Mm-hmm.
But I will likely place a post-earnings recovery trade here.
There you go.
With a move this big.
Beautiful.
And yeah, in gold, I've got the free butterfly on the upside, the 34.80, 3,500, 35.20. 9 days left.
Close.
So let's see it continue here. No risk in it, just value on the table, 30 cents on the table. But if it gets closer to 34.80, it'll be much more.
Very good.
But yeah.
Confirm and send?
Yeah.
We get to some questions? Cool, let's get to them. Do it.
Sweet.
We'll go through these quick, and then we have a good market measure. What is it? Option Jive or one of the other ones?
Yeah.
The research piece.
Research piece.
From Sahil about expected moves.
Lovely.
Confirm and send, let's do it.
I'm long stock, but the current price is below my cost basis. In a situation like this, do you continue selling covered calls even though you run the risk of having the stock called away at a loss? Or do you wait for the stock to come back and then get back to selling calls?
The $1 million question.
That is the $1 million question. I would say the first thing is it depends on how much premium you're collecting. If you're collecting like 20 cents to sell stuff under your basis, it's not worth it. But if it's a sizable value, which also tells you that implied volatility is higher in that product, you can sell below your basis, especially if you intend to buy that option back and roll it out and up later in time. So like if you're below your basis and the stock recovers to your strike, if you buy that back in, let's say, September and you roll it out to October or November and you move it up for a scratch or small credit, that will bring you back above your basis most likely, and then give yourself more room to breathe to the upside. So
if you want out, you sell the call.
Yeah, but the call's got to be worth something.
Yes.
Don't just blindly sell calls for no reason because it's 20 cents. Like, no.
Yes.
It has to be worth capping your upside.
100%. Next question, please. So I understand in a regular margin account, generally speaking, only need to put up about 20% of the notional value when selling a naked option. If I switch to portfolio margin, how much would I have to put up? So it's you're going to have a variable there. So it's going to depend on volatility. It's going to depend on the beta of that stock. It's going to depend on the rest of your position. So with portfolio margin, you get roughly 6-to-1 leverage. So with Reg T margin, you get somewhere around 3 or 4x leverage, which is why it uses about 20% buying power for naked positions based on the risk of that position. So with portfolio margin, it's a lot more dynamic. It's going to be 6 to 8x the amount of leverage you would get versus cash. But it's going to take into account, if you're long NASDAQ via a put spread in the Qs and short E-minis via call spread in SPY, you're going to get relief on those two positions because they have, they have such high correlations to each other, even though they're in different products.
Yeah. And that 6-to-1 is for stock. If you're selling premium, it's going to be much more leverage. And like Nick said, it's hard to give you a direct answer because it's all basically a daily calculation based on real-time risk of implied volatility. So
it can change.
It can change. It will change, but it is significantly more leverage than the 20% in a Reg T account.
Yes. Next question, please.
Ooh, long one. I noticed the other day when I was putting on a couple of put credit spreads and deciding whether I make them 5 or 10 points wide, the premiums did not reflect a 1-to-1 relationship. In other words, the credit I received for a 10-point wide was less than 2x that I would get from a 5-point wide spread. So if I can get more premium by taking 2 5-point wide spreads, taking on the same monetary risk as a 10-point wide spread, is that what you would expect, or am I missing something? No, that's what you would expect. I mean, the more narrow the spread is, the more return on capital you can get. But the wider your spread is, so it's not 1-to-1 in terms of a monetary profit or loss, but it's also not 1-to-1 in terms of a probability of max loss. Yeah. Because if you have a 5-point wide spread, and let's say this is your long option and here's the stock price, if you have a 5-point wide spread, there's a higher probability that you're reaching max loss on any loser. If you have a 10-point wide spread or a 15 or 20-point wide spread, now the stock has to go way further for you to realize max loss on that strategy. So the wider you go relative to the stock price that you're trading, the less of a probability that you reach max loss, the better your probability of profit is, the less number of contracts you're trading for commissions and fees and all that stuff. So we almost always opt for a wider spread, even though the monetary value is a little bit less, but that's because we know the trade-off is a lower probability of max loss overall on that one contract that's 10 points wide versus 2 5 points wide or 10 1 point wide. If you have a 10 1 point wides, any loss is going to be max loss.
And that max loss is going to occur at a spot where you'd probably be a winner on a 10-point wide spread.
Right.
So, and as for the reason why the relationship isn't 1-to-1 is because the extrinsic value isn't linear. It's on a distribution. Like, so you have more premium at the money, there's more risk. And then as you go further out of the money, it levels off. And so you're at a certain point, if you're going really far out of the money on your wings, it might make sense to just up the contracts. We're talking like, 5 delta, 10 delta options for the long option, just up the contracts. If you're looking at, a 30 delta put and a 25 delta for the wing, you might as well just move the wing further out of the money. It'll be a higher probability trade.
Mm-hmm.
Next question, please. We're going to go through these quick. Do you adjust your profit targets based on changes in the VIX? For example, if VIX is high, it might make sense to aim for a larger profit, whereas in lower volatility, maybe you should expect to take smaller profits. I'm not sure I look this granular, but certainly with positions, I will look at positions that volatility has contracted significantly and consider profit targets based on that. Like we talked about AVGO, the call spread that we sold on Friday. I think this was a fast market trade. We closed it out yesterday, both of us, without even talking to each other. But it was a trade where volatility had come in. It had only been a couple days. You got the directional move that you needed. It wasn't exactly a 50% max profit, but just the speed of the move was enough to take risk off the table and use that capital elsewhere. And so that's how I look at it. I look at it more position-based. Lower VIX and versus higher VIX is going to be relative to like how much capital I have in risk on the table. I'm typically putting more risk on the table when volatility is higher, taking risk off when volatility is lower.
Yeah. And for me, it's the same thing. It's just a simple, like, rough calculation.
Yeah.
So, like, if I place a new trade that's 45 days out and I'm getting 25% of the max profit in 3 days, I know I'm well ahead of my expected profit curve because I should expect to have 50% profit after holding it for 20 days.
Mm-hmm.
So I'm always basing it off of that. And if the VIX is high, that also means the market may be chopping more. And if I'm selling put spreads into dips and then it reverses the next day, I'm taking it off. Like even if it's 10% or 20%, if it's a sizable monetary value where it makes sense to take off, I will do that. So I'm actually probably taking more trades off more quickly in a high VIX environment.
Yep.
Cool. I'm a simple guy. Love to hear it. Tend to stick with trading vertical spreads, strangles, and naked calls and puts. I don't really know much and don't trade iron flies, zebras, butterflies, calendar spreads, diagonal spreads. Am I missing out, or do you recommend learning and applying these strategies in my trading? You don't need to. No.
Yeah, do what works.
Do what works. I think with the other strategies that are more debit strategies, like zebras, butterflies, calendars, diagonals, those are more for minimizing risk in high vol environments like binary events, or giving yourself the ability to partake in a strategy or product that's too expensive. Like you can only go so far with vertical spreads. Like you can't sell strangles and naked calls puts in every single product unless you have a very large account. But if you do, then those are the highest probability strategies anyways.
Yeah.
So yeah, don't need to deviate from that.
Very good. Next question, please. Last one. So I noticed sometimes you go long or go short bonds /ZB while also selling puts. Would you mind sharing with me some basic tactics used to enter your trades and the logic behind when to enter the trade? So you can certainly ask Tom about his bond trading, but generally speaking, I mean, you're trading two different things. You have bonds, which are long or short, and then you have the short puts, which are short premium. And so adding a short put to a long bond position is doubling down, but you're doing it with a more dynamic delta. So if you're if your max exposure is 5 contracts and you do 2 long contracts and 3 short puts, you have the ability to get to your, 5 allocated contracts into better prices via those short puts.
Yeah, it's a way to make the trade more dynamic than just being binary up or down with the long ZB contract or short.
Very good. Good stuff. We're going to take a quick little 90-second break. We're going to come back with the first research segment of the day, a quick way to get the expected daily move. We know and love this sort of thing, so this will be a good one. It's an option jive, and then we'll get to the opening bell, and then we got what's your assumption, trade ideas from you, the viewer, so that should be fun too. We're going to take a quick little 90-second break. You're listening to Tasty Live.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number 1 for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
I'm running Snow Leopard with this. I'm a Mac. I'm a Mac. I'm a Mac. G. Multitask MacBook handler, brother. iPhone in one hand, iPad in the other. Pop open top, Apple logo shining on the back. That's why all these player haters know that I'm the Mac. Easier to see a nun with VD than to see me ever typing on a PC. So if you got one, you can play a sad tune and play it back later in your room on your Zune. Windows made to break, and I'm here to crack it. And if I'm a Mac, that means that I'm immaculate. Style so clean, like it's disinfected. Clean surfaces where white light is reflected. Plastic case, Apple Store, keep my phone protected. Check my toolbar to see if networks are detected. Use my side swipe, applications hidden in it. This is Mac world, bitch, you're just living in it. I'm a Mac. 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 Roll into the coffee shop, know I'm on a power trip. Strapped with my laptop and my own power strip. Eye outlet, about to make your cable drop. Apple logo shining off the marble on the tabletop. So if you see me, then you see the star. Any place I sit down, call that the Genius Bar. Looks like I'm working hard, but to really know the truth, just taking pictures of my fine self in photo booth. Interface simple, why I need a Kindle. Working on that pad keeps my fingers mad nimble. So if you think I come up short, you must be wrong. More than one reason that these ladies call me Justin Long. I'm a Mac. I'm a Mac. I'm a Mac. Yeah, Justin Long, son. You catch that? Known by the ladies as the toolbar. 10-hour battery life. Force. Quiz.
Got the need for speed? No problem! At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
It's option jive.
Mikey, we are back, my friend. E-Mini's down 8. They haven't gone really anywhere, but who cares about that one? We have a fantastic segment. An option jive, a quick way to get expected daily move. How would you guess?
How would I guess?
Expected move, daily move.
Well, you got to look at the money premium.
We make it
That's
so
that.
and we make it so easy on the platform too.
Yeah.
So
yeah, this is good for people that may not have Tasty Trade accounts yet,
Yes.
or if you're like on the go and you're just trying to figure out quickly. But I think what we will also do is we can show you how to find the previous expected move from the day before for earnings announcements. We can do that too.
Yes, we do that on the open.
But yeah, it all has to do with options premium. If you would have guessed.
It's always it's the same thing every day.
Yeah.
Always comes down to premium.
Yeah, extrinsic value specifically.
Extrinsic and intrinsic
I've been
value.
saying this for years, and now we're finally getting around to it.
Finally.
Extrinsic value, baby. It's all that matters.
All right, let's do it then. Quick way to get the expected daily move for a stock, ETF, anything you're looking at. We're going to be talking through this. Option jive. So estimating the expected movement of an underlying asset can be done using the options chain, of course, of the same underlying asset. So most underlyings do not have the daily expirations. However, so what do you want to do to get that one-day expected move? So this can be done by using the at-the-money options implied volatility for the nearest term expiration cycle, and the expected move formula would be expected move equal to the price times implied volatility times the square root of days till expiration over 365. Easy. Can't you do that in your head?
Sometimes. No,
I think like we have a handful of people that can probably do it.
Yeah.
But that's really hard, which is why we kind of simplify it a little bit for you here.
Yeah.
A little trade hack. If you remember the old trade hack videos,
with the stogie,
robe. This is exactly what we're looking at. So getting on to the next slide here. So using the formula as written could be complex because of the difficulty of getting the square root of a non-integer number. Again, there's only a handful of people that can do that in their brain. So the expected move, it's obviously a complicated calculation here. We're going to simplify it a little bit on the third slide here. We just went to the second slide. Sorry, guys. So the expected move, this is breaking it down.
You can't do that?
I can't do this. I have a pen here. I think this would take me a pretty long time to do. And by the time I actually got to an answer, the market would have probably moved and the expected move would have probably moved. So we're going to make it a little bit easier on the third slide here. So let's go to the next slide here. Since the metrics we are trying to get to is the daily expected move for an underlying market position, here is a simple alternative for that calculation. So the percentage is going to be equal to implied volatility times 1/19. So if the IV of an underlying is 19%, its expected daily move is roughly 1%. And if the IV is 38%, its expected daily move should be closer to 2%. So this is why we say when the VIX is at 19, the rough expected daily move in the market, up or down, is 1%. It comes from this back of the hand calculation here.
I think we could even make it easier and just divide the number by 20.
Yes,
I mean, yeah, it's the same. It's similar. Yeah.
Yeah, similar.
Mathematically, it may not be that simple, but yeah, I think when you look at this, and if you break it down in a quick and easy way, yeah, you could expect to see, like, if Nvidia's got a 60% IV, which is what I'm seeing in the 9-day.
It's a 3%.
Yeah.
Ish.
Yeah.
Up or down expected move. So getting on to the next slide here, we'll give you the full calculation. So you can do this. You can program this into your Excel spreadsheets if you would like. But how we get to this calculation, you're moving obviously the price over. So you have the daily expected move divided by price is roughly equal to implied volatility times 1/19. And that gives you your percentage move. Of course, in the platform, it's a lot easier than that because we do all that stuff for you. So we're going to walk through how we do this in the platform. It's a little bit of a different calculation because we add some nuance to it. So getting on to the next slide here. So although the calculation is straightforward, I will use that in quotes. Our research team is thinking straightforward for them.
Obvious.
For us laymen, it's a little bit difficult. So although the calculation is straightforward, we need to understand that the result is often slightly overestimated. So the example of SPY of 639.22, we look at the VIX at 14. The daily expected move would be roughly $4.50. When we look at the platform on the next slide here, the expected move of the one-day expiration cycle on the platform is going to be roughly $3. So to walk through the difference there, we look at the next slide here. The discrepancy means that this approach is different from the expected move, the standard formula on the platform, which includes some more expansive, further out-of-the-money options. The expected daily move as a result is slightly inflated. So we look at the calculation that we use is 60% for the at-the-money straddle. We use 30% of the first out-of-the-money strangle. We're using these as our prices. 10% of the second out-of-the-money strangle. So it uses a little bit of a distribution rather than just the at-the-money premium. This will smooth out some of the skew, gives you a little bit cleaner of a calculation here.
Yeah.
And this is for any expiration that you're looking at.
Yeah. Yeah. If we go to the next slide, we can see what we're looking at specifically. But yeah, I think when it comes down to approximating expected move, taking chunks of different sections of extrinsic value and implied volatility makes a lot of sense. So 60% of the straddle, 30% of the first out of the money strangle, 10% of the second out of the money strangle. Totally makes sense. You're encompassing everything that there is to take account of in that market. And yeah, love to see it. What you'll also find, well, let's get to takeaways. Then we
couple quick takeaways, and we can go through this.
Yeah.
So using the IV over 19 to estimate an underlying's daily move is a quick and convenient way to get an expected one-day move in any underlying you're looking at. We might need to slightly adjust this number to the downside due to its overestimation. So, you have to take everything with a grain of salt. And these numbers, they change by the second. So, when you look at something right now and it says a $5 expected move, it can change in the next 10 or 20 or 30 minutes. And so it's very hard. You kind of have to look at this and take everything with a grain of salt and understand that all the inputs from price, implied volatility, even time is changing in those calculations. So it's good to know, good to understand, and this is a quick way to get your one-day expected move.
Yep.
If you don't have a platform that gives you it on the order chains like we have, the option chains.
Yeah, the biggest issue is doing this on products that don't have one-day expirations. So like if you're in SPY, you can just load up the at-the-money straddle, and it's going to be basically the same as what you're seeing on the platform in terms of the plus-minus expected move. One little hack for earnings, so like Target's down over $10.
Yes.
What you can do to find the previous day's expected move is on the open in 8 minutes, go to Target in the 2-day cycle and look at the straddle price at 105, which is the last price.
Yes.
And just change one of these columns to change, the net change, and then just calculate the net change.
Yeah.
Because that will tell you what those options were trading for yesterday, and then you can weigh that against the move today.
Yes.
So the expected move yesterday was likely under $10. So when you take the at-the-money straddle of the 105 put and 105 call, and you take the net change difference of both of those options, that will be the previous day's close expected move.
Yeah, and you can look at the options now will show the previous day's prices because the market's not open yet. So if the market is open and you're wondering where the expected move was yesterday, we'll do that on the open today. Just go to where the stock closed and see the change in those options values, and that total is going to be the expected move from the previous day, which you are correct was just under $10, $9.90.
Yep. So yeah, quick and easy ways to find expected move, specifically daily expected move. But But yeah, if you don't have a daily expiration, you can use that.
Yes. Very good. Quick way to calculate expected moves. You have to do the calculation yourself and don't have the Tasty Trade platform to do it for you. We're going to take a quick little 90-second break, come back with the opening bell, and then we've got what's your assumption for some trade ideas from you, the viewer. It's going to be fun. Tune in for that. We're going to take a quick little 90-second break. You're listening to Tasty Live.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
All right, Katie, what is the Widowmaker?
The Widowmaker can be any spread that is volatile that might dink you if you're on the wrong side of it, but at Tasty Live, the Widowmaker historically has referred to a spread in natural gas futures and the seasonality of injection season and the storage around that. So it's typically a calendar spread that has the propensity to move between the March and April natural gas futures contracts.
What does tendies mean?
Tendies refers to ordering chicken nuggets at a restaurant when you're out watching the game with your boys or your girls, but tendies in the options trading world or the trading world refers to profits that you are taking on a position. What is an offer?
So the offer price is the price at which you can buy an option at, the bid being the price to sell at.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
Mikey, we are back, my friend. Going into the opening bell, we've got E-mini S&P 500 futures currently down 5. You got the NASDAQ down 46, the Dow up 28, and the Russell down 2. Very muted open here. You've got oil /CL 62.58 up 81 cents. You have volatility futures rolling today. The vol futures, the U contract trading at 18.45. Still very steep contango there in the volatility futures if you look a couple months out as well. Bonds down 2 ticks. Gold and silver both having a nice little bounce here. Gold's up $24 and change. Silver up 33 cents. You have Bitcoin futures up small, $300. You have spot up 135 near the lows here, as well as Ethereum up $16 here, but also down near recent lows here. Target, Baidu, 2 stocks that had earnings after this morning. Target at 94. You have Baidu trading at 86, down $3 and change. Target, a bigger mover to the downside, down $12 and change.
Yeah, big moves there. Someone in the YouTube chat saying it would be cool if nothing happened today. Looks like that's what.
Yeah, one dip and everybody's scared, hoping for a nothing burger.
20-point expected move for the rest of the day. Makes me sick. 20 points.
Well, we had Monday was the tight, and there's our bell. E-mini's down 4 here. They're chopping around. We'll take a look at Target once some options kind of settle up here. We'll show the expected move or how you can kind of back into it based on the new day's prices. But yeah, I mean, it's funny that we get up only for quite some time. One little down day, everybody's kind of hoping for nothing.
Yeah. This Adobe short put coming in nicely.
Mm-hmm.
Up 40 cents. I'm up 70 cents overall. I've had it on for 5 days. So that's an example of, collecting $170, up $50-$60 in 5 days. That's well ahead of the expected decay curve for a 30-day option. So, or spread, I should say. Let's see if I can. I'm just going to throw in a limit order to close it at 50 cents.
There you go.
See if we can get filled there.
Some of the movers this morning in the S&P 100, a list I like to look at. You have Target down $10 and change after earnings. Intel down 75 cents. You have Palantir down another $4. That stock has had quite a quick move here to the downside. You have AVGO, Oracle as well on that list, Qualcomm, Meta down $6 and change, Amazon down $1 and change. On the upside, you have Lowe's here up $10. You had Home Depot had earnings yesterday. It was up $12 and change here after earnings. You have McDonald's up a couple. Some of the less tradable T-Mobile, Tesla up $1 here. So it's definitely a mixed bag here to start the session. Any of your positions kind of sticking out to you? I'm looking at Costco's up $4 and change, which is nice here. Lulu's up $1. Silver moving. That's a good one for me.
Yeah, Costco's interesting. Skyrocketed back from the low 9s. Yeah, nothing in the P&L open or P&L day. P&L day, biggest movers, wheat up 60 cents.
The ags have been just death.
Not great.
Those have been down only. If you look at corn, wheat, soybeans, we had Thomas on yesterday as well as last week. Last week we were talking specifically about corn, but these have been a very, very tough trade. E-mini's currently down 10, 12 now, so we're at the lows of the session. We wanted to look at Target 2, which happens to be only down 10, which is right at the expected move. But the way we can calculate this, so if you go to the platform, you go to the closest expiration, which is the 2-day expiration here. If you look at where the stock was trading at yesterday, it was at just about 105. And you could pull this up from the right side menu. So if you look at the open close, you have the close at 105 and change here. We go to the 105 options, you look at the straddle and you just look at the price here. So this call is obviously basically at 0 now with 2 days to go till expiration. It was trading at $5.15-ish cents yesterday. You could see it lost $5. This is the change column that you can toggle on or off with a number of different indicators there. But that option has lost $5, so that was trading at $5 yesterday, $5 and change. You can see the put, which would gain $5, is now trading at $10, which means the put was also trading at $5 and change here, which means that the 2-day, which was 3 days yesterday, expected move was roughly $10. you have a $10 move here. So we're right at the expected move. That's one way that you can kind of back into expected move based on yesterday's prices going into today. So you can say target was right at the expected move to the downside.
Yeah. And I'm just going to do some quick math here. So we've got, actually, let's look at a different stock without this inflated IV, I think is going to give us maybe some issues. But yeah, let's look at Costco.
Okay.
So Costco, 27% IV, 27 divided by 19.
Doing this quick math.
Yeah, 1.42%. So 0.0142 times 986. Yeah, so it's roughly, I was getting 14 points, which is right there.
That's one day.
Yeah.
You have 2 days until expiration.
Yeah.
So that lines up perfectly. When you look at your $14 expected move, platform has $16 and change. So we're right there. Quick little back of the envelope way to calculate expected move here.
Yeah.
E-minis down 12. You got bonds basically unchanged here. A little bit of a perkiness and volatility. When I was talking about the volatility curve, one of the things that I do in the platform, and hopefully we'll have a vol specific watch list built into the platform here in short order, but I build this one myself. I put in the volatility futures for the year, so I like to do this in January. I just set it up every year and just have the forward curve of volatility. So you can see we're rolling out of this Q contract. It's at 15 and change. We are rolling into the U contract, which is at 1845 right now, but you can see volatility futures have a pretty steep contango going into the further out expirations, which means that volatility is still kind of centered around the future, not. There's no fear right now, even though we had a little bit of a dip here.
Yeah. And we've been saying that. I mean, you're not going to get, if you just think of volatility in a very simple way, you're not going to get a 10, 20% sell-off in the E-minis unless you get backwardation in volatility futures. And vice versa, if you do get backwardation in volatility futures, you're not going to get a recovery to the highs unless you get contango. So right now, we're in the teens in volatility futures.
Mm-hmm.
We are in the mid-teens in the VIX.
Yes.
And you've got almost a 2-point contango between the U and the V contract, which is pretty steep.
Mm-hmm.
So 2-point contango just means the U contract is about 2 points cheaper than the V contract. So the steeper that gets, the more complacency is priced into the market and the less fear there is. The more it flattens out, where all the prices and volatility futures are the same, that's where you can kind of be like, okay, is this a turning point?
Mm-hmm.
Is this actually real volatility to the downside? And then if you get the backwardation where the near-term contract gets more expensive than long-term, that is a sign that you should not be surprised to see further downside if it's going to happen.
Or big moves in either direction.
Yeah.
I mean, that it's really an indicator of where volatility in terms of price movement is priced in, right? So you typically have, as time further out in time, you expect there to be wider ranges of price movement. That's just intuitive. When you flip that narrative, when you have backwardation, which doesn't occur all that often, it tells you that the market is pricing in more violent moves in either direction right now versus in the future. Like in the future is more certain than right now, which is not typically what you see in markets. You typically see that further out volatility to be priced higher, which is very much intuitive. E-minis down 10. You got the NASDAQ down 98 and change here. The Dow bucking the trend here, up 95, and the Russell basically unchanged here, down $2. You have oil catching a little bit of a bid, up 75 cents. Volatility futures up a nickel. Bonds unchanged. You got gold up $28, silver up 50 cents. Those are both highs of the session here, as well as Bitcoin kind of bouncing a little bit. I hope this isn't a grind fest until Friday. Kind of what it's looking like.
Feels like it.
Yeah. People hoping for that inside move.
Yeah.
They might be getting it here.
You know what? I'm gonna put my
Are you going to do a little SPX?
I think so.
What are you thinking?
Feels right. I think
you have 6,400 right there.
Yeah, it's perfect.
So
the narrative is there.
I will preface this by saying that we are 3 for 3 on our 0-day SPX trade. So we are due for getting our face ripped off on one of these.
Or
what'd you do?
235 premium. I just sold the 63.85, 64.20, 5 points wide. The 0-day.
So you went to
Chicken Iron Condor.
Yeah, so you went roughly the 30 delta on either side. You did it $5 wide.
Yeah. I think that's the new MO. Every time we're on the morning show, we just rip a 0-day Iron Condor.
Yeah.
And that's that. Or if there's a big pre-market move, we just fade the other side.
So I'm going to go more towards like the 1 standard deviation-ish. I'm going to go to the 20 delta, 64.25, 64.35 on the call side, 63.80, 63.70 on the put side. You got E-minis down 13. It's the low of the session. But I'm going to do this a little bit wider and a little bit further out of the money. So I'm going to have more risk on the table, but a little bit higher probability here. I'm going to try and get that for about 1/3 the width of the strikes. And I got filled at 325. Loading on this computer. It's the back computer. The Tom computer gets the sounds. Maybe we'll change that one day. Who knows?
Hey. Yeah. But yeah, why not? Throw a little 0-day action on.
Yes. But we got a ton more action left in this next segment. We have what's your assumption with trade ideas that you, the viewer, sent in for us. It's going to be fun. We did prep this throughout last week to get some good trade ideas in there, spicy trade ideas. So we'll see if we can get some trades on there. We're going to take a quick little 90-second break, come back with what's your assumption to live trade ideas from you, the viewer. You're listening to Tasty Live.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Would you rather be guaranteed to beat the market by 10% this coming year, or be guaranteed to match it for each of the next 5?
Both of them are icky. I guess I would take the extra 10%. I mean, the choice is one or the other. I get 1 year of 10% more.
Yes, 10% above the market that year.
I mean, I guess you get the market can go down. So if you get five years and you're stuck with whatever the market is, I don't want that. I'll take the 1 year of a 10% little boost, and then the rest of it I got to figure out myself.
I would want to match the market for the next 5 years because I think this is the floor of the moonshot we're on right now. No, really, honestly, when volatility is low, it tends to cluster for long periods of time at low levels, and that typically means a slow grind higher. So I think we could see some crazy stuff with some of these tech stocks leading the way.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
I tend to call myself a lonely options trader because I really don't have a lot of people that I can share stories of wins and losses with. Like Tasty Live plays the whole day at my house. I love that they've made everything really easy to digest and take in. I love that you can easily send an email if you have any questions and Tom will be quick to respond to you, or if somebody else, Nick, Tony. I really enjoy that it's a customer focused and it's a customer centric system that you guys have here. And Tasty Live has definitely changed my life financially because I'm able to determine how and where I can make my gains and not be a passive investor where you're just relying on the markets to do something for you. You could actually go out there and do it yourself.
Calling all traders. Are you using tastylive mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, tastylive has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities, and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you would like the chance to share your trading journey and inspire others.
Diversify your portfolio with stocks, options, futures, crypto, and more. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Tasty Trade. Download today.
Mikey, my friend, we are back. E-minis down 17, the low of the session. Ooh, 64.09 was the low of the overnight session. We'll see if we can pop below that. You've got the NASDAQ down 150. You got the Dow up 92 and the Russell down 6. So a little bit of a sell-off here in the E-minis and the NASDAQ and the Russell, the Dow bucking the trend. Oil catching a bit at 84 cents to the upside, 62.60. Volatility futures pretty much the high of the session here, just off of it, 1850 of 15 ticks. Bonds down 1 tick. You have gold and silver both up almost 1%. You have gold up $28 and change, and silver up 48 cents, as Frankie Walsh would say. The metals are flying. Bitcoin basically unchanged here. Ethereum basically unchanged as well. So a little bit of movement underneath the surface. I know some of the peeps in the chat looking at Nvidia down another $3 today. It's had about a $10, $12 move from the highs here, as well as Palantir. Palantir is another one down $6 and change. You got Reddit down $15. I saw that one move at $18 now. Even like Apple and Microsoft and Amazon and Google, they all look pretty sus today, as the kids would say. That one should have been added to the dictionary.
Yeah.
Well, that one might be in the dictionary already.
It's got to be. That must have been an early ad.
That's better than skibbity.
Yeah.
Skibbity is, I'm not.
That is how you know that the laser beam is near. Like the
meteor.
The
meteor is near.
The alien invasion. It's close.
It's skibbity.
That's the tell.
Yeah. The pin in the.
But yeah, some decent moves with these ags products. Wheat up almost 1.5 or percentage and a half.
Finally.
Corn trying to claw back, but yeah, I want some more of that. Give me some more wheat and corn price surges.
Some big moves across the board. A lot of the chip names. AVGO down $7 and change. AMD at 162. It's come down from 185. It's down 10-15% in 2 or 3 sessions. So definitely some big moves here. Meta down 13 and change. Definitely a little bit more volatility underneath the surface than an 18 vol future would suggest. VIX at 16.
Yeah. VIX at 16 is sad.
Yeah, and you got stocks moving 10-15%.
Yeah.
Interesting.
But yeah, if this turns into a 100-point move or more, maybe you get a reaction in vol futures.
Yes.
Finally, but we need to see that first.
Everybody's saying Nvidia is crashing. Crashing to prices not seen since the middle of July. They've given up about 2 weeks.
Could be a generational buying opportunity.
Who knows?
Could be early.
It could be the only dip you get ever.
Yeah. Craziness.
Who cares about that? We got trade ideas.
Yeah.
What's your assumption?
What's your assumption? You love to see it. Let's do it. Yeah.
There's our music. What's your assumption?
Love it. Yeah, these trades are always nice, and we are more than willing to take any and all trades.
Yes.
As long as they're in liquid products, that make sense to trade.
Yes.
Let's get into
And
it.
we will get them all posted to the file page. So you will have those as soon as we get them.
CRM, Salesforce, $245, basically flat today. How's about a neutral, bullish to neutral strategy? The stock has been a pig from Jorge in Los Angeles, LA.
So CRM does have earnings coming up here. I believe it's on September 3rd. So you got some time for earnings. I actually put on a put spread here yesterday for the cherry picks. So I did the 230, 220 short put spread. So I am sort of neutral / bullish. Jorge and I are on the same page.
Yeah.
Higher vol, 62 IV rank,
Yeah. Because this has earnings in a couple weeks, I want to refrain from selling premium on both sides, especially narrow premium. I'd probably have to do a 5 or 10 point wide spread here. So yeah, I agree with Nick. I think you just pick a direction and lean with that if you're selling premium. But yeah, I'll join you in this little endeavor.
Yeah, you could do a $5 wide,
Yeah.
$10 wide.
Small.
You could keep it small with earnings coming up. No big deal.
Yeah, 230, 225 for $1.35. That's where I'm filled at.
There you go. Beautiful.
Ding. Sweet.
1 for 1.
What do we got next?
SPX neutral 0 day. IV and VIX 1 day looking better now. That's right. You got one little down move. E-mini's actually down 29 here.
Oh, no.
6,400. Let's see if we can get below that. Scary. Time for a wide iron condor. We did that this morning. So in SPX, I will probably be closer on the put side now, right at the money on the put side. I might even just leg out of this call spread, but I now have the 63.80, 63.70 short put spread. It's right at the money. Call spread 64.25, 64.35. Might have to just leg out of that.
Yeah, my call spread is 64.20, 64.25. Put spread 63.85, 63.80. Call spreads at half max profit, but I'm going to leave that on. I want it to get down to like 10 cents before I leg out of it. But yeah, we're in. We were already preemptively in.
Yes.
What do we got next?
I wish we had waited.
Yeah, seriously.
Well, you never know. Because then if the market bounces from here, it would have been better if we just put it on at the beginning. That's why you never know. You can't always.
Can't do it.
Yeah.
SoFi bullish. Before 2026 is the time frame.
Okay.
We think SoFi shoots to $30 in the next month, only to shoot up to 60 before 2026. Woo! Identical to Palantir recent crazy run up once it reached all-time highs and clears the skies from Big Mo in Italy.
Well, Big Mo, I don't know if you've looked at Palantir recently, but it is now down to $8 and change. We're about $40 off the high. So, yeah, sometimes you get to the high points and then you gotta take a little breather, take a little spanking.
Yeah, I'm getting into this for sure. So I think I'm gonna do a more long-term position.
Oh.
Yeah, so I'm going to go. So SoFi's down nicely the last couple of days, so I'm happy to buy this dip. I do agree. I think SoFi is a great product, and they will continue to do good things.
Okay.
But I'm going to go buy a November 20 strike call, and I'm going to sell the October 25 against it for almost $1. So 5 point wide diagonal for 260. Nice and cheap.
Very nice.
Basically, risk one to make one if we get back up to 25.
I like it. I'm already in because I was long stock, short 2 calls against it at the 20 strike. So I have an extra put to sell because I have 100 shares to 2 calls. So I have an extra put I can sell without using additional buying power. So I sold the 20 strike put in September. I did that at 81 cents. So I now am wrapped around my position is synthetically a straddle at the 20 strike through all the rolls that I've done all year as a year-long trade.
Market's crashing, down 35.
Woo! Below 6,400.
Yeah.
Close all watertight doors. See, we knew this was going to happen too. You know why?
Why?
Because Tom's gone.
Oh, yeah. I forgot about that.
And he's gone all the way through Tuesday of next week. So he doesn't get back until Wednesday of next week. So we could have some pain.
Down 40.
E-minis down 40. You got the NASDAQ down 280. Russell down 18. Vol futures 1872.
Hate to see it.
So we got some vol getting in there. It's beautiful.
But yeah, we're in SoFi. Cool.
I think we've done them all. Next one, please. Roblox neutral October high IV and price just dropped. You put the exclamation point there because it basically rode all the way up to 130 without a downtick. Maybe a strangle. This is Sean in Hong Kong. Let's see where Roblox is trading here. 115 and change. It's down $3 or so this morning. It's gone from 150-ish at the highs after earnings down to 115 here. I don't know if I'm going to be doing a strangle, but maybe we look. Let's see what the buying power is here. So I used about $3,000 in buying power to put on a strangle, so I won't be doing that. But maybe you want to go to October. I'm kind of leaning towards September just because you have a little bit more vol exposure and you won't have any issues with the next earnings season coming up here. I'm thinking maybe around the 20-ish delta, going $10 wide. Maybe like the 185. So the 100 strike is about a 1 standard deviation on the downside. On the upside, maybe lean a little bit short here and go to like the 130, 140. So the 130, 140 is about the short option is about a 24 delta. Net, you lean basically 0 delta here. So you're certainly neutral.
Yeah, I like going to September too. If you look at the expected move on the platform, it's a 15-point expected move for 30 days. October is an 18-point expected move for 60 days. So only 3 points more for twice the amount of time means a very slow trade, especially if you're taking risk on both sides. So yeah, I think going to September makes a lot of sense. I'm going to do just a small little, I'm just going to split the difference. It's trading at 115. I'm going to go to the 100 and the 130 shorts and then define risk 5 points wide for $1.50. $1.46.
I'm going to lean slightly short into this one.
Cool.
I'm going to do the 125, 130 call or I'm going to do the 125, 135 call spread, the 190 put spread, and I'll do that at $3.20-ish cents.
Sweet.
I mean, it's neutral. Like I have 5 short deltas. Nothing.
Sweet.
If I get it filled. Okay, I'm in. 319.
Yeah, and I'm posting these to the follow page in real time.
Yes, they're coming. Won't be able to post our comments, which we normally do. But
I'm just copy and pasting.
Maybe afterwards.
What's your assumption?
Yes, maybe afterwards.
All right, we've got Tesla bullish this week. Tesla's gearing up for a move to 350 this week.
Okay.
From Archer. Hopefully, I'm pronouncing that right.
Tesla right now. A Tesla
from a tiny canoe.
There you go. Tesla down $8 and change. We're at 320 right now. IV rank of 8's relatively low.
Okay, so this week, 350 this week.
I don't know if I buy that.
I mean, it's well outside the expected move.
Yeah.
Probability of reaching 350 is not high, 4%.
Yes, you have a delta of 4, which means you have a probability of touch of roughly 8%.
Yeah. What I will do though,
if you believe this, what would you do? If this was your assumption, what would you do?
I would just, if your assumption is this week, that's totally fine, but I would give yourself more time than this week because this week is just too binary. Unless you're just like, you want to throw something down like in the 2-day cycle, but you can't go to the 350. Even if you think it's going to 350, like if you bought a call for 30 cents, even if Tesla reverses this move, that option doesn't move. So I'm going to go to the October-September calendar spread at 350. So I'll buy the October for $15, sell the September for $7.50, and just do a cookie cutter calendar spread and play into a reversal of this move.
I like that. I did the 300, 290 put spread in September, a little more conservative of a long delta play.
There you go.
350 works perfectly for me, but I don't really need that to happen. So,
yeah, I'm in.
I like it. Next trade, please. UNH neutral October. So long term, it'll probably go up. But right now, I don't know. Feels toppy to me. All right, Chris in Ashland, Oregon.
Yeah, we got into the dip buying opportunity in UNH. Actually, we bought the surge. Remember that last week? And we closed it the next day into the 8-point continuation. So yeah, I totally agree. I mean, it's hard to believe that a stock like this would go down in a big way after Warren Buffett and Michael Burry released their
after it already
positions.
moved.
Yeah, it already moved.
I don't know,
But this is one of those stocks where like the fear was maximized in mid-May, and then it kind of recovered, and then we got back down to the lows of May, and now we're seeing reports of big investments going forward. So I feel like eventually the terrible stuff around this stock may go away, and you might see it trickle higher. But yeah, I think right now playing it neutral, totally fine.
I'm going to do an iron condor in September.
Cool.
So I did the 280, 270 put spread, 330, 340 call spread. Ivy rank at 34, relatively high. You're about a 22, 23-ish delta on either side of the stock.
Lovely. Market's being bid up right now, only down 40. We were down like 50, 30 seconds.
Yeah, they're moving. Markets are moving here. Volatility futures 1870 right now, so they're up 35 ticks. Big move.
Crazy.
Next trade, please.
Kava, bullish. Ooh. Great bulls. Put all the toppings on.
Tom hates them.
Bowl. Really?
Yeah. I think it's junky when we get it in the office, but
well, yeah. I mean, it's not.
When you get it
when you go there,
it's nice.
Go there and you make your own custom bowl.
Yeah, it's really nice.
With whatever you want on it. It's incredible. 2 to 3 months. Why doesn't Kava? Who doesn't like Kava besides Tom? Everybody. They're still expanding. People crave it. After earnings chop, it has room to go up. The Kava has a line out the door.
Yeah.
One in Wicker Park.
The Harissa Bowl is fantastic too.
Harissa Bowl, Kava, New Jersey.
Yeah.
Yeah, that's a good selection there. But yeah, bullish 2 to 3 months. We're at the bottom of the barrel here. So yeah, I like this. I'm just gonna go defined risk, same story. Cookie cutter, diagonal spread, long October, short September.
Yeah, I could do that. I was looking at put spread. You could do a wide put spread at like the 65-50 or 65-55 in September, but I think I'm with you. Like in October, September. Are you thinking like October 70 strike, and then you can sell like the 75-ish? These markets are not great.
They're not too great. I'm gonna go November, October. 65.75 for $6.
There you go.
It's longer term, but you're still paying way less than the width of the spread. And if you get a rally, you'll be making a couple $100. So, and I'd rather have longer term for it to work out.
Yeah.
So yeah, I'm gonna route this. Long just got filled at 620. So long the 65 in November, short the 75 in October. Classic diagonal spread, paying $6 on a 10-point wide. Lots of upside profit potential there.
Yeah, markets are not great. Just keep that in mind. Watch your pricing.
Mm-hmm.
Next trade, please. Delta, DAL, bearish, 59 days. So if I'm bearish here, what's the play? Call spread or what? Kevin in Ithaca, New York. So I actually have a strangle on here. So I sold the 55.65 strangle. I think that was a fast market trade from last week. So I have some neutral delta here. If you wanted to be short here, you could do something like an at the money put spread. You could sell the out of the money call spread. I mean, you have an IV rank of 29. So you're kind of in, middle ground here of whether you're selling premium or buying premium. But and it also depends on how short you want to be. If you want to be a little bit more directional, you could do like a put diagonal, poor man's cover put, something like that.
Yeah, I'm also in the same strangle. But I think if you're bearish, I would do something in the September cycle, pre-earnings. Looks like earnings are projected to be early October.
Mm-hmm.
But either way, it's cheap here to get directional exposure with a 48% IV. It's not super low, but it's also not super high for a $60 stock. So lots to do there.
Yes.
Yeah, we're leaning bearish with you just by nature of this strangle.
Yes.
Kind of bearish. Cool. What do we got next? ETH A bullish October. Grab ETH A if it hits 30. Trust me on this one from Brian in Denver, Colorado. Yeah. You sound like our very own Ryan Grace.
Yeah. I mean, it's had a huge move, a little bit of a pullback here. You got ETH at 41.50 right now. ETH A trades at about 31 and change. I have at the money iron fly here, so this move was nice for my position, but I'm already in. If you are doing something here, though, it is basically cash secured. So I would buy wings if you're doing short premium. So if you're selling a put, just buy a cheapy wing for 5, 10, 15, 20 cents. You'll, free up half or more of your buying power. And if you're playing the upside, call diagonals, stuff like that, certainly look interesting because of the skew that you have to the upside.
Yeah. So I just did a November, October, same thing. I did the 30, bought the 30 in November, sold the 40 in October for $4.
Beautiful.
So 10 point that's the power of the skew here is that you can get a 10-point wide diagonal spread on for $4.
Mm-hmm.
It's really, really good return on capital if you're right. And you have the ability to reduce basis further by bringing that short option down if you need to. So yeah, just filled there. Market's crashing down 50.
E-mini's down 48.
Yep.
Low, basically the low of the session here. NASDAQ down 300 and change.
Ooh. Is this it?
Nvidia 170 and change. You got Palantir down a 10. Certainly looks like it's getting a little dicey out there. One more trade.
Yeah.
Get to the last one here. Open, of course, our very own Thomas, my prestigious intern, loves to mess around in these stocks. So open, directional bias neutral from Tim in Philadelphia, Pennsylvania. September or October, it's small, it's liquid, it's potent, like a shot of tequila. Beautiful. Throw on a strangle and see if you're hungover when 21 days rolls around. I try to avoid selling naked premium in something like this. I mean, the stock has gone from 50 cents to $4 in the span of like the last month. It's certainly in the meme realm. IV rank of 54, implied volatility of 200%. It tells you that the stock can, double, triple, or go to zero in the next, couple days here, basically.
Yeah.
And so I don't want to be naked any premium here. That's just not the trade for me. I think if you want to speculate, you want to have some YOLO trades here, you buy puts or buy calls, you scalp it, you play for a move in either direction. I think that's how you play it here.
Yeah. But if you are strictly looking for a short premium, I would just, instead of selling a 3-4 strangle, just sell the 3.5 put.
You can't. The upside risk is.
There's no reason to have upside risk here.
Yes.
In the meme realm where people want this thing to squeeze.
Yes.
You don't want to have short calls.
And when you have over 100% implied volatility, it tells you that there's more upside risk than downside risk.
Yeah.
Because it can only go to zero.
Yeah.
So we're going to pass on that one, unfortunately, but we got a ton of the trades on here.
Yeah.
Right. So I got on. I sold the put in SoFi, which is a position I've had an existing position. I did the Roblox trade, an iron condor there. I did a put spread in Tesla, and then I did the UNH iron condor, and then I did the SPX earlier this morning. For you?
I just sold the put and open to make it a cool 10 out of 10.
Ooh.
The 4 strike for $1.25.
I appreciate you taking that bullet for us.
Yeah. I mean, if it goes to zero, it's $100 risk.
I know, but then you're going to have that stuck in your portfolio for the next.
We'll see. But yeah, sold the put and open. But yeah, we got everything on. I just did a ton of trades. CRM, short put spread. No, long put spread. Nope, short put spread.
Short put spread. Come on.
SoFi, call diagonal, Roblox, iron condor, Tesla, call calendar. Kava call diagonal, ETH-A call diagonal. All the call diagonals are long November, short October, and then sold a short put in September.
Beautiful.
We're open.
So that's 10 for 10, 10 trades there. And those will all be posted on the file page right now. So we're going to take a quick little 90-second break. We're going to come back with Jacob, finding the best with uncertainty. Wouldn't you like to find the best with uncertainty?
I would. That would calm my soul.
That would calm my soul too. We're going to take a quick little 90-second break and come back. You're listening to Tasty Live.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move.
Regulation time may have expired, but the conversation is just getting started. This is Overtime, the post-market scrimmage for market junkies. Join Chris Vecchio, Ilya Spivak, and me, Dylan Radigan, as we analyze the X's and O's for everything from earnings to politics to macro events and more. Nothing's out of bounds on Overtime. We break down the news to provide you a playbook for your trades. Watch Overtime Monday through Thursday only on Tasty Live.
Gonna go to Florida. I got Rob. Rob in Florida. What's up?
Hello, Tony and Nick. I am a big fan. My wife and I watch you guys for hours and hours every day. You can be very, very proud of your son. He is doing a great job. I really didn't know anything about stock prices or options or anything until I started watching probably 500 hours of Mike and his whiteboard from years and years and years ago, and learned all about it. And we've been trading actively since February and just couldn't be more pleased.
Awesome, man. Thank you so much for the kind words.
Thank
Really
you,
do
Rob.
appreciate it.
The beauty of Thinkorswim was that we were different. From the name to the front end technology was clearly what we wanted as traders. Second time around, I think we did a better job. Yes, we are known for our ability to support complex derivatives traders, but we also have the tools for somebody who's brand new who wants to come in on the first floor and work their way up to the top of the building. The amount of time I spend interacting with our customers via email or anything else is pretty much my entire life.
To be so powerful and so valuable, and then to be that approachable, just amazing.
Where else are you going to be able to email a CEO, get response back?
But you know what? Before he even knew who I was just some idiot trying to learn how to trade. And he still would email and help me learn and everything like that.
Some people say it's nuts, some people say it's insane. You know, that's what I do.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and Tasty Live web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Beat the opening bell. Get trade ideas and market insights before the open. From the creator, Tom Sosnoff, and our chief market strategist, Tom Preston. Every weekday. Sign up at tastylive.com/newsletters.
Mikey, we are back, my friend. E-mini's down 52. We're near the low of the session. NASDAQ down 360. The Dow down 40 and the Russell down 16. It seems like a little painful, little move here.
Yeah, I'm about to buy back this call spread on the SPX 0-day for 10 cents.
There you go. That came in quick. We'll see if this continues through the rest of the day. But who cares about that when we got the skinny on options math with Jacob, finding the best with uncertainty. Good morning, sir. How are you?
Good morning. I am well. This is an interesting piece because it's sort of one of those times where I've found I have picked a math result that's more widely applied, and then I'm channeling it into how do we learn from it as option traders. So we'll get to cook up some kind of classical math from 25 years ago and sort of take lessons away from it, because a lot of these things are, it doesn't directly apply. It's, a constructed mathematical example, but there's a lot of good lessons about how to behave if you're looking for good performance, but you don't know what's coming next.
Beautiful. I thought you were going to go easy because of the whole Burning Man situation. I'm
not going this year. I've said several times.
You didn't go this year?
I didn't go. It's happening next week. Last week I took off to help people build stuff, but nothing this week. Nothing. Not going this year.
How come?
My partner's finishing her dissertation, and so doing all the prep work was sort of out of hand.
Wow.
Yeah, a lot of work with that. Can't mix and mingle the most fun with the most work. It just doesn't work.
Yeah. And
what do you mean? That's what we do out here every day.
The stress of needing to be ready to leave for it before the actual deadlines came was too much. So
yeah.
So taking a year off.
Fair enough.
So let's jump into it, and I'll set up the problem. It's a classical problem. It's known historically by the somewhat sexist name of the secretary problem. Under more modern terminology, we just call it the best choice problem. But it's a problem in optimal stopping, which means that the idea is that you've got some situation that evolves, and you can know what's happened already, but you don't know what's going to happen, and you need to figure out when you're going to you need to make a decision at some point during the process without knowing the future. John, take us to the first slide, and we'll set it up a little bit more explicitly. Suppose you have N applicants waiting to be interviewed for a position. It's called the secretary problem because the idea was at the time that a secretary would come in, interview for the position, but you'd have to accept or reject them on the spot. If you rejected them, there's no calling them back. They left. They went to go find a different job. They were just walking down Madison Avenue, interviewing at every place they could find. And after you've interviewed some candidates, you can definitely rank the candidate you just interviewed compared to all the candidates you previously interviewed, but you don't know who's still coming. So you have to accept or reject them at the end of it. You can't call anybody back. And then the question is, we're looking for what is the strategy that maximizes the chance of selecting the best candidate. And so, there's some examples on the right where you imagine that the quality of the secretary is based on their height. So you go along, and if you are only willing to go a little bit, you find that first kind of tallish one who's pretty good, but the one with the star is the best one. And you'll miss out on them if you leave too soon, but at the same time, if you reject that star one, you're not finding anyone better after that, and you'll be disappointed with your last candidate who's just not that good of a secretary or a choice of any kind, or a winner, right? The real way we should be evaluating this in the light of trading is sort of in how to manage our trades, right? Is this going to get better or worse, or do we want to enter it? Is it going to get better or worse going forwards? And the key takeaway is going to be that we're going to want to look at sort of a certain amount of proportion of historical data to determine how good the current outlook is. And let's go for it. There's a nice algorithm, or I'm not going to roll through the entire algorithm, but it's due to Bruss, came out in 2000. There have been a lot of sort of arguments about the best choice problem for about 100 years before that. Where people sort of thought that this 1/E bound was going to be quite tight, and it is. So the idea is that first you set up the general class of problems means that it's going to fall into what's called an exploration-exploitation algorithm, which means that you're going to pick, before you start, some proportion of the applicants that you're just going to reject. You're going to take them in as data, you're going to analyze them, but you're just learning for that phase. You have some exploration phase where you're learning, and then after you've rejected them, you look for the best one that comes, the first one after that who comes along who's better than all the ones before. And given that the strategy we're looking for is going to be in this class, we can say, well, how many should we reject? Well, if I reject the first k-1, then the probability that I managed to select the best one is, well, I didn't select any of the first k-1, so starting at applicant k and out through n, the probability that that applicant is selected and that applicant is best. We can do Bayes' rule to split this up into the probability that we choose candidate I given that candidate I is best and the probability that candidate I is best. That's nice because both of those have much easier expressions. The probability that candidate I is best is just 1 over n. We don't know anything about the order of the candidates that we're going to arrive in, and there are n of them. So one of them is best, so it's 1 over n for any particular one of them to be the best. And then the way you would choose candidate I, if candidate I is the best, well, if candidate I is the best, then they're definitely going to be higher than any of the ones you've seen before. But what you need is that the best one before that, of all the ones who came before I, was in the rejected phase. Right? If they came after the rejected phase, you would have, if there was a better candidate, the second best candidate was in the unrejected phase, you would have taken them because they were better than all the rejected ones. But if you rejected the second best candidate in that first batch, or the second best candidate, or the third best candidate if the second best is after I, etc., then you'll pull I correctly. Which means that the odds that they rejected them is you rejected k-1 of them out of I-1 of them, so that's k-1 over I-1 is the probability that that's what happened. So now we've got this sum from I equals k to n of k-1 over I-1 times 1 over n. And now if we take n to be pretty big, we can approximate this with an integral. Like this is a sum with little pieces of 1 over n. To any calculus student, this should look like an integral. We take large n, we set some change of variables. X is k-1 over n, t is I-1 over n, dt is 1 over n. So that then you get that this is about the integral, this is about x times the integral from x to 1 over 1 over t dt, which is negative x log x. In the usual way of calculus, if you want to find the maximum of something, you take its derivative and you set the derivative equal to 0, because that finds you maximum and minima, where the slope has to be 0, right, either at a peak or a trough. And doing that, we get that the optimal value for x is 1 over e, so that the optimal value for the optimal value for x is e, so the optimal value for k is about n over e. So about 37% of the candidates. So if you have 100 people showing up, you reject the first 37 of them. If you've got 200 people showing up, you reject the first 74. For this reason, the result is often called the 37% rule. And it's sort of a good heuristic for when you're looking for the best thing. And it's surprising that you just reject 37% of them. This has a probability of 37% that the best candidate was in the ones you rejected, so you have a 37% chance of really scuffing yourself. You also end with a 1 over e chance, slightly better than 1 over e chance, of actually getting the best candidate, which is surprisingly high to most people, right? If you have 2,000 candidates, it's a little bit surprising that you can have a 37% chance of finding the absolute best one. And then the other 26% of the time, you get a candidate who's better than any of the first ones, but isn't actually literally the best one. There have been a couple of generalizations about this over the past 25 years since the result came out. And for our purposes, the most relevant one is this idea that maybe you don't just want the best candidate, maybe a good enough candidate. Maybe you just want a very good candidate, right? A good winner, right? We don't need to hold out to try to exit every trade at its absolute most profitable moment. If you get out a little bit earlier and make a little bit less, that's pretty good. You get to redeploy the capital. You don't have as much risk on. And so for that reason, what we perhaps want to consider is, let's go to the next slide, looking for good enough. Yeah.
You got it, Mike? You got that?
Yeah, this is simple. I got it.
They're challenging us today with the expected move and this one.
Yeah. So if instead of just trying to maximize the probability of selecting the best candidate, right, that P of selecting the best candidate, we're instead trying to maximize the expected quality of the candidate, and we have to be a little bit specific here. We're going to evaluate we're going to say all candidates are, have a value between 0 and 1. We don't know the distributions that they're coming from, but we do know that they're all, either this is perfect, this one's terrible, other people are in between. And we don't have to know it beforehand, but we find it afterwards in light of all the candidates. Then the quantity that we're trying to maximize, if we're looking for the expected value of the selected candidate, transforms itself into this sum of products. We've got a sum of a product plus another little product of the tail term. which simplifies into this algebra fraction on the far right, which is sort of surprising in that it's very different from the previous result, because this one maximizes not at a specific fraction of n, but a specific power of n. This maximizes at k equals square root of n, which, given that e squared is 7 and change, means that if you have more than 8 or more applicants, you're going to exit earlier this way, which makes sense, right? You're a little bit more forgiving. You don't necessarily need the best applicant. You're just looking for a pretty good applicant. And as a result, you're going to look for way fewer of them. And this is perhaps the most relevant thing for traders, is that we don't really want to spend, the first 4 months of the year looking at trades and trying to evaluate what makes a good trade. If instead we're looking for the square root, that's like the first 17 days of the year. If you look at the first 17 days of your 0 DTE trades, then that can give you a good sense of scale for how much of what sort of situations are looking for when you're looking for a good upcoming trade. That this idea that you're going to use a square root of your total potential opportunities just to evaluate the remaining 1 minus square root of them, which is a much larger proportion than the classical secretary 37%. And then, all right, we'll go away from math. We'll do some behavioral psychology for a slide. Let's go forward. There have been, a thing you can do in academia when someone has a result like this is then you run it in a psych lab where you take a bunch of undergraduate students, you give them each $20 to show up, and you have them take a test where you tell them, hey, I'm going to flip over I got a bunch of pieces of paper with numbers written on them, and you're going to flip them over one at a time. And I want you to stop at some point, and you win, a gift card to the movie theater if the one you stop on is the highest out of all the group. Almost universally in these studies, people stop too quickly. They stop way before the 37% mark in their evaluation phase. They'll take a good one if they see something that looks high-ish, right? If they see a 1 and then a 2 and then a 20, they'll stop and take the 20, even though they've got 60 more pieces of paper to flip over. There sort of are a couple of explanations for why this is. I think that the main reason is it's sort of an excessive fear of the fail case, right? When the best candidate is in your rejected pile, right, that you were using to evaluate, and then you don't wind up picking any of them because you never see one as good again. I think people that really stings, and so people really try very hard to avoid that. Or because people don't really grasp when they're being told you need to find the absolute best one. They naturally fall into looking just for a good enough one because that's more rational. Or that in a real situation, there's a cost to the analysis. You don't really want to do as many tests as the optimal thing will prescribe. It takes a while to do an interview. You have to go through this whole process. Maybe you need to buy them lunch. So you'll be a little bit more forgiving and willing to accept someone of a slightly lower quality who comes along slightly sooner. But those are the sort of the discrepancies between the theoretically optimal behaviors and the real world observed behaviors, either because people are making mistakes or because they have different values of analysis than the perfect theory. But this is really just sort of an application of a mathematical idea that in order to evaluate unknown upcoming things, the best thing to do is to take the known past and try to interpret forward, looking for what is, using that as your scale for what is good, and that how much of the past you want to take in as data before you start actually looking to participate, right? How long you want to spend trading in your paper money account before you're willing to actually step up and invest for real, should depend on how long you expect to do it and be sort of based on a fraction of that. So if you think that you're going to be trading for the next 30 years, you could even spend a couple of months, really working it out. If you think you're only going to be trading for 5 years because you're either very old or sick or you're just impatient, then you can just spend a month or two, trying to get your handle on what's a good looking thing. That you really want to let it scale with the amount that you expect to continue for, and how good of an evaluation. All right, we can go takeaways.
This flies in the face of our what's your assumption, where we just did all 10 of the trades.
Well, no,
we did no selection.
I have things to say.
Okay.
Yeah,
after the
please.
takeaways.
Yeah.
All right, let's do takeaways, then we can have a discussion about it. The best choice problem, also called the secretary problem, involves trying to find the best candidate, but having to make decisions without knowing who else is coming. Maximizing the chance of finding the best requires rejecting the first 37% of applicants out of hand. Being willing to take a good but not the best one lowers this amount rejected to square root of n, and that's lower than 37% if n is 8 or greater. When it comes to placing and managing trades, we're in a similar position of knowing what has come before but not what will come after, and we want to do as well as possible. So we want to try to evaluate our current positions in light of the performance of past positions to help set ourselves up for success even when what's to come is still a mystery. All right, Mike, what you got? Give me your takes.
Yeah, what's your take here, Mike?
Well, I mean, this is great. I think it's a very in-depth technical way of explaining understanding ranges of outcomes and understanding how elimination is much more powerful than like the perfect selection. So like, let's say I have a stock. First, you have to decide, do you think the stock's going to go up, down, or sideways? Once you decide that, you've eliminated 67% of your possibilities for trades.
Yes.
Then you go into, okay.
IV rank,
yeah.
liquidity, those are all.
Yeah, and then you can further narrow. Maybe you're down to like 3 or 4 trades. Then or you say, okay, what kind of risk do I want to have? $500, $1,000? Do I want this to be a long-term position, core position, where I'm willing to take more risk? Once you decide that further narrows your selection. Because like, if your risk is $1,000, you're not selling strangles in 90% of the products. Like you're limited to defined risk, and defined risk trading has, subsets of profit taking and management styles and what have you. But then also, let's say you place the trade finally, and like the AVGO trade, we placed it last week. We didn't wait for 50% max profit because we got 25% profit in a couple of days. So that's another way of being like, okay, I know that I'm experiencing something that I would not normally experience in a standard decay curve. Mm-hmm. So I am changing my outcome of 50% profit. I'm taking that 20% or 25% because it came in a couple of days, and I know that over time that's going to be something that's not going to be feasible for every single time. So
that is an unusually good result. Right?
Yes.
It lets you use history to take in context and then identify, oh, this one is going not just well enough to trigger my limit order, but like better than they typically do, and it's a good time to get out because that's great.
Yeah. So yeah, I think elimination, process of elimination, and then of course trading small
gets you to a better subset.
Yeah.
Which is exactly what this is about. Of like picking.
And trading small, which we talk about all the time, helps you more quickly make a decision versus being like, okay, I have to have this be a winner because I have to.
Perfect trade.
Exactly.
Yes.
Yeah. So it all plays into everything.
Yeah. And
what do you think? What do you think, Jacob? Do you think
you're willing to accept good enough rather than hunting every time for just the perfect absolute situation, right? You had the one great trade of your life and you keep waiting for that one to come along again, and you wind up never doing it, placing another trade. Whereas you see one that's about as good or almost as good as your favorite trade of the past. That's also worth taking.
Yeah. Love it.
Good stuff. That was a fun one, Jacob. Thank you for joining us. We got E-minis down 60, the low of the session. Is this it, Mikey?
I think it might be. We might be crashing.
Oh, no. Well,
over.
We have 2 special guests coming up here.
Monday was.
What's that?
Everyone was so upset at the end of Monday about how quiet it was that they couldn't let that stand.
I know.
Hey, we've been waiting for this volatility for weeks and weeks, and it's finally here. You got to be ready to rock.
I mean, or you can be Tom and, only happy when you're unhappy.
There you go.
We got 2 special guests coming up for our live from the trade desk segment. It's going to be with the Tasty FX team and the Tasty Crypto team. They're both going to come in and give us a new spin on our live from the Tasty trade desk. So we're going to take a quick little 90-second break and come back. Thank you, Jacob, for hanging with us.
Thank you, guys.
You're listening to Tasty Live.
This is Chicago. We invented the skyscraper, the Italian beef, and the standardized options market. SIBO is not only the birthplace of options, it's also where Liz and Jenny got their start. In an industry first, 2 female former floor traders broadcast live from the floor. Hear the sounds of live market action and feel the electricity as they present real-time trade ideas and research-backed market studies live from the SIBO's SPX pit. Watch Liz and Jenny live from the SIBO. only on Tasty Live.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80+ Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
What's up, everybody? Check out my new series, Life Cycle of a Trade, where I show you my real-time trades with insights into strategy selection, adjustment mechanics, all the way to the closing order for all of the Tasty Live core strategies.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
Dear Cheapo Airlines, thank you so much for sending my luggage on a magical side quest instead of my planned destination. I am glad that I had the sustenance of the single pretzel I was served on board while I was waiting for my bag to arrive. Looking forward to your reply, because surely the response can't be as delayed as long as my flight was. Warm regards, Bettina.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
Every day I do God's work here.
From the smart mouths at Tasty Live.
If you missed the live show, here's our cherry on top weekly recap.
I mean, I watched an hour and a half of TikTok, and that was enough for me. Skinny waist, what is it? Skinny waist, pretty face.
Yeah.
Don't finish that song.
Yeah, that's Meg the Stallion. It's not safe for morning television.
Skinny waist,
Body yada
face,
yada
big
yada
bang, blah,
yada
blah.
yada. Body yada 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 yada. Yes, Tom, you have.
I got it down to a science, Beth.
Yes.
I'm practically a TikToker. Skinny waist, pretty face, big bang, boom.
I didn't even know TikTok had music.
Yeah. I mean,
here you are, this big-time brokerage CEO, media mogul, TV star. You're a full-on celebrity, and you're running around singing TikTok music like a 16-year-old girl.
Got the need for speed? No problem! At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
Mikey, we are back, my friend. We've got E-mini S&P 500 futures here down 60. NASDAQ down 380, the Dow down 120, and the Russell down 19, 20-ish. Now, you've got oil futures, 62.53, up 78 cents. Volatility futures at the high of the session, almost at 19 here, 18 to 88. Bonds up 4 ticks. Gold and silver both moving higher. Gold's up $30. Silver up 46 cents. Bitcoin as well having a little bit of a bounce here from the lows. Futures up $620, spots up $25, so a little bit of a bounce here. Ethereum as well, up $16 and change. Some volatility underneath the surface. You got some big moves in Nvidia, down $5-6. It's at 170. Amazon down $4, $5, $6. Apple as well getting killed. You got Meta as well going to the downside. Some of the secondary tech stocks, I was looking at Reddit down 20 and change at one point today. You got Palantir. I mean, these are some big moves. Palantir down $14, down $40, $50 in the span of a couple days. Little bit of all pumped into this market, wouldn't you say?
Yeah. We were expecting a 20-point expected move today. We got 60 right now. That'll do it.
Give me a little 20 handle in the vol futures. Give me an 18, 19 VIX going into JPOW.
Sure.
Could give us some fireworks. That would be fun.
That would be. Indeed.
Good stuff.
The Jackson Hole Summit. Doors closed. What happens there stays there. That's the kind of thing.
Giddy up. Until Powell hops on the mic Friday. Tells all.
Yeah.
Tells all the beans. On the way out, might as well. Trade secrets. Good morning, guys.
Good morning. Special guest, Mr. Glenn Freiberger. Good morning, sir.
Thanks for having me.
Yeah?
Yeah.
How's things?
It's good.
Tasty FX.
Tasty FX. We're gearing up for Jay Powell. He's a favorite of ours. Always gets the U.S. dollar volatility pumping. Yeah,
Sure.
I see vol in equities.
Are you seeing a little bit of volatility in the U.S. dollar pairs today?
Yeah.
The euro's been flopping around 116 to 118.
Yeah, so it's been coming in throughout August, but on those non-farm payroll releases, on those CPI prints, you've seen some pops in vol. So hopefully we get something from this Jackson Hole Symposium as these rate cut expectations continue to shift for September. Priced all the way in, now priced mostly in. That's been the big move in the dollar story. But
what do you think, Jay Powell? What's his lean this week? You think he goes kind of the same old data dependent, kind of doesn't lean towards either direction? Because when you were talking about the FedWatch tool this morning, and we've talked about it for the last couple of days, it's gone from 95, 98% probability of a cut. It's now down to like 80 something, 83, 83 this morning. Think he does more of the kind of both sides level playing field type thing.
I think it wouldn't be surprising if he does the both sides level playing field, but we have seen markets price this cut in completely before.
Yeah.
So maybe Powell, as expected, is what people need to take those probabilities back in the 90s. So not expecting a ton from him, but I think more of the same from him people could react just as starkly. But you never know.
Okay, very nice. So what do you got for us, TCFX?
Today, trying to do my best, Scott Sheridan here from the Tasty.
No, we're doing. See, you don't have to do the same as him. This is new, cool, fun.
I mean,
this
same but better was implied.
Oh, better,
like 2.0.
That's
but it's an homage,
An homage.
Because we want to stay.
The boys are in Mexico right now, having the time of their lives, golfing.
It's pretty good.
Eating tacos, eating
Tortas, whatever.
Michelin-starred restaurants.
Ceviche?
Ceviche, fancy hotels. It's great.
But not radioactive ceviche.
Let's hope.
They got the good shrimp.
Hopefully they're not eating the shrimp. Yes.
But here I've got the top traded FX pairs on Tasty FX this week, coming in at number 5, US dollar, Canadian dollar. Number 4, British pound, US dollar. Number 3, Australian dollar, US dollar. Number 2, US dollar, Japanese yen. And number 1, the mainly always number 1, Euro USD. That's the most traded pair around the world and at Tasty FX. And here I've got the IG Group client sentiment. So not only Tasty FX clients, but all of IG Group's spot FX clients, where they're positioned in this market. And you're looking across the board, not extreme, but unanimous long US dollar sentiment to varying degrees.
Generally speaking, how far does this skew? Like what would you consider an extreme in terms of sentiment?
Yeah, so we've seen, most reliably, we've seen the US dollar Swiss franc be in the 80 and touching 90% long handle while we're hovering off of those decade, 15-year lows in that market. So that's the most extreme. This Australian dollar, US dollar, we've seen when it was down in April, we saw that get into the 70s, 80s. as well as in that U.S. dollar Japanese yen when we were at 160. That was heavily favored sentiment to the downside. So now we're looking more split in that pair. That's been 50-50 for the past couple weeks here. But yeah, long dollar sentiment eking out. But yeah, we have some good price movement, some unique charts if you guys are looking into your Tasty FX platform, looking at all the dollar charts. What's interesting to me this week, commodity currencies, we've got Australian dollar getting hit hard, Canadian dollar getting hit hard with some of this risk-off sentiment taking over in markets. We've got Canadian dollar just bouncing off of a resistance level around 1.39, and that's a high dating back 3 months. So that's an interesting extreme for you. Australian dollar also, if you zoom out a little bit, where we're at right now, it's been bounced off of that level for the past 3 months as well. But if you're looking to the Australian dollar, what wasn't on the top 5 traded pairs is New Zealand dollar, and that's what we're looking at today, down a full % after the Reserve Bank of New Zealand cut interest rates down to, I think, 3% last night. So a big move last night, overnight, and now chopping around that range. So if it was interesting to you last night,
probably even more
sentiment. Well, you still get the same price level. So, yeah, seen some dollar strength.
Just to give everybody an idea of where you can find this in the platform. So on the left side menu, you got this Tasty FX tab. If you don't have an account open yet, if you click this tab, it'll prompt you to open a separate account. It's very much like our crypto accounts. It's all kind of hooked up together on the back end, a little bit of a funding difference between the two, but you can move cash pretty quickly. But it allows you access to all these pairs. So if all these things that we're looking at here, you can trade them on the platform, numerous pairs. We've been trading in and out of them. It's been a lot of fun to.
It's been magical.
Well, things can change, but it's fun to have a little bit of a diversification in terms of product as well as the things that we trade. You know, it's not very often that we get to trade the New Zealand dollar.
Yeah, pretty unique. Pretty unique product set and unique product specifications. So as you guys know, you can scale this down very small with just, I think, around $25 in margin for the smallest lot of euro dollar. And if something like what I just said, Australian dollar is not weakening as much as New Zealand dollar right now, instead of, synthesizing a pair between Australian dollar and New Zealand dollar, we also have the Australian dollar New Zealand cross currency pair available to trade. So no double margining there. But that's some next level diversification for you.
Okay. What's at the biggest price extreme right now, do you think, of the things that you've looked at?
Right now, today's move is definitely New Zealand dollar. New Zealand dollar, US dollar.
Over a percentage.
It's
over a percentage, and now back at April price lows. So that's your big mover of the day in the spot FX world. But seen some slight dollar comeback with some of this risk-off sentiment.
I have mostly leaned long the dollar, so this goes contrary to that, but I am going to scoopy a little bit of the New Zealand dollar.
Just in case.
Versus the USD, yes. And the cool thing about this too, the other way you can also trade directly on the chart. So you can put stops and profit orders right on the chart just by dragging and dropping. This is what I'm showing on the screen here. It's a pretty cool interface where you can, it tells you a lot about your risk one to make one here with just my dragging of the profit orders and the stop loss. So very cool, good stuff. Got anything fun coming to the Tasty FX platform before I let you go?
Always good enhancements to the Tasty FX Tasty Trade integration, but mobile's first. We're looking to crank out mobile because, FX market's trading 24/5, but if you're on the go, you need to have it in the mobile app.
Get your fix, baby.
Exactly.
Good stuff out of you, Glenn. Thank you for joining us this morning. We're going to have you tomorrow, too, if you want to come back on. Awesome. E-minis right now down $65. You got the NASDAQ down 400. We're going to bring on our second very special guest, and maybe you'll go first next time because you're just as special as that one, Glenn. Thank you for joining us. We're bringing on Dan Cecilia from Tasty Crypto with a little Tasty Crypto top 5. Good morning, Dan. Yeah, come on, take the stage, baby.
That was the intro. Okay.
Yes. Come on in. Good morning, sir. How are you?
Good morning. How you guys doing?
Doing good. You know what? The Sox are doing pretty good too.
Yeah.
They really gave up that win yesterday, but they slaughtered Atlanta the day before.
This was the only clean T-shirt I had, so
hey,
you guys are getting it from.
It's been a rough week. Okay, it's fine. I understand. What's happening in the crypto world? Anything crazy besides Bitcoin at 113? Is it time to panic? Is this it? Is this the death?
Yeah, the death of crypto. Everybody's been calling for it. I've been here for 10 years, and everybody's been calling for it. It's over now.
Of course.
I think this is a healthy pullback. I talked about this on the Tasty Crypto show. I was on a couple other podcasts talking about the price action in July.
Yeah.
We've just had that crazy run up. The treasury companies, Tom Lee parading around with a penguin. I think this is just a healthy pullback. It's right within our ranges that we track. Ryan tracks on the Tasty Crypto show. So, I'd obviously watch kind of some of the broader market trends, and then I'm personally looking to buy the dip. I probably would be working orders here on Bitcoin around 110, 111 if we touch that. ETH pulls back to 4K. Probably a good time to. I'm personally looking to get in there. There's probably some great trades on the IBIT options as well to do with this volatility pretty high. But generally, you see these big pullbacks in this market. So this is the opportunity to get in if you want to trade this short term.
Yeah, I think with Bitcoin specifically, just the size of the number that you look at with Bitcoin skews the psychology of the moves. You look at Bitcoin going from 120K to 110K, and you think it's like this huge number because it's a $10,000 move, but it's a 10% drop. Nobody's scoffing at Reddit down 10% today and saying, well, Reddit's going to zero.
Right.
That same sort of sentiment doesn't happen. Or Palantir down $40, $50 in a week and saying, that's going to go to zero. So it's the numbers. At some point, you think they move the decimal? Like they quote it in like not full Bitcoins. They quote it in like sats or something.
Sats out to the whatever 8th, 9th decimal point.
Yeah,
maybe. It's weird. It's very
basically a stock split.
To go on this tangent for a little bit. I've had conversations with my father-in-law. I've had conversations and they're like so confused about the unit bias. Or they're like so confused that they're like, oh, it's too expensive, and it's like, no, you can buy $1 worth of Bitcoin if you want.
Yeah,
it's crazy. Yeah, I don't know why that happens. Does it happen? Does that happen in futures? Like I'm confused. Like what?
Well,
I don't know. Tell me. I'm a crypto guy. I don't know anything else about anything.
It's the same thing in stocks. I mean, if you think about Apple, like Apple has had multiple 5, 10, 20 splits. Where the share price, if you took out all those splits, which is essentially moving the decimal place, right? It's moving it over. Apple would be trading at, I don't even know what it would be trading.
I'll find out.
See what Apple's pre-share or pre-split, all the splits would be trading at right now. I would think it would be in the 100,000s per share at minimum. I mean, Tesla split from 2,000 to 200 and then had another split when it got back up to 700. These stocks, a lot of these stocks would be notated in like what Bitcoin is notated in. Maybe not that high. You got to do the math. I put you on the spot with that math problem. But you look at Berkshire Hathaway, their original, which is BRK. I don't even know if we show it in the platform.
Yeah, it's 240x.
The price. So multiply that. Yeah.
Because it IPO'd at 22 per share. With split adjusted, it becomes 9 cents per share.
9 cents per share
if you account for all the splits and the compression of the price from the splits.
Yeah, so the original. So divide.
Yeah, that's what I just did. Divided.
150. So it'd be 200,000. You're saying? Trying to get a real number here. You got to divide. So 150. It's trading at what's Apple? Or I'm sorry, at 250.
Yeah.
Be 500 grand.
55 grand.
55 grand a share.
But
what an Apple would be if it had
55 grand a share.
Yes.
Yeah.
So it's the same number. It's just been.
Do you think my father-in-law would spend 55 grand on one Apple share?
Yeah.
Well, I mean, probably. He'd probably still be more comfortable with it, but
yeah.
It's the same number. It's a good exercise in just keeping, putting everything into kind of the same context.
Yes. Well, so I came on to talk about some volatility in the market here.
Yes.
So I just want to highlight the top 5 highest volatile coins on our platform.
Perfect.
I'm going to hone in here on Link because I've been in and out of Link for personally for the last couple weeks. It's something that lagged. It's a token that lagged the last couple months, and now it's shot up. It's up 52% in 3 months, 30% the last month. It has real utility. It's a real a real project making money. It's integrated into all these different chains. It's just on a tear. So that's the top highest one, 106% volatility, fun to trade. We're looking at I don't know if it continues. It might pull back a little bit, but that's been one I was personally trading in and out of. Looking at HBAR, SUI. We talked about SUI. We had the CIO of Mill City Ventures, ticker MCVT. We had him on the show on Monday. Yeah, on Monday. He is doing a sweet treasury company. He raised $500 million to buy up SUI, and has the backing of the foundation. So that's one to watch. That's one we're heavily traded in. So it's down 10% last month. It's kind of been in that like $3 to $4 range the last couple months. 84% vol. So there's some good opportunities here. Doge is another one that's kind of
just
lagged.
A sentiment gauge.
Yeah, but it's lagged too. Like it's usually something that runs as like a meme coin, altcoin. But I talk about this on Liz and Jenny all the time when they have me on. Usually the way these cycles go, and crypto is a very simple market. It's smaller, much smaller than FX, much smaller than stock market, bonds.
Can move quickly because of liquidity. I mean,
but there's also opportunities, right?
Yeah.
And there's also opportunities for a savvy individual investor to make money.
Yeah.
And typically the way these cycles go is everyone gets rich in Bitcoin. Bitcoin runs for 2024. Everything lags. ETH is dead. All the altcoins are dead. Everybody gets rich in Bitcoin. What do? They go further out on the risk curve. The wealth effect happens, right? Now they start buying up ETH. Now we see Tom Lee and Kathy Wood and Joe Lubin from the ETH Foundation buying up public companies to buy ETH, right? That's the kickoff of that rotation to out on the risk curve a little bit in crypto. So, you look to ETH. ETH caught up. It went from 1,500 in April, that April dip up to 4,800. Yeah. Now we get this pullback, The next step you got to look for is altcoin season. That's kind of the next step in this cycle. That's when you see the Solanas, the Suis, these new projects. That's when you had NFTs last cycle run. So I don't know what the signal is for that. I'm paying. I'll let you guys know when I find it. But I think this is just a healthy pullback. And if anybody in our viewers are interested, you look to buy the dip here.
And this is volatility. I mean, you're trading a lot of these, the HBAR, the Doge, the algos. You're trading volatility here, so you're looking for big moves.
Right.
Is this something like, you can obviously put like GTC orders in. You could put like good till cancel limit orders. Is this these products? Buy them and then put in kind of limit orders at price targets on the upside. Is that how you guys like look at trading these? And something, because like for me that I'm not looking at HBAR all the time, but if I put $100 in HBAR and I want to leg out of it on the way up, it's a simple way to kind of do that.
Yeah, you definitely cleanly. You definitely want to play those like or weekly swings, intraday swings,
hourly swings,
minute swing. Basically what I do, and I'm a little bit less of like a day trader in this stuff. In some of these tokens, there's, I'm a little bit further out on chain doing things, but for this purpose, let's just take a look at Bitcoin or ETH. Typically what happens in these markets when you get massive moves is you get huge wicks. Like you get these like massive wicks at the end, and it goes like, it'll drop down to like 108,000 and come right back up to 112.
Liquidating all the stops.
And that's in the perps market. I talk about this a lot, futures market, perps market. So typically what I would do is I would look at the chart. I would see where we're trading. Let's take Bitcoin, for example. It's at
113.
113. Yeah.
113.5.
I might go in. It's on our platform. It's 112.9 by 114. So last price 113. I might throw in like a limit order at like 105.
Sure.
Or like, I don't know, 111 or something, and just see if like it keeps it wicks down.
Cash amount, so you put $100.
Yeah, $100. Yeah, and I'll see if it wicks down to there to get in.
Yeah.
And then on the other side, I'll have my limit order in at like 115. Now I'm just throwing like rough numbers out there, but
just to kind of play for those bigger like kind of moves.
Yeah.
In and out trade.
Because when you get like these kind of rapid sell-offs, that's usually what happens. It's kind of a little bit more inefficient. So, I'm not like nickel and diming here. I'm kind of having limit orders in for some of these big wicks, and then maybe you do scale in at 113. Maybe you do buy $100 just to get in, see if it recovers by the end of the week or by next month. But I think this is a good time to be paying attention, at least. If you're not sure, it was up at 120, 125.
You wait for the dip to buy. So.
Yeah.
Interesting. Good stuff.
Yeah.
Well, thank you for joining us, Dan. This was great. We're going to do this tomorrow, too, so we'll give you another update in the Tasty FX and Tasty Crypto world for all those people that are trading those products that you can do on the Tasty Trade platform. If you don't have accounts in either of them, it's quick and easy. Sign up, enable, and you can get trading in some of those.
Yeah, I just put a link to the chat for the video you're talking about with the SWE. The SWE interview.
So amazing.
YouTube chat.
Real quick, can I just do a plug?
Yeah.
We have stable coins are here. You can fund with stable coins. Recurring purchases are coming. If you set it and forget it, just set it and forget it. That's the best way to do it.
Daily, monthly, whatever you want.
Whatever you want, yeah. And new tokens too. So we got a lot coming. If you guys have any suggestions, viewers, please email us.
Support@tastycrypto.com.
Support@tastycrypto.com.
Awesome.
Thank you, guys.
Thanks, Sam. We're going to take a quick little 90-second break. Come back with Liz and Jenny live from the CBOE. You're listening to Tasty Live.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
Tasty Trade has crypto, and you can trade with zero commissions, Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
If you've ever been curious about where to start with crypto, join me, Ryan Grace, for the Tasty Crypto Show. Alongside co-hosts and industry guests, we'll break down what's going on in the market and show you how to take advantage of crypto. No hype, no shills, just crypto know-how. Watch us live, join the chat, and fill your bag each week on the Tasty Crypto Show.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
Hello, everybody, and welcome to the Wednesday edition of the TP&J Show. Thank you all for tuning in. The TP is filling in while Liz is out of town, dropping her son off at college.
Well, how did you get any word from her yesterday?
Yeah, so this is so she dropped him off yesterday. They moved him in yesterday, but she was worried about how this week was going to go. She was very, concerned.
Of course.
So now it's like a string of events. So they dropped him off, moved him in yesterday. Last night, all the parents all got a hotel like on the way home and had a little party in the hotel. And now tomorrow is a big pool party for all the moms who just dropped their kids off. So it's like a week of all the moms after dropping them off.
Are you serious? It's endless celebration. No, by the way, was Liz's hotel room facing his dorm room so she could have like a telescope so she could monitor the activity?
No, they actually dropped him off and moved him in yesterday and then drove to Indianapolis to get like halfway home. And they stayed in Indianapolis last night with a group of other parents who all did the drop off.
How many hours is that?
I think from here to KU was probably 6.5. So then from here to Indy is 3.
About 3. Yeah, that's easy. That's an easy drive.
But tomorrow's the big single mom pool party after all the kids were dropped off.
Yeah, I mean, 6 hours in Texas gets you to the grocery store. So it's like driving 3 hours from Louisville or Lexington to Indianapolis. Yeah, she can do that. No problem.
So she'll be back on Friday. Because we're doing the morning show on Friday. So tune in. And I wonder what this week will bring. TP, I'm glad you're on. Spoos were down, 65. Now they're only down 58, but I'm glad you're on because you help keep people cool and calm when they might be panicking. Cool.
Easy, everybody. Easy. Yeah, no, so what we're seeing is a sell-off, whatever. SPX is down less than 1%. Okay. NASDAQ is down, and I look at percentages for this stuff partly because it scales things, right? I can see NASDAQ, oh my gosh, NASDAQ's down 351 points, right? And oh my gosh, it's down 1.5%. Yeah, okay, that's not insignificant. I don't, if I'm long mutual funds or my 401k or whatever, I don't want to be down 1.5% in a day, but it's not, you're not losing the farm on this one. Okay. This is mainly the big news is like the tech stocks. They're all getting clobbered.
Right.
Clobbered. Nvidia, Microsoft less so, but Amazon, Apple, those sorts of stocks. Target's down a lot today, even though that's not one of the big components of the index. The tech stocks are getting whacked, and that's what's pulling the S&Ps and Nasdaq down.
I'm glad you brought up like your 401k or your retirement account, and that's down 1.5%, and that doesn't feel good. But I think people forget about that. Traders, active traders, kind of forget about that. They're looking at their trading account, and I'm guilty of it myself. I'm looking at my trading account, going to my trading account, and I'm like, oh man, I'm down a lot today, and yesterday on the heels of being down yesterday and down today, but I forget about, my 401k that is having these big swings too, but I don't think about that. You don't think about that because you don't see that or you see those statements quarterly versus your trading account that you see every day.
Right. And most people, and I'm not talking about our viewers right here who are doing iron butterflies and iron condors and trading 0D, blah, 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 right? Okay. But most people who invested in their 401ks or who have a savings plan have been doing it for years, right? And I'm sorry, but over the years, I will tell you my losing trades of being short S&Ps over the past 10 years, okay? I can tell you the market's going up. So what you're talking about is shaving off some of your profits, right? Yes, if you started your 401k last month, okay, it's been a little rocky. I get it. But if you've been doing this for 10 years, 15 years, 20 years, 30 years, you should be okay. You're up some money in your savings, right? So, but the story is, that the big tech stocks are selling off, and because the Nasdaq and SPX, and SP 500, and the Russell are market cap weighted. Okay, so the biggest market cap stocks like Nvidia, like Apple, like Amazon, when they sell off, it just crushes those indexes. So that's what's happening right now. And, me personally, I don't know. I think we could talk a little bit about this too, if you want. The Fed leaning towards a rate cut this fall, the probabilities are suggest they might. If the interest rates start to fall a little bit, that'll be good for corporate profits. That'll be good for these companies. And, this might be seen as a buying opportunity. Who knows?
And it could be. And there are many people who put on hedges, and the question always is, and I know sometimes I've heard you say hedge is a four-letter word. The question is, if you put on a hedge, you never know when to take it off. So I have some hedges against my positions, and on a day like today, I'm wondering, do I take them off, or is this day one, and do I leave them on?
I would. So if you've sold, again, there's no right answer for a trade, okay? But my suggestion is, if you sold some calls against your long stock and stock's down today, maybe buy a third of them back or half of them back or something like that. Okay. Because, and the reason I say hedge is a four-letter word is that a hedge is designed, or a hedge is supposed to offset losses. In other words, a profit on the hedge offsets a loss on the stock, right? So if I sell calls against my long stock and the stock goes down, ouch, I lose some money on my long stock, but oh, look, I make a little money back on my short calls. Okay, that's the way it's supposed to be. And generally speaking, it does work. It does work that way. The problem is the loss on the stock is always bigger than on the profit on your short calls. And it begs the question, if you're hedging, why are you long the stock? Okay.
Well, TP, what if So I guess everyone has different positions, and in my mind, there are different ways to hedge, right? So I've got collars around some of my stock. I actually have some long VIX calls against some of my portfolio. I don't have too many short call. Well, people will have short calls, but a lot of the short calls I already bought back. So I think there are different ways to hedge. Now, whenever I throw collars around my stock, that stock I want to have and I keep it. And when the market goes down, I'll take that collar off. Treat it like a way to make some money back, but you're not making it all back. But people who have long VIX or long volatility, or who have long puts, because there are people who bought long puts because they were cheap. How do you don't know when to take those off? And every time we get a down move and you look at them and you think, oh, I'm going to keep these in case the down move continues, that's the end of them, and they end up being worthless in the end.
So just to make sure everybody's on the same page, Jen, you're talking about a collar, and what that is you start with your long stock, and then you add in short out of the money calls, and you use the credit from the short calls to buy out of the money puts. So that's the collar, right? And that is a more complete hedge than selling calls. So that's what we're talking about with a collar. But it's without getting too into the weeds with this stuff. Keep in mind that we trading intraday, that's not what we do. So looking at a sell-off in the NASDAQ or something like that, am I stepping in? Is my bread and butter trade, and we talked about this yesterday, Jen, about earnings trades, is my bread and butter trading scalping futures? No, not really. This is just my opinion about what might happen to the market. Okay. Am I basing a lot of trades on this? Not necessarily. But if people are concerned about their 401ks, their mutual funds, or saving plans, whatever they have, this isn't a crash. Okay. This isn't a time to panic, in my opinion.
Right. And people, and lots of our viewers put diagonals. They'll put diagonals in SPY or Qs. And the question is always, when do I take them off? If I have, a $15 wide that can be worth $15 and today it's only worth $8, do I hold out for the rest of that $15? And so when you put trades on like that are supposed to be, short delta offsetting some long portfolios, do you look for a percent, or do you look for a percent, or are you holding out for max profit?
I would try to make this as quantitative as possible if I had those trades on. So in my own trading, what do I look for? If I use the P50 number, the probability of making 50%, so I just go down my list of positions in that column and I say, what's at a 50% profit or close to a 50% profit or whatever. Do I know what's going on in the stock or the market? Nope. All I see is that P50 number. Okay. So it makes it simple for me. And that's why I can manage 60, 70 symbols. Okay. I think I would approach a hedge like a diagonal, like a collar in the same way. So I would treat it as a trade.
Just treat it as a trade. Don't about the
Do I have 50% profit on it, Jen? Take it off.
Yeah.
And move on to the next one.
Because I find people, like, when you don't take them off and you leave them, it's kind of like, when you talk about POP and we say probability of profit, that doesn't mean at expiration. That means at some point in the cycle, right? At some point in the cycle.
So the P50 number. So let's actually, John, let's go into Intel options and let's talk about exactly what we mean by this.
All right, let's go in the platform.
Yeah, because you have Intel loaded up. I can see Jenny's screen. I have the double secret probation screen where I can see all the screens. So if you go into Intel and just pick an expiration, pick like the 58 days or whatever.
Sure.
And click on the 21 put. Sell the 21 put.
Okay.
So Let's go over a couple of numbers here and what they mean. On the far left-hand side, there's the POP, probability of profit, 74%. What does that mean? It means that in 58 days, there's a 74% probability that that short 21 put will have at least 1 penny of profit. Okay. So the break-even point on that is what, 2030?
Yeah.
Right? So there's about a 74% probability that the stock is going to be above 2030, 20.30. That's what POP is. In the middle, you have P50, 91%. That means that at any time in between now and 58 days, there's a 91% probability of making half of the max profit. Max profit is $70. Half of that's 35. I like nice round numbers. There's about a 90% probability of making $35 over the course of 58 days.
At some point in time.
Yes. And so that's a number I built a few years ago. And in building it and testing it and researching and all that stuff, you usually, I should say, don't have to wait 58 days to see that 50%. They tend to be bunched up on a 58-day option. They tend to be bunched up in the first 15 to 21 days. Okay. Which, by the way, coincides with the rule of, when you get closer to, let's say, in that 21-day window. Now, in 21 days, you're still going to have about 35 days to go on this put. But it matches up with the 21-day rule I know you and Liz implement, okay? But that's what that P50 number is. They're different formulas. They assume there's no directional bias in those numbers. They are strictly based on the volatility, days to expiration, things like that.
So my thinking is, and just from past experience, when you see a profit and you see 50%, take it, because chances are if you wait, you might not have any profit come in the end. And especially if someone's buying options, if they're buying options and those are low pop to begin with, you get something goes in your direction, something goes that way and you have a profit on it. I think it's a good point. Take it, because if you don't, it tends to it doesn't always come back. And I just know, so like triple Qs, I think we had, it was here, is this day here. So we had some downside diagonals or some downside protection. I had some downside puts. And this day I was like, whoa, these are a nice profit, but I'm going to leave them just in case we continue to fall. So they go from being a nice profitable trade, which was supposed to be a hedge, to being worthless when they expired. And I've seen this repeatedly through the years.
I've done the same thing. And any trader that says, I'd never do that, I would always take they're lying. Okay. We all have losing trades. Traders have losing trades. Okay. What I think I would suggest you take away from this, listening to our stories about this, is that don't think suddenly when you're, I'm trading Intel, I'm trading Qs, I'm trading Nvidia, whatever, and I'm going to use the probabilities and P50 and blah, 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 blah. That suddenly when you have a diagonal on and it has a profit on a sell-off and you decide to hang on to it, well, okay, you can decide that. But what it means is suddenly you're saying, hey, wait a second, I now am going to have a strong directional opinion about what the Qs are going to do. And and that becomes a different, so now you're managing positions differently than you would with your other trades. And that's what I think people have to be careful of. That's why I'd say hedge is a 4-letter word. Treat it as a trade.
Treat it
as a trade. Because Jenny, my account, I might care. I have an ego, right? So if I lose money in Qs, well, darn God, I'm going to get that money back in Qs. My account doesn't care. The money is green. If it comes from Qs, if it comes from Intel, if it comes from Tesla, if it comes from crude oil, if it comes from soybeans, my account doesn't care. It just wants green. Okay. So if I have a losing trade in Qs and I'm not trading the Qs well, and okay, fine. I take my ball and I go play somewhere else.
I like that. And I agree with that. And some people do have that ego and they want to make their money back in this one underlying. But I like that, find something else. Who cares if you have the loss? Who cares? Find another product.
Right.
Now we did have, so in Twitter, Jack JT came in and he said, here, I don't know about you, but I've been hedging. And he must have not realized you were back today because he said, I don't know about you ladies, but I've been hedging. He forgot Liz was gone again. But I've been hedging tech and adding some short calls against shares to reduce delta over the last few days. Also picked up some cheap long puts in some days that I hope skew works out for me. So again, to like there's people who have been doing this, the question always is, when do I close them? But to your point, maybe close some.
Well, that's great for JT. That's awesome. You sold some calls. The market sold off. You should be booking some profits on those short calls. Yeah, that's why people do it, right? And any trade can any strategy can have a profit at some point. All I'm saying is that if your mechanics are selling calls against your long stock, which is what Wall Street has been selling Americans for the past not 100 years, but since they invented calls back in the 1970s, sell calls against your stock, and old grandma can sell some calls against her Ma Bell telephone stock, and she can buy her grandkids Christmas gifts, things like that, right? That's the traditional way of thinking of short calls. I would rather and I would say this to JT too, treat them as trades. Okay, you're long tech stocks. Awesome, great. I hope they rally. I hope JT makes $1 million on these long tech stocks. But the point is, treat those short calls and those long puts as trades. They're trades. Take them off with max 50. Have a plan for them. Don't just sit there and thinking, well, gee, I'm holding these as a hedge against my long stock. Because trust me, short calls don't hedge that much.
You're right. Have a plan. When you put on a trade, I think that's a good takeaway. When you place a trade, have an exit plan for that trade.
Yeah, exactly. Who else do we have on here on Twitter?
Well, we have a lot on Twitter, but we also have a study from Jacob. And I know we had some questions that came in from viewers as well. And so, TP, I saw...
yeah.
So a viewer had sent a question about VIX and volatility, and I feel like Jacob's study is going to be helpful. Actually, we can get into the study, but I want to read this question just because I think this is going to be helpful to him. So he says, I observed that most traders of SPX 0DT tend to adopt an iron condor strategy, keeping delta neutral or slightly directional depending on volume and out of the money skew despite IV rank. However, if IV rank is low, I believe a call butterfly strategy may be more suitable as it anticipates an increase in volatility. So he's asking about that, and here we're looking at the VIX one day and we're looking at the 0DTE and talking about volatility. So I'm curious to see what this study will say, and then we could take a look at what he's talking about and maybe look.
So let's go through the study and see what it's about, and then we can address that question specifically because it is a very subtle question. Okay.
And I think it's something that we could forward on to Jacob, and Jacob could do some studies on a call butterfly.
Sure.
In the 0DTE when vol is low, so we'll see. But okay, here we have looking at VIX 1D for 0DTE decisions. Okay, and I'm going to read this to you, TP, since
my hearing is marginally better than my eyesight.
So the VIX amalgamates 30-day option prices to give a crucial statistic for option traders, representing an overall level of premium richness. For example, traders might view higher than usual VIX levels as highlighting potential opportunities to sell premium. The VIX 1D follows an identical procedure, but using 0 and 1 DT options. Can analyzing the VIX 1D, especially when paired with the VIX, assist in identifying promising opportunities for 0 DTE trades? And I know there's been a lot of talk lately about the VIX 1D, and I'm just going to show people. It's actually, you can just type this in, like VIX 1D, and it says SIBO S&P 500 one-day volatility index.
It's cheap.
It's low. It's been low.
Yeah, right.
It's been low. And do you ever use this when you're looking at trades?
Not really. Not really. It's and there's all right. I don't want to. Let's talk about it after the segment.
Right, back to the segment.
I could go on for 2 hours about the VIX. Don't ask me, Jenny. You know better than that. Do not ask me questions about volatility.
Well, that's why I'm glad you're on for this study. So here's the study using over 2 years of data in 0 DT SPX options collected every 10 minutes. Considered 3 short premium strategy mechanic pairs. $10 wide iron flies, which that's what you've been doing, right? $10 wide iron flies.
Iron flies. Yes.
And Liz has been doing these. A lot of people have been doing these. $10 wide iron flies closed at 10% of max profit. $20 wide iron condors with the short 40 delta closed at 25% max profit, or $20 wide iron condors with the short 20 delta closed at 35% of max profit. Compared results looking at the opening VIX 1D and comparing it to either the opening VIX or the previous opens VIX 1D. All trades were assumed to exercise at mid-price, entered at 9 a.m. Chicago time, and losers were held through expiration. So this is looking at the results and looking at where the VIX 1D was, and at the opening 1D and the previous VIX 1D. So we'll see if this makes a difference in profits.
Mm-hmm.
Because a lot of people have been liking using this extra information and helping them make their decisions. All right, so what do we have here? What jumps out at you when you take a look at this? Can you see this okay, TP?
Yes, I can. Thank you, Jen. So, yeah, the way to sort this information out, focus first on the win percent numbers. In other words, how many times was this trade profitable over the past 2 years? So overall, 69%. And what Jacob found is that when the VIX one day was higher than the VIX, so that when Jenny pulled up that VIX 1D and compared it to the just plain VIX, when the VIX one day was higher, the win rate was 81%. When it was lower, it drops down to 69%. When the VIX one day was up from the last open, in other words, when the VIX one day ticked up in the morning, the win rate was 69%. When the VIX one day was down from last open, the win rate was 70%. These numbers are the same.
Except for when the VIX 1D was greater than the VIX.
But that is a marginal distinction when you're talking about trading. In practice, 7 out of 10 winners versus 8 out of 10 winners, yeah, over time it can make a difference. But in practice, and because I have no idea what the VIX is going to do next month, over the past 2 years, the VIX has been relatively low. Yeah, we've had some spikes. But if the VIX suddenly settles up in the 30% range for whatever reason, right? Let's just say it does. It hasn't ever in the past, but let's say it does. It might change these numbers. So my point is, don't get too cute in analyzing this stuff. Don't say, oh, I will only do this trade when the VIX one day is greater than the VIX.
Because that might not be very often.
It might not be very often, Jen. And the 19% of the time when you lose on those trades might be so big that you struggle to maintain profitability. That's the point.
But look at the average P&L. The reason I say it might not be that often, I mean, look at the average P&L on that one. It's like so much higher than the others.
Yeah, it can be about 2.5 times bigger. Yeah, no, it's great. And the 2.5 times does offset it, right?
So let's say it doesn't happen that often and you still want to put this trade on all the time, but maybe you keep an eye on it because maybe, let's say your normal size is a 1 lot or 2 lot and you're trading, or you're Jack Tucker and you're trading 40. But then you see a day where the VIX one day is greater than the VIX. Maybe that's a day where you increase your size a little bit.
Yes, Jenny, I think that is exactly the right approach. To me, because the probability of making money on these trades is so consistently high, and I'm making decent profits, 50, 60 bucks every day on a relatively low buying power requirement, the return on capital is pretty high in these things.
Mm-hmm.
I would do this, so I'm doing 1 lots, right, every day, but I might do 2 or 3 if I want to roll the dice when the VIX one day is greater than the VIX. In other words, it's a tell, right? It's like counting cards in blackjack. Oh, there's a lot of tens in the deck. I'm going to bet this way, right? So that's how I would use this information.
Yeah, I like it, and I like that Jacob takes the time to do these studies because we always get some kind of takeaway.
Mm-hmm.
Okay, the next is taking a look at 40 Delta Iron Condors. 40 Delta Iron Condors, 25% profit target. And you could see the CVAR on these. So I can't remember how wide these were. Maybe they were $20 wide. If you've got a CVAR of 1,200, 1,1200, maybe they were $20 wide.
Yeah, something like that.
40 Delta, they've got to be.
And you can go back. These slides will be posted for later viewing. But again, here is even more extreme. The win percentages are even tighter on these things. Mm. Where the VIX 1D has a relatively low impact on the probability of making profits. And like I have always said, the volatility doesn't lie. Whatever the volatility says the market's going to trade with, it usually does. And that's what these numbers reflect. Again, just like the iron flies, these iron condors, you see about 3 times bigger profits when the VIX one day is greater than the VIX. So that little tell, Jenny, same thing. Maybe increase your size, maybe double your size. Maybe. That's a decision you have to make yourself.
And then here we have the 20 Delta Iron Condors, and again, when you're selling 20 Delta, in the original one, you've got the Iron Fly, so you're selling the 50 Delta. Then you're shorting the 40 Delta, which is tight. When you're going all the way out to 20 Delta, of course, you're going to have a much higher win rate because this is a much higher pop trade when you place the trade.
Yeah, and you're going to be holding these 0 DTE Iron Condors with 20 Delta wings for a longer period during that day. In other words, you're not going to be taking these off in an hour and a half at a 35% profit. I'm going to bet most of these were held through expiration to get that P&L or close to it.
You see he's got a 35% profit target. 35% profit target. So it either closes for 35% or it doesn't close at all.
Right.
Or you let it go.
Right. And I think so those far out of the money options, the market makers don't necessarily tighten those options up because not that many people are trading them. As you approach expiration, those far out of the money things, they tend to widen out a little bit. So the theoretical P&L you might generate on those, you might not actually be able to execute out of those. I'm just telling you. So that's why I'm thinking a lot of these are taken through expiration. Look, though, at your average P&Ls, very small.
Mm-hmm, very small.
Okay.
Very small.
You don't make a lot of money on iron condors with 0 DTEs. And 20 deltas, that's really far out of the money. Okay.
But this is similar to like Jack Tucker. I think even Jack Tucker's putting his on, he's starting around 20, 25 delta.
Maybe, and you got to do a lot of them, right? To pay the bills. If you're making on average $20, and that's great. $20 is better not having $20. But compared to the risk you're taking and the capital you're using up, and then add in the execution costs, commissions and stuff like that, I think it's harder to make money on these really wide iron condors, especially taken off for 35% profit. You may have to take them off for a little bit bigger profit.
So lately, even Jacob, you, Liz, Jacob, everyone's been leaning towards those iron flies because you've got a very, very low risk, a nice average P&L, and a decent win percent. And that's what people have been gravitating towards.
Yeah, and I just put them on. They may be they might be about 5% of my trading or less. Or they're using up a very small amount of capital in my account. I love those trades because they're fun and okay, well, I'll do it. And again, if the VIX goes up to 25 or 35 or something, then I might try a little wider iron condors. But they're great at getting people engaged in markets. Jenny, like we were talking about yesterday, active trading versus over trading, using these 0 DTE iron butterfly. What the hell is that? You guys are too complicated. You guys don't make any sense. I don't know what that is. Okay, don't worry about the name. Don't worry about the volatility. Find if you understand, if you can see where the index price is and see where the closest strike price is that matches that index price, click the bid on the call, click the bid on the put, go 10 points lower, 10 points higher, click on the ask price of the out of the money put, ask price of the out of the money call. There's this thing, and then see what price it is. And if you sell it, and if the price is $7.50, what's 10% of that? 75. So I take $7.50 minus 75 is $6.75. I put in a bid to buy it back.
And I'm going to show you what TP is talking about because it's funny, as Liz's son was leaving for college, she had to keep going over this with him because he's going out on his own. But this is exactly what she would say. If we're trading 63.79, go closest to that. 63.80, you click the bid here, you click the bid here, and to go move it 10 strikes, $10. So 63.80 to 63.70, click the ask, go up $10, 63.80 to 63.90, click the ask, and there you go.
8.55. The other thing too, the nice thing about this is it gives you practice executing orders in a slightly more difficult product. Okay. SPX, the markets are wider than the SPY. I'm just saying I think this is a good beginner strategy.
I agree. I agree with that. Although in SPX, you fall under the pattern day trading rules. So if a beginner doesn't have enough money in their account, but again, that's all changing. That is all changing, but it hasn't changed yet. It hasn't changed yet.
Hopefully changing.
Yes.
Okay. Hopefully changing.
So for people who have smaller accounts right now, and right now it's under 25,000, hopefully it's going to become under 2,000. But for now, he's doing them in ES, and it's the same. It's almost the same. It's almost the same because here a $10 wide is $5 wide, so you really have to make it. There's a 50% multiplier here, so you have to make it $20 wide.
Yeah, and the trick with the ES is you can it is futures settled. SPX is cash settled. So you can actually end up with a long or short future in your account if you just let this go through expiration.
You have to close it, right? For people who want to and this is why the pattern day trading rule needs to go, because SPX is easy, it's simple, it's cash settled. And for small accounts, they can put on these trades, low risk, and it's cash settled. But now people with small accounts are forced to use ES, and this settles to a future. And so you've got people with small accounts.
Jenny, this is so anti-retail trader. This whole pattern day trading rule, the whole thing, well, you can do it with futures, but you can't do it with cash settled options. It's just so anti-retail trader. I hate it.
It's so dumb, but fingers crossed, we have a very short amount of time to wait for hopefully it to be gone. And kudos to the team, the Tasty team that has been working so hard to eliminate it. And I know I've seen them go, Scott going to fight for it and JJ fighting for it. We've seen them all fighting for it. So hopefully it's happening.
All right. So what's the conclusion of the study?
Okay, so back to the study, the final takeaway. While we recently hit upon the surprising result that higher IVR levels were not correlated with better 0DT, and that was last week, TP. Higher IVR levels did not reap better results. The VIX 1D is still a promising tool for 0DT traders, with strategies and mechanics considered. VIX 1D being higher than VIX at open or higher than its previous open were both positive indicators for 0DT success. And again, that's you have a higher average P&L, a higher pop, but how often does that happen? That's why I don't think you can only put it on then, but I think maybe you want to size up then if you want to.
So the important takeaway with this is, and this is what Jacob does really well, he validates what you and Liz and I have been doing for 20, 30 years. Okay. So this doesn't necessarily change the way I trade. It just says, what I have been experiencing in my own trading history is validated mathematically. That's what this stuff does. Like I was saying, going in and only doing this type of trade when the VIX is a little bit higher, be careful doing that, because you need the trade small, trade often repetitions to make this kind of strategy work over time.
Well, and if you look at this, TP, because again, and VIX 1D, okay, so we look at this chart, and here we have it 10, 12, 13. It's very, very, very rarely right? Higher than the VIX, I'm guessing. I don't know. I would like to see a chart of how often this VIX 1D is higher than the VIX.
Yeah. I mean, the point is that whatever the VIX 1 day is, whatever the VIX is, that is the market's estimation of what the future volatility of the index will be. If you think that 10.12 is low or wrong, okay, no, that's stupid. It should be 15. It should be 20. You're arguing against the tens of thousands of people who are buying and selling SPX options, because the VIX 1 day and the VIX, those are derived directly off of SPX option prices. There's no model. One of the things I want to emphasize to folks is there's no theoretical pricing model in these calculations, because if you did that, you would get a different VIX, whether you choose Black-Scholes or binomial or Bjerkson or whatever. So they took the model out. This is in hedge fund or the prop trading firm world, a variance swap, okay, that just looks at a ratio of the out of the money calls, out of the money puts, distills them down into a single volatility number. You can code this in yourself. You go into a spreadsheet or in Python or something, you can do it yourself. It's not that hard a formula to do, but the important thing to realize is this is derived from option prices, SPX option prices, and it is the market's best estimate of what the volatility of the SPX will be in 1 day for the VIX 1 day or 30 days for the VIX.
And then I will read the final takeaway. Consistently selling 0DT premium and quickly capturing profits has proven successful, and seeking elevated VIX 1D levels can uncover particularly attractive opportunities. So again, not saying not to do it if the VIX 1 day isn't above the VIX, but just My takeaway is if I'm doing a 1 lot every day, maybe I'll do a 2 lot on those days.
That's exactly right. Because as traders, we have to use this information and apply it in how we can make some money. Okay. To me, this is all wonderful information. Or listening to the news, oh, that's nice. It's whatever, interesting, blah, blah, blah. But I need it to pay. I need to make money from this. And like Jenny and I were saying, you got to do this every single day.
So
I think.
Yeah, I agree. I'm going back to that question about butterflies.
Yeah. Okay.
If IV rank is low, then this comes from a viewer. If IV rank is low, I believe a call butterfly strategy may be more suitable as it anticipates an increase in volatility. But if you're trading the 0 DTE, you're not necessarily anticipating an increase in volatility that day.
Yeah, and one of the things is, yes, an increase in volatility does increase option prices. Yes, that is true. But it depends on the option's vega, the option's sensitivity to a change in volatility. And the 0 DTE options have very, very low vega. So the volatility has to increase a lot for them to make a dent in these prices. Now, one of the things I want people to realize is that butterflies are directional trades. Right now with the SPX at 63.75, you loaded up the 80, 90, 400 call butterfly. That is a bet, or I should say that trade will maximize its profits if the SPX settles at 63.90 this afternoon. Okay. So it is a directional trade. What happens is when volatility is very low. So now do this. Everybody remember $1.55. Okay. Remember $1.55. Now drag those strikes down and let's look at the 65, 75, 85 butterfly.
And
right?
This is the exact same trade as the iron fly. So what I want people to know is this is the exact same trade as the iron fly. It's basically
synthetically, yes.
Iron fly synthetically, and you're just picking your strike where you want it to pass by after hours pass, right? Hours pass, and you want it to pass by that strike, or you think it'll pass by that strike. It's
right. Right. Now it's that this butterfly is slightly higher. It's a little bit higher. Okay. So. And now do this. Now, Jen, go up to like the 6400, 6410, 6420. Drag it way out of there. Okay, that's 55. It's about a third of the price. All right, why do I want you to look at this? Butterflies are a roulette wheel type of trade. You want to pick the winning butterfly is where the index will be at 3 o'clock this afternoon, because the probability with volatility low, the probability of the SPX going from 63.73 up to 64.10 is low. That's why that butterfly, that 10-point butterfly, is only 50 cents. And the further out of the money you get, the less likely it is that the index is going to get to that middle strike, so the cheaper the butterfly. Simple as that. If volatility were higher, that 6400, 6410, 6420 butterfly might be worth 75 cents. Okay, because there's a greater probability that the index will go up to that price. So it's not that if the volatility is low, I should buy these out of the money butterflies. You can, they're cheap, but the odds of making money on them are very low. Okay.
I think if you're directional, if you think, oh, maybe we'll hop up today, you might, they're a directional play. I think they're a directional play. And I might break the wing to not pay so much, because if you're wrong, you're out whatever you paid for it.
So remember, volatility is usually right. Okay. So volatility, whatever it is right now with the, and what I do, by the way, when you say, hey TP, do you look at the VIX one day? Well, what I really do is I look at the SPX, our IVX number over on the right hand side, and that gives me a good idea where the volatility is. But even that, I look at price more than anything. How much credit am I getting for these iron condors? How much credit am I getting for these iron butterflies? I look at price because I pay my bills in dollars. I don't pay them in percents. Okay. So I need to make X number of dollars on a trade every single day. So my point is that the VIX information, very informative. It is a piece of information that I plug in, but it is not the whole story.
And just so people know, like the VIX is, and you mentioned this, VIX is derived from these prices. Now, right now, where's VIX? 18? Is it up to 18? 17? It's 6. Oh, it's 16. Not even. I thought maybe it got a little higher today. I thought it got, how high did we get today? 1719 is the high. But anyway, we're looking at these. The VIX is 1667, and SPX, you look at the side here, and the VIX is calculating which SPX cycles here.
So the VIX,
right? What cycles is giving that?
Is the Septembers and the Octobers.
Okay.
So what the VIX is it is a rolling weighted average between around 30 days, right? So it picks the expiration, right before 30 days and the expiration after 30. In other words, the normal cycles, right? And they might use the weeklies. I forget exactly what they do, but it is they wrap it around 30 days so that they do a time-weighted average of the SPX options and the expirations both before and after 30 days. So if they're using the weeklies, they could just use the 30 days right now, and you're going to get basically the same information.
So you don't need to look at the VIX necessarily. You can just look here and see.
What these numbers are, when I added these to the platform, these are per expiration VIX. So the VIX is, like I said, that weighted average of the out of the money SPX options. Okay.
And you focus on that. You focus more on this when you're looking at it to place the trade.
Yeah, and the reason is that the VIX does a time weighted average to give me a 30-day. What those numbers are is the VIX applied to that expirations options. Okay, there's no time waiting in those. So when you look at the 6 day options and it shows 13.9, that's the VIX calculation based on those 6 day options. That's all it is. And then what I did, I added it to everything. The VIX, you don't have to, the variance swap calculation works for any option. So if I go into Apple, you'll see the same thing in Apple. Type in Apple. And you see those numbers. So if you go into the SEP 19 expiration, you see 27.4. That is the VIX formula applied to those 30 DTE Apple options. That's what that 27.4 number is.
All right, that was good. I think that might clear that up for some people. And I don't, 10:55, we have 5 minutes. I'm just going to go top down to make sure we get to people. Oh, here's Mikey, our Polish warrior.
Bill.
LOL. I love you, Tom Preston. We are similar age, so I know you had a phone like this.
Oh, yeah. 100%. And it was black. And by the way, we only had one phone. So, like, when we were all teenagers, it was like, get off the phone. Blah, 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 blah. You've been talking to that girl for too long. Blah, blah, blah. Or talking to that boy. Blah, blah, blah. You can talk to your friends when you see them tomorrow. That was that was what I heard. Probably the most often phrase that I heard from my mom. So the other my mother and grandmother used to spend hours talking to their sisters and blah, 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 whatever. And my brother would call them the Ma Bell All-Stars. The Ma Bell All-Stars, because they would spend hours on the phone talking to their old lady friends. Anyway.
That's
No, but the Polish were absolutely. We had a phone exactly like that.
My grandma had, it was in my grandma's house, not in our house, but in my grandma's house, and she had her scheduled times. It would be like Saturday from 9 to 10, she's talking to Valeria, and then on Monday from noon to 1, she's talking to Aunt Lucy. Like she had her scheduled times for when they were all going to talk.
Yeah. And, Jenny, Mike and I had what we called phone books when we were young.
Yeah, I remember. I was born in the 70s, TP. I remember phone books. All right, so what is the part of our brain doing now that used to memorize phone numbers? Hopefully, we're using that part of our brain trading.
Oh, well, no, you know what they used to do? You know what they used to do when I thought out in like Philadelphia and stuff like that is they used to come up with Hilltop 90454. So you used to come up with a little words that would correspond with the numbers on the dial.
Yeah.
So it's like, Hilltop 5492 or whatever it was.
Cute. Ashvin, we need TP on with Liz and Jenny more often. Oh, TP, I tell TP all the time he's a fan favorite. Crowd favorite.
Well, thank you, Ash, and thank you, Jen, but there is no way I can replace either Liz or Jenny. And I don't want to come in between you guys.
I know we're working on something. We're working on something behind the scenes. We might have TP on once a week with us.
Well, yeah, because it's, because more and more people are watching our shows in general, and your and Liz's shows in specifically, that what I want to do is, sure, I can talk about variant swaps and all this crap, okay? I can go all day long with that stuff, but I think what we need to do is go back and address some of the more basic questions, really simple, short segments, to be able to to answer some more basic questions for new viewers.
Yeah, and so you're going to come on going back to basics a little bit. I've got Jacob working on some back to basics, 0 DTE studies for me, because we are getting a lot of new viewers, and that's great. That's great. We love our new viewers, and we love our old.
Love the old one. Love the old ones too.
All right, everybody. Thank you so much for watching. TP, thanks for joining me. Liz is not going to be back tomorrow. I have Glenn on tomorrow for the full hour. We're talking FX. Tune in, and I will see you all tomorrow. Remember to trade small, trade often. Laugh with us, learn with us, and watch the TP and J show. See you tomorrow.
Good morning, everyone, and welcome back to the show. This is Option Trading Concepts Live. My name is Nick Batista. Got my man, Mikey Butler, and of course, Mr. Thomas Westwater in the house with us today for our Thomas Tuesdays. And if you want to come join us, hop over to YouTube, type in Tasty Live, come to our channel, give us a like, and subscribe to our videos because that helps us immensely. But more importantly, just come chat with us live because we'll be taking questions throughout the show. Whatever you got questions on, from strategies, concepts, trade ideas, trade management, whatever. Just coming with us for the next hour of the day. My favorite hour of the day, I get to spend it with my buddies, Mike and Thomas. Thomas, good morning, sir. How are you?
I'm doing good. I'm a little congested. I think I got a little cold or something. It's weird in the summer, but maybe from the kids or something. But
this is where the tasty variant starts.
Yeah.
Yeah.
This is
I'm
zero.
I'm the vector.
Yeah.
COVID doesn't matter anymore, though.
Yeah.
That's done.
Yeah, I know. But around this time, I don't want to say start of fall, but coming soon. Like around this time, you get a couple people that are sick, and then it commingles, and then there's.
That's why I wipe down all my stuff every Monday.
I know, you're good with that. You're good.
Got to do it.
Yeah, we got rained out overnight, though.
Yeah, that's crazy.
Pretty wild.
That was wild.
I mean, he had like a mini tornado going on at his house.
Did you?
Yeah, we had like a microburst or something. I think like the flue vent for my furnace got messed up somehow because there's just water coming down into my furnace. So I had to stay up until the rain stopped at like 1 a.m. because I kept on having to mop it up and everything. I had to turn the power off to the unit.
Wow.
So if anyone out there, if you're a roofer or know anything about HVAC, message me because I'm going to be trying to look through all this myself later today or this week.
It's a common occurrence. We had Vecchio had because he had the branch that like fell on his.
Yeah.
That I think he got covered by insurance, which is good.
It's never ending.
Yeah, you just had to replace your HVAC.
Well, not yet. I didn't do it yet.
Oh, you haven't done it yet?
No, I got to do that.
You're just gonna.
I think it's just gonna go out in the winter
and then you'll just freeze.
Yeah.
Yeah.
Yeah. We'll see. I got to get someone to look at it for sure.
Yeah.
To let me know, like, do we have to replace this now, or can I just like fix a part and then extend it a couple of years?
Okay.
Yeah.
I usually go until it breaks. And then,
Yeah. Makes sense.
A lot of HVAC guys will be like, "Yeah, you need a new unit."
Yeah.
Oh yeah.
You should get it through me.
I'll be like, "Ooh."
Well, I'm gonna have to consult one of the maintenance guys in the building.
Yeah, and
We'll
see.
We'll have him look at it.
Mine is
fresh.
Well, no. It's running well. It's great, but it's I think it's like 15, 16 years old. So it's about that time.
In there.
It's
Gotta
getting
do the maintenance.
Yes.
Yeah, clean it out and stuff.
Yeah.
Yeah.
Very good. Well, crazy little market we got. A little bit of red.
It's crazy.
Does it scare you?
Not really.
No. This is just par for the course.
I mean, Vol's like not moving. So until Vol moves, which will happen on a bigger downside move.
Mm-hmm.
Big move in Bitcoin.
Yes.
But yeah, 27 points in the E-minis.
Nothing. Just a little paper cut.
Just a day off. That's what it is.
I'll give a quick little market update. We got E-minis down 28. It's the low of the session here. They've had about a 30 or 40 point intraday range. I know yesterday was the tightest intraday range since March of 2024. So it's been over a full year. That was the tightest range yesterday. Giving it up a little bit, down 28 here. We're sitting around that 64.50-ish mark. We're at 64.40 right now. NASDAQ down 250. It's the weakest of the group, down a little over 1%. A couple big moves underneath the surface. You got Meta over the last 2 days, down like 30, 40 handles. Nvidia as well, down $4 and change. Some of the other chip stocks like AVGO down $8, and I closed out that call spread we did last week.
Same.
You did that too. Palantir, another one that's kind of just been ripping faces off to the upside, down $10. Even some of like the secondary ones like Reddit, I saw was down $8, $9, $10 at one point today. So definitely a little bit of weakness in those high-flying tech names. The Dow basically unchanged right now. I know Home Depot had earnings. That's kind of holding it up a little bit, as well as UNH, which had a good move over the last couple sessions. It's now down $7, but that probably helps as well here. The Russell down 14, so the Russell and the NASDAQ really the weakest of the group today. Oil selling off a bit, /CL 61.99. It's had about a $1-ish intraday range today. Has been weak over the last 2 weeks or so. Volatility futures actually up about 31 ticks here. 1826. You do have the vol roll that happened this morning, so volatility futures rolling to the night, or maybe it's after the close today. Vol futures roll today, so you are looking at a higher volatility here. Very steep contango still going out to the end of the year. Bonds up 13 ticks here. They've had some whippiness over the last couple sessions. They were in the 113 handle, now in the 114 handle, so they've rallied from the lows. You have gold down $11, $12 here. It's had some sideways action, some nice vol contraction. That iron condor that we put on last week, I took a couple bucks out of that one today. Vol coming in, couple days of sideways action. It was a perfect kind of situation for that trade. Silver as well, down 60 cents, and as Mikey alluded to, Bitcoin down $2,700 on the futures. Spot down $1,300. With Ethereum down $35 as well. It certainly feels like a little bit of a risk-off session here. You have JPOW later this week. Nvidia, I think earnings Tuesday of next week. if I have that correct. That's kind of the other big event, the 27th
I
after
think
the
that's
close. Wednesday of next week.
Yeah.
So maybe that has something to do with it, a little bit of a haircut from the highs, but you think it's all JPOW driven?
Yeah, I mean, he talks on Friday or Saturday. Is it? I think it's Friday. Yeah. Jackson Hole weekend.
Ooh.
That's the one that's closed door, though.
Yeah.
I think
And
so.
then they
That's the
put
Fed Rager, the Jackson Hole.
Oh yeah, where we talk about like what they're ordering for lunch.
Yeah.
Do they fly something like really good in for lunch?
They just net jet everyone in.
Yeah.
And it's just a big thing.
Oh, it does look like he is speaking from Jackson Hole. So at 10 a.m., 9 a.m. our time on Friday. So.
Did you guys get an invite or?
No.
Not this time.
No, not yet. Not yet.
Maybe next year.
Yeah. It is a good gig, though. It seems like, Yellen's doing good. You do the speaking engagements, like half a mil an hour or something like that.
Sure, yeah.
Right.
You say a couple things at like a commencement ceremony.
Just throw it in ChatGPT.
Yeah.
Read it off.
Seems like a pretty
It always boggles my mind how much they get paid just to speak for like 30 minutes. Like.
The deep pockets for some of these endowments and such.
Yeah.
Maybe that's the problem.
There's a lot of problems. But I'm sure it's going to be a grand old time for everyone there.
Yes. I think we're looking at a little bit of just risk off. I think to your point, the volatility not, being super high.
Yeah.
Is kind of telling you to expect some chop.
Yeah.
But it is nice to see a little bit of like a pullback in some of those, like the Palantirs and the Reddits and the Nvidias. I mean, can't go up every single day.
Yeah, I'm long Palantir, so I'm not liking that. But
yeah. I mean, who knows? You could be back at 200 and this thing moves $5, $10 a session.
Right.
It's not like a shock. It is a funky psychology type thing of like, nobody bemoans the 10-point up move on no news of just, fervent buying. And then you get a 10-point down move, everybody's like freaking out,
That's how it works.
Yeah. My
That's
Twitter feed is just, it's
instant. Market's dead.
Yeah, it's instant. It's instant.
And then we're back at all-time highs in one day. Something interesting that is moving, though, is the FedWatch tool. Only an 85% chance now that we get a 25 basis point cut. So that's come down 15%.
Yeah.
They're pumping up that no-cut probability, which would be kind of wild, all things considered. That would be a surprise, obviously.
Yeah, and I mean, the market's moved down a little bit since hitting like the peak, dovishness.
It was almost 100%. Last week.
Yeah, I mean, like 95, which is essentially, when you look back at history, I think Vecchio has put out those stats before. It's a sure thing.
Yeah, of like over 65%, I think is the number, or 60%. They usually go that route.
Yeah.
You think there's going to be any surprise?
There always could be, so.
Still got a month, too.
Just have to listen. Yeah, I mean, there's still maybe a jobs report. There's still inflation data, I think. So, yeah.
Lots of things could happen. But we'll see. We'll see how the market reacts here.
Quick little walk through some of the trades because I did a bunch this morning. Mike and I were both out yesterday. So I rolled to a calendar on my IBIT position. So I had the crab trade, rolled it to a calendar at the 70 strike, October, September. Basically a scratch at this point. Walmart and CRM are new trade ideas. Both have earnings this week. Those will be in the cherry picks as well, so you can see a little bit of my thoughts there. Close out that gold position, close out the Dow short put that we had. Bought in some risk on Palantir. I had that upside broken wing butterfly, so bought in the risk there in my Johnny Trader. Did that in Oracle as well, and then I closed out the AVGO call spread that we got from Fast Market last week.
Yeah.
Two sessions.
Yeah. And the AVGO, I was also trying to close Adobe. So both of these, Adobe and AVGO, both seeing moves in the right direction, but AVGO, like we both closed it for less than 50%, but you have to realize that this is in the earnings cycle still. So the tail premium in September is not going to go away until after earnings. So you have to accept less than 50% profit prior to earnings, unless you want to hold it through earnings.
Yeah.
Like that's just what it is. So still, it was like a 25-30% winner in a couple days. So it's ahead of the expected decay curve anyways.
Yeah.
But that's why I didn't keep it on. Same with you. It's just like you're not getting any more out of this until after earnings.
Yeah.
You might get 30-40 cents if it continues to sell off, but the tail premium is going to stay bid until post earnings.
Yeah. It's uncommon for, a call spread to move 75 cents, $1 in just a couple sessions.
Yeah.
I hate to overthink these things. Like I think everybody gets caught up in the exact 50% or 21 days or whatever. Sometimes you want to book a winner. It feels good. Take some risk off the table. But when somebody moves so fast, it's pretty easy to just kind of cycle through that and then look for something else, something new. If you have new ideas, please post them in the chat for us.
Yeah.
I'll take them.
Speaking of the chat, I've got the Cherry Picks newsletter link in there.
Thank you.
Get that for free. Comes out today.
I'll go out later this session. And also, we will be hosting the show tomorrow.
Indeed. And Thursday.
And Thursday. But tomorrow is What's Your Assumption? So if you want to pitch some trades, you can do that at tastylive.com/assumptions. You can make them a little spicy.
We're yes men. We will say yes.
I think we did all 10.
We did do all 10.
Yeah.
So we won't poo-poo your trade idea.
No.
Unless we're already in it. That's really the only case.
As long as it's liquid.
Yeah.
Tom says that too, but Tom poo-poos some of them. We won't. As long as it's liquid, we're game.
Yeah.
Let the probabilities play out.
Yeah. So give us those trade ideas.
Yes.
But yeah, lots moving in the futures market. We're talking crude oil today and the prompt spread.
Ooh, okay.
Something new, something fresh. I'm already in micro crude just with a long contract, but
yeah, I've got an iron condor in CL.
Yeah,
that is closer at the money on the put side. I might just close this call spread.
But maybe we'll make an adjustment after the slides today.
Cool.
Yeah. I mean, I also put on a iron condor, so playing for some range with a little bit of give, Right. So we'll walk through the slides, talk about how the market is doing.
Sweet.
A few notables. We got this ceasefire talks going on. Trump, European leaders, Putin hasn't said if he'll meet Zelensky yet. Seems like, some people are getting a little too optimistic about this ceasefire or end to the war already. We really have to wait to see what Russia does. My assumption is that they're not going to jump right into it. They're going to let it grind out for a little longer.
No doubt.
I don't know. We'll see. Ukraine's asking for these security guarantees, like, a European-led coalition security force, something like that if Ukraine gets invaded again or Russian aggression, and then supported by the U.S., which sounds like providing maybe air support or intelligence along with weapons deals and stuff. But the market's been selling off on it. I mean, geopolitical risk has been coming down. We'll be talking about the prompt spread. So, just since the start of August, we've lost around 50 cents in the prompt spread. So that backwardation has gone from near $1 to right now down around 48 cents. In the prompt spread, it's the difference between the current contract and the next month or the next active contract. And, that's the difference between them. When you're backwardated, higher prices in the front end means usually demand is, outpacing supply, things like that. So this model is just looking back to like 1997 or 98, and it's seeing what is the correlation between where the prompt spread is at and where oil prices are at. So, according to this linear regression, with a prompt spread of 50, you're going to be more near a $70 per barrel oil price instead of where we're at right now, which is right around 61, 62.
Yeah.
So, just taking that at face value, you'd assume there's upside in the price of oil. However, the prompt spread has been decreasing, and it's done that for 2 months now. So it looks like the outlook for the supply dynamic in the market is that we're going to get a more balanced market, or maybe even go into surplus. There's two big forecasters, OPEC, the EIA. There's the IEA too, but it's a little less relevant. Still, people cite it and stuff. But OPEC is forecasting demand growth of still 1.3 million barrels per day for this year. The EIA is a lot more modest. They're forecasting 800,000 barrels per day of growth. So EIA sees a surplus going into next year. OPEC still forecasting a pretty strong market. I mean, you cut the difference and you go with maybe a million, 1.1. You're still getting a pretty balanced oil market going into next year. And, my take on it is we're not going to see any huge increase in oil prices, nothing to like 80 or something like that. However, we're already down quite a bit. We're trading right above 60. In July, we were up trading at 70. Back in June, we were trading almost near 80.
Yeah.
So we've had this steady decline. We're past the strong demand season now, where you're getting driving, you're getting power generation burn from oil. All that's over. The last few weeks, I see it as kind of a geopolitical premium coming out of the market now that Russian oil can come back into the global market. Right now, they're selling a lot of it to India. And Russia wants to put their oil back on the global market because they don't have to sell it at a discount anymore. Because India knows, hey, we're only one of the few places that has enough capacity to take in your oil, but you're going to give us a better price on it because we are the only buyer. It's just market economics, as everyone knows. The less buyers,
cheaper.
So all that considered, we could go to the next slide. This is just putting in a little bit easier to digest way. Prompt spread of 50. We're trading at 48. We've given up a little bit, but I think that slide disappeared there. I think it was 71.92 a barrel. If you're going back and assuming the linear regression going back to 96 or whatever, it's 72 a barrel. So trading around 62.
Based on where the prompt spread is now.
Yeah, based on where the prompt spread is now, assuming 50. Now it's at, since the show, it's 48, 47. But yeah, there we go. So 62.19 when I did this data this morning. I don't see this as where price is going to move up to come into correlation with that prompt spread. Since we've been declining in the prompt, markets are getting softer.
I was thinking that there's less downside given the move that we've had. So there's, we might not get to 72 again, but, 65, 66, something like that is probably more realistic than like a 55, 54 or something like that.
Exactly.
Where your risk is, is more to the upside.
Yeah, so right around 60, psychological level. In May, we broke above that from a multi-month low. We got these multiple intraday buying points at 60. So we haven't tested that level since May 30th. We're coming close to it, another $1.92. But that's kind of where I'm putting on my trade, 59.5 for the Iron Condor, giving myself a little bit more upside. Room on the upside. So I think we, range trade bounce around here. Pretty much my view is 60 to 68, keeping in there. Say these talks fall apart, maybe we get some premium coming back in, go up to around 64 to 68. It's hard to say, it's hard to forecast exactly what's going to happen, especially when you're basing on individual decisions, which is Putin, making what he wants to do, et cetera. So right now the market may be being a little bit overconfident in this deal. But that said, I just wanted to show one other slide. This is pretty interesting if we go to slide 3. So August 15th.
I think we'll get it up in a second. I think there we
go. Yeah, let's go to slide 3.
There we go.
All right, so this is pretty interesting. Hurricane season started, June or something. However, there's something called peak hurricane season, where historically, you get these violent hurricanes, these category 4s, 5s that impact the Gulf Coast. And historically, they're from August 15th to like the end of September-ish, early October. But this chart shows you the OVX premium or the volatility premium during hurricane season. Mm-hmm. If we look at 2008 to 2024, you don't get that premium. The same thing, or you get a little premium if you take out 2020. And then if you do peak season, going back to 2017, the OVX during hurricane season is 37.11, non-hurricane 36, and that's based versus an average of 36.46. Okay. So, higher OVX typically, not necessarily lower prices, but bigger moves in it based on the OVX. So we're in it now. We see this, hurricane off the East Coast. That one's not going to affect all the Gulf Coast refiners. A third of refining capacity in the U.S. is concentrated in those Gulf states. So when you get a hurricane even threatening the Gulf Coast, not even hitting it, that usually bakes in a 5 to 10% premium in the OVX, which could change the price of oil by, I think, $2 to $2.50. So just be cognizant of, watching these weather models, being ahead of them before everyone knows, before they're on CBS and everything, and trading based off of that you can get a little more volatility in this season for the next month or so.
OVX currently at 33.35, so it's certainly low.
So we're underpriced right now.
Well under there.
Yeah. So you get these models starting to show maybe there's a significant hurricane in the Gulf Coast.
Yeah.
You get more volatility.
But I would think that would be upside volatility.
You go up in prices because you're taking all that refining capacity offline.
Yes.
The offshore oil rigs, they have to shut down because it's a safety issue. You don't want people on them. You get export lanes being blocked. You get all kinds of problems. But yeah, that's what I got. I'm going with an Iron Condor. Playing this with a little bit more upside room.
Yeah, closer at the money put spread. I'm with you. I'm wrapped around there. I actually went with my my current position that's wrapped around the 59 handle. I actually widened it out a half point, so $500. I did that for an 80-cent credit on the downside. So I'm synthetically buying a little bit of extra delta here into this move lower. Very small, and then I'm also trying to close the call side for a couple ticks, like 3 ticks at $30-ish. So I'll do the whole thing for like a 5-cent adjustment, but leaning a little bit long, but again, kind of playing into the sideways / up thought process here.
Yeah. I'm in at these levels too. I've got the micro crude contract at like 64-ish, so just leaning long.
Any of the other, some of the things that have stuck out to me because I have a lot of positions on it, some of the grains and the ags, corn, wheat, soybeans, all look not great.
Yeah, not too great today. I am long soybeans and corn. For corn, I have a put spread, 390, 400. So, trading 403. I'll keep it for now. Kind of not happy or not sad about it. Soybeans, I have a call spread.
Okay.
It's been doing pretty good up until today.
Yeah.
But definitely some people taking their positions off in the grains today. Mm-hmm. And then we got wheat down. Yeah, all the ags moving in coordination today.
Yeah.
Live cattle, we're still going up. I'm still long live cattle with a put spread at 225, 226.
It's like a meme stock. I didn't know we could meme living animals.
Right. And we are near resistance for breaking out again in live cattle. So
I've been seeing stuff on Twitter too of like
get your live cattle while it's hot.
There's like commentary on live cattle and just beef prices in general. Like,
yeah, you don't usually see that.
It's a new phenomenon.
Yeah,
for sure.
Yeah, we have the high at 232.75 from August 7th. We are really close to that now. We are, almost closing, like 10 cents away from closing at a record high here.
Yeah.
And the screw worm is still advancing. They are flying north. So
they are genetically modified.
Right.
Like whatever they were trying to do with those to make the non-reproducing.
The anti-screw worms?
Yeah.
No, they were the sterile ones.
The sterile. Our sterile screw worms didn't do their job.
Yeah, that's sad. They're not working, but it's good for my position.
Yes.
If this screw worm gets into the U.S., I've seen some forecasters say live cattle at 300, things like that. That's pretty crazy. I'm not sure about that, but if it gets into the U.S., definitely like 250, maybe above that. So I think this is a trade where the tail risk really benefits a long position, because if these flies do, still a small chance, but growing chance.
And the reaction is obviously.
Yeah. And then you get panic. You get all these ranchers, doing crazy stuff. You get a demand surge because everyone wants to get their cattle out before these flies get into their cows.
That'd be great. And 30% increase in already expensive beef.
Yeah. We've been going to pork more at the house.
Wow.
So
times are changing.
It's pork chops every night.
Pork chops are great though. Underrated.
They are great.
If you can do a pork chop good, which most people can, it's a lean meat. It's easy to dry out. If you get it at a restaurant, 9 out of 10 times it's going to be dry. But
pork loin too. You get like the ones that are like pre-marinated and stuff.
Yeah, those are good. Rosemary. All
Costco probably got all that stuff for you, Mr. Costco boy.
I'm going there today.
Is there Tuesday Costco day? Do you have that like on the calendar? It's Costco day. No, it's just whenever you need.
Just running out of stuff.
That's fair.
I also think lean hogs is maybe good for iron condor here. You got decent volatility. It's in the middle of its range that it's traded from the July low to the August high, so that might be a good trade.
Beautiful. So we're all long crude oil in some way, shape or form.
Neutral long.
But yeah, interesting to see some of these other products moving. I need corn to move higher. I need wheat to move higher.
Yes.
And I need natty gas to move higher. I need crude to move higher.
Yeah.
Everything.
What's the deal with natty gas? I got long another one of the micros this morning. I scalped out of it last week.
Okay.
I just got another one today.
Natty gas is killing me.
This is a tough one.
It's the weather models have gotten even colder for the Northeast, and now into the Midwest for into early September. It's looking like really mild. It's just horrible.
Great for football season though.
Yeah, and good for us in general.
Just our sanity.
Freezing.
Yeah,
that is good. But for the wallet, it's not as
for the micro natty gas contract. Not good.
Yeah.
Good stuff. Well, we can pop over to the YouTube chat now. See plenty of people in there. We got some HVAC people in there.
Yeah, that's good. You got
just find out your problems, toss it into ChatGPT or Grok, and you're good.
That's true. But that's no different than like YouTube.
Right.
I mean, right?
That's probably what I should do first. Is just type in my Nest Air thing on YouTube. There's probably a video out there.
I'm sure.
get this part for 17 cents and just plug it in.
You know, I went up on the roof in the rain and I put a garbage bag over the vent because I thought like the vent got stuck open, the flap for the wind. So I was up in the rain, lightning all around me. I put the garbage bag on, rubber bands around it, go in, still coming in. So I think it's like the where it meets the roof, the flaps.
Oh, okay. Like so it's got like a crack.
I go up there with caulk or something.
Yeah.
But yeah, message me if you know anything about this. I'd appreciate it.
Be safe up there, Thomas. All right, we need our Thomas Tuesdays.
I have life insurance.
Okay, good.
Yeah.
All right. Perfect.
Lovely. Yeah, crazy times in Chicago. Yeah, yesterday you could feel the electricity. It was like the hairs were rising on the arms type thing.
It was loud too.
Yeah.
Some of those were loud.
The earth is mad at us.
For releasing sterile screw worms.
Yeah.
That's why they're like, don't mess with my screw worms.
The anger of God.
Yeah.
All right. How about a trade for reversal in AMAT?
Oh, man.
I'm already in AMAT from earnings gone wrong.
Okay.
A 190 call, 60 days out. Trading for $130. Nothing to do there, but yeah, I mean, if you want to play for a reversal now, if you weren't in that trade, it's very cheap to do so from an IV perspective.
Yeah, IV rank at 2, bottom barrel.
Yeah, like a 165, 175 diagonal spread or a short put spread. The world is your oyster.
Yeah, I was looking at a short put spread, but it's kind of like I was looking at the 55.50 or the 55.45, trading at like, you know, the 55.45 10 points wide is $1.80-ish. With 30 days to go, it's just like, nah.
You can make that in a 3-point up move with the diagonal spread.
Yeah.
It's hard to sell premium in 30% IV equities. That's basically it.
It wasn't like an AVGO or, Adobe.
Yeah.
Where you have really high implied volatility. Yeah, I might just do like a little Johnny $5 wide call diagonal. It's almost like a calendar. I know we've had some people ask for the analysis mode here, but when you look at this, like your risk reward is pretty small. $100, $200 is like your absolute best case scenario over a couple weeks. Got about a $3-4 buffer to the downside. I am going to do that. We'll do something small here. We'll see if we get filled. 460. All right. There we go. I don't mind grabbing a little dip, you know?
And that earnings killed them.
Killed. But it didn't, SMH, there's just like, it's just a constant rotation. So you get AMAT, which I think was a top 5 holding or was prior to the move. AMAT has a huge move and then Nvidia is up. And so it's a big old nothing burger. I mean, you look at the chart where, $3, $4, $5 off highs and AMAT just had a, 20% down move.
I like SMH here. I do.
As a little dip buy. I don't know. I'm on the other side. I have slight short delta in Nvidia going into earnings. It just you've had such a run.
Yes.
Don't you ring the register? I'm sure the earnings are going to be good.
Yeah.
Can't it already be baked in?
It could be. You could see that.
I thought it's been baked in for 20 points.
Yeah, I know. This is just an insane world we're in.
I got a little put crab trade.
There you go.
Yeah. October, September.
What determines buying power? I just put a link in the YouTube chat to a bunch of help articles if you want to scan for some calculations, but it depends on what product you're trading.
Yes.
If it's undefined risk, though, it's usually 20% of the strike price or around there if you're selling that option. If you're trading a futures product, you have a lot more leverage because you don't have to put up as much buying power relative to the actual risk of the product itself. But yeah, if you click on that Help Center link, you can peruse those articles. There's a bunch of calculations in there if you want the actual answer.
It can change too. I mean, there's specific things that can change it from volatility, and at a certain point, if volatility is very, very high, it might even be cash secured. There can be like stuff like status, if it's a hard to borrow stock, or if there's a high borrow fee. Those will change the buying power. It can also be broker to broker, so it is somewhat variable in that some brokers might have higher requirements, some might have lower requirements. Those are all things that can kind of influence it as well.
When you have a long zebra on, when the price goes down, do you roll down the untested side? Assuming you have a call zebra on, if the price is going down, if anything, you can just buy back the short option. Rolling it down doesn't really help you. But really, that short option was sold initially to remove the extrinsic value in the 2 long options that you bought. So if that option is losing a lot of value, we just close it. And then that also frees up another 100 delta potential if you get the reversal after that.
Yeah.
Because now you have 2 long unhedged calls. Same thing with the downside of the puts.
Yeah. It's hard to, the zebra the hedge is baked in already where, you're offsetting your extrinsic value. So if you are wrong on direction, that option hedges you, as well as just the fact that you don't have the uncapped risk in that those long options can only go to 0. And so your position has, you have the baked in long put if you're doing a call zebra. If you're doing a put zebra, you have baked in long call, and then you have that hedge of the, which is a hedge in itself, but you have the hedge of the short premium that you sell, which is going to go to 0, and that hedges you in some regard. But after that, you can't cover everything. E-mini's down 37, low of the session. Bitcoin down 3,000. Gold and silver getting killed. Do you have any interest in either of those, Thomas?
I'm long silver right now, and it's killing me.
Okay.
The continuous contract is just starting to trade under the 50-day SMA, and that's the level that saw intraday support back in August 1st. And
the continuous contract, you can pull it up if you use the $ for those watching. If you're wondering, you can pull up the $ and then the futures. It strings all the futures together because they have specific expirations, so they technically are different products, but it gives you a little bit of a view there. All right, so you're long silver. You got that iron condor too in gold, right?
Gold, I don't think I'm not in gold iron condor anymore. I think I was in that a few weeks ago. I got out. Yeah.
Is it time to buy some silver? Do I do that?
You could throw a zebra on there.
Yeah, I mean bonds moving, rates coming down. You would think that this is a day where gold and silver would be a flight to quality.
Yeah, it seems like this is less of like, a scary market and more of just deleveraging, getting some positions off. You got,
just throw them back on.
Waiting for Jackson Hole Friday.
Just to back on. Leverage long as soon as Jay Powell is done speaking.
Yeah.
Or maybe even just the moment he opens his mouth.
Yeah.
The anticipation.
Good afternoon.
Yeah.
Smash.
What's the tie color now, or
purple?
No, but he debunked that.
Did he? Okay.
He was asked about the purple tie. Purple tie, time to buy, but he wore a purple tie every time.
Well, I mean,
he just likes
he wears a purple tie because it's a blend of red and blue.
Neutral.
You see,
I like that.
Color neutral when it comes to Democrats and Republican.
All right.
That's gotta be the logic. Someone told him to wear a purple tie for that reason. I can tell you that for a fact.
I
Without
love
any information,
ties.
that's a fact.
Yeah. Purple tie always hits at a wedding.
Yeah. Purple tie was one of my secrets to grossing or Autoplex car sales.
Pink shirt, purple tie.
Pink shirt, purple tie, purple shirt, pink tie. Very floral, very loud.
Yeah.
He was the flower.
I was this beautiful flower in this room
sales
full
environment.
Of, smoke smelling old guys.
And then there was
and
you.
then there was me, this
Saying,
young
"Please,
flower.
buy a car for me, please."
Yes, support my college fund. Yes,
incredible.
Then I gouged them.
Yeah.
Just kidding.
Then you're like,
I was
you definitely you need that 2K salt under the bed.
I told you that. Never do the salt. Never do the undercarriage salt. It's nothing.
What is that?
It's in Chicago or like Midwestern places. They always have like upsells of like, oh, do you want like the salt
protection
sealant
package.
the undercarriage salt sealant? You say no to all those. You do not take any add-ons, no added warranties, none of that. None of it. It's all never pays out. So
good to know.
That was always one, but it was the because the salt every year. It's the snow, the salt, the rust,
salt.
Yeah, you don't want to have any problems. It's only $1,500. Don't do it.
No.
Don't do it.
Sounds like $1,500 you can spend on silver leap options.
Yeah. Or something else in general. Yes.
I just got into a call zebra in silver, long 33, short the 34, $240 in October.
All right. I like it.
Easy.
I think I might
We'll
do this is basically delta neutral, but skews a little bit long into the future, like a 1x2. So long a 31, that's basically a stock position, and then selling 2 at the money calls in September. Doing it for $1.50-ish debit. So it's like almost like a long or a short straddle at the money, but you have some positive. You have some delta to the upside as time passes. We can show this on the analysis mode. So you have a little bit of extra risk to the upside. Well, it's kind of spicy.
It's pretty spicy, I would say. Pretty spicy.
Maybe the 34.5. That's what I'm going to do. 34.5. It's basically a crab trade, sort of.
Yeah.
All right.
Water from your furnace might be a clogged AC condenser drain line. Tap on the metal above the drain hose to see if it's filling up with condensation water.
Check that, actually. So my condenser line is under the furnace.
Was that the first thing ChatGPT told you?
Yeah, probably. It's coming from the vent on top itself, so it's like dropping through the roof. And the drywall is starting to get a little saturated now, so I know it's outside of the flue vent, not coming in.
Okay.
Yeah, we'll see what happens.
The plot thickens.
The plot thickens.
I appreciate the advice, though.
Good start.
I'll double check that.
Let's see. Do you think they will eventually add grasshopper futures?
Yeah, someone said lean hoppers.
Lean hoppers.
Yeah, I mean, bugs are the new, protein in some parts of the world.
What would be the thing that if they're like the next future, you think? Futures contract.
I mean, water. People have been saying water for a while. I think there is a futures water product, actually. I think it's just not like a liquid.
Pun intended.
Yeah. It was
good.
not intended, but there you go.
We don't trade the water futures. They're not liquid.
Yeah, it looks like there is water futures.
I'll be here all day.
I mean, Lake Powell, Lake Mead, you see it, it's like dried up. They're finding bodies that they haven't found. And they've been there for 50, 60 years from the Vegas days where they drive people out, tie a cinder block to your feet.
Yes.
Just dumping them.
Yeah.
That's crazy. That is crazy. Goldman Sachs trade.
All right.
Long a September 19th.
Okay.
745, 740 put spread.
Long it. Okay. Well, that's a nice trade if you have.
And short the 720 put.
So long in the money long put spread and a short put.
Yeah.
So a Jade Lizard.
Looks like it.
So this is definitely a Jade Lizard. You're doing the long put spread instead of the short call spread. I would suggest for the next time you do this to just do a short call spread. You'll have tighter markets. If you look at these markets here, on the in the money put, you have maybe 80-ish cents, and on the short put, you have a 50, 60 cent wide. Both these options are about 50, 40 cents wide. So you have a tighter spread. If you just do the call spread here, you can see the exact same risk profile on the chart as well. So I would do that next time, but
yeah. Considered rolling the 720 to October. Yeah, if you want to stay in it, you certainly can. It's just 30% IV. You're not getting a lot of value for the risk. But if you think it's going to go up,
this one I can sell a call spread.
That could work.
IV is not high. Do they have earnings coming up? No. You do like the 750, 760. I know it's down to $11, but the stock has done nothing but go up. Let's do that. I'll see if I can get like 250. I'll let that work. Okay, interesting.
Workday and Futu puts into earnings, expecting a 10% drop on both.
Whoa.
Yeah, Workday is tomorrow. Nope, Thursday after the close.
Workday.
$220 stock, $17 expected move. Not too high there. If you want to play it to the downside, long October, short the 3-day. If you're doing a diagonal spread, something like that. They're pretty cheap, like a $6 diagonal spread for a 10-point wide.
Stocks had a $50, $60 down move. I don't know.
Futu's, I've never traded Futu.
I think it's a Chinese stock. It's an ADR, so.
I'm off that.
You're off that train.
I'm off the Chinese stocks.
That has earnings on the 20th. Like the 160. These markets stink. Some of these are 50, 60 cents wide in the weeklies. I'm going to pass on both those. I'm playing Walmart to the upside for earnings, neutral / bullish, and then CRM I sold an out of the money put spread. So again, neutral / maybe the pain is already baked into the stock that's down, $150 ish. Looks kind of like a workday chart.
Yeah.
I just sold an out of the money put spread. I did the 230, 220 in September. And then in Walmart, I did crab trade type setup, buying the September 102. And then I sold 2 of the 105s in the weekly. I bought the wing just to cap the risk. And I did that for a little over $1, $1.20-ish. So you got very minimal risk to the downside, even if it goes down.
What's up with Palantir?
Nobody says what's up with Palantir when it's up every day. Thomas, it's sometimes things go down.
Yeah, it's
sometimes.
It's a painful one, though. 14 points to the downside. Stinks. Do I do something now?
Yeah, maybe some people in Congress are selling it or something.
Probably.
Yeah.
Am I going to ride the micro natty gas trade? I just bought a new contract in the V because the U is going to expire soon. But yes, I'm just holding, not closing at the lows, and then watching it rip 10% the next day. Can't do that again.
Yeah. Palantir is getting interesting for some short premium. Maybe another day here, and then we can put on a strangle or put ratio. Maybe a put ratio. Let's see what we could do. A put ratio. 50. Oh, you can almost do it down to the 35. 150, 140. I have the upside call butterfly. If we do bounce here, I might give it another day.
Fair enough.
See if this little sell-off continues.
How about an Adobe Iron Condor? 305, 375 shorts for September, 10 points wide.
So slightly short delta. I don't mind
It's
it.
okay.
I'm short the 325, 315. Do you have the same trade on? Or did you
I
do
just
like
have the put spread. 335, 330.
Oh, so you're closer at the money but tighter.
Yeah.
Okay. All right. This one leans a little bit short, this Iron Condor. In direction, you have basically, you have a couple deltas, but directionally, you want the stock to kind of be inside/down into earnings, which are on the 11th. So about the week of earnings or the week before. So I'm on the other side of this trade, but certainly one that's sticking out to me as one of the higher implied volatilities on the board. NASDAQ down 300.
Crazy.
Big move. Let's move in there.
Intel.
Palantir, the biggest mover. PLTR, MSTR, AMD, AppLovin. Then you got Intel, PanW, which had earnings this morning on the upside.
Pablo has a covered call on Intel, short strike at 20. 3 days left. That trade's done.
Yep.
It's locked out. You can't roll the strike up.
No.
It's just
too far in the money.
Yeah, too far in the money. If your goal is to roll the strike up, you got to do it before it goes to the money, which you might have had an opportunity to do it a couple weeks ago or a week ago, but it's just been gapping higher. So you would have gone in the money either way, even if you moved it up to like 21 or 22. But if you want to get back into it, you could certainly sell a put. If you got rid of the shares, you could sell a put below the market and then take more shares later. But if you're trying to keep the shares, you can roll from 20 to September.
Yeah.
There's nothing there. There's no premium there.
Move on and sell the put.
Yeah.
Call it 24 strike put for $1. Get a down move, you're back in.
Yeah.
Continuous up move, you keep the dollar. I was just looking at like a call ratio spread there or something like that.
Yeah. If you're trying to move it up, you got to do it before it goes so far in the money. You just can't do it now unless you're paying a pretty big debit.
Could do something like the 23.5, you sell that put, or even the 24. You could do the 24, you sell the 24 put. I'm just thinking new position here. 24 put, you do the 25-27 call ratio, which you're doing for like 30, 40 cents. So you're netting out $1 and change. It gives you a break even above 30, and then you have a break even on the downside at like 22 and change. Talk me out of this. $400 in buying power.
I like it.
All right.
Why not?
Played this game.
Yeah, Manny, the Goldman Sachs Jade Lizard, we were looking at the wrong expirations, but it doesn't matter. It's the same thing. The 10-day spread is trading for $4, so you could keep that on if you want to try and get an extra $100 out of it. But yeah, if you're rolling the short put from the 3-day to October or September, it's totally up to you. It's just a matter of whether you want to keep the risk in the trade.
Yep.
One more here. Strangling Coin, 283.70.
I got some long delta here, feeling a little bit of pain. I did an upside crab trade, so I am playing the upside here. If you don't have a position, certainly could look at a strangle, but it is a capital intensive trade, so
yeah,
that's out of my wheelhouse, unfortunately.
I got the 350 calendar spread on last week. Long October, short September at the 350 strike. It's down $100 right now, but any kind of rally here will be good.
Yeah, huge move.
Plenty of time for that to work. Yeah. That's it. Thanks for tuning in. If you got any further inquiries, you can find us on Twitter. I'm at Trader Mikey B. Nick's at Trader Nicky Bat. Thomas is at FX Westwater. Stay tuned. We got plenty more content coming your way on the YouTube channel as well as tastylive.com. We'll be back same time, same place in the morning.
Yes. Tomorrow and Thursday.
Morning show takeover.
Yes.
It's going to be great. Send us what's your assumption.
tastylive.com/assumption.
Yeah.
Get them in now. Now.
Yeah, I'll throw a link in the YouTube chat. But yeah, we'll see you tomorrow morning. Have a great rest of your trading day. Peace.
Peace.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
How many trades must a man roll down before you say that he's afraid? How many times must we be stopped out before our portfolios decayed? Yes, and how many times will our positions get too big before our minds can be forever swayed? The answer, my friends, is found at Tasty Trade. The answer is here at Tasty Trade. Yes, and how many days to expiration is best? And do I have the right chart? What's the right number of trades to put on to make my probabilities be smart? Yes, and how many episodes will it take before I know where do I start? The answer, my friends, is found at Tasty Trade. The answer is here at Tasty Trade.
Got the need for speed? No problem! At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
It was a great show, very inspirational and motivating.
I feel like you got to know each of the traders a lot better on a personal level. It was awesome.
This is my 10th or 11th live event. I thought the math was really complicated and it wasn't, and then it just made sense.
They've opened my eyes to many different strategies.
And I realized there's a reasoning and strategic planning that you could do to be successful. I love all you guys.
Tom versus Tony. Round 1. Trade. Massive volume. Killer trade. Surplus. Shoot. The fall. Volatility boost. Killer trade. Resistance. Straddle support. Order sold. You win.
Gonna go to Florida. I got Rob. Rob in Florida. What's up?
Hello, Tony and Nick. I am a big fan. My wife and I watch you guys for hours and hours every day. You can be very, very proud of your son. He is doing a great job. I really didn't know anything about stock prices or options or anything. until I started watching probably 500 hours of Mike and his whiteboard from years and years and years ago, and learned all about it. And we've been trading actively since February, and just couldn't be more pleased.
Awesome, man. Thank you so much for the kind words.
Thank
Really
you,
do
Rob.
appreciate it.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
We are back. It is Wednesday, August 20th, 2025. This is Futures Power Hour, sponsored by CME Group. I'm your host, Chris Vecchio. He's Thomas Westwater. Thomas, troubling day for the NASDAQ again.
Yeah, it's down, and some people are saying rate cuts are not even going to happen this year. So
there's an AI cycle overbuild, and rate cuts aren't coming. The horror.
Yeah, I mean, Meta announcing, they're scaling back. So the first big sign of some deleveraging in this industry, definitely weighing on the chips.
Chips are not having fun here today. It's a rotation kind of day, though. Not a good rotation kind of day where you're seeing breadth improve, value over growth, or small caps over mega caps. It's the kind of day where defensive posturing is picking up. Bonds, gold, healthcare, consumer staples. The not so shiny objects are the ones that are glistening. That's not a good thing, Thomas. We've had some AI warnings come out as well. An MIT study was released a day or so ago showing that companies using AI, about 90% of them, 95% of them, the AI agents aren't producing anything of value. Sam Altman over at OpenAI told us just in the past 24 hours that, yep, it's overbuild, just like the dot-com bubble. While it may be a good thing to manage expectations to prevent a further valuation bubble from blowing, they've been headwinds in a very thin market still. You mentioned the Fed meeting here, though, being a potential cause of concern, Thomas. Will we actually see a September rate cut? CME FedWatch tools pegging it at an 85% chance. I'll round that up for Josh. 84.78 for those who pay attention to the details at home, like you, Mr. Westwater. But Powell this Friday, you don't seem to think that he's going to come in and give the market what it's looking for. Why is that a risk?
I mean, the risk right now, Fed rate cuts have come down after peaking. So after hitting a peak, you have one way to go pretty much, which is these bets coming in. And the market's not going to like that. It wants some of that juice that the economy is going to get from lower rates. And the longer you prolong that, it's going to have a negative effect because it takes time once those rate cuts are implemented for it to even feed through to the economy. So, rate cuts delayed, more chance for some of this stagflation type economy. Profit margins for businesses can come in, less lending, all that equals, less economic activity. So I think the market is reflecting that today in what it's doing.
The rate cut for September.
Lost your audio, Chris.
There have to be four paths for a September rate cut or September meeting. Four paths being we get a cut. Powell tells us that's coming on Friday. Powell hints that a cut's possible depending upon how the data shakes out. Of course, that leaning against a cut, keeping rates on hold because the situation doesn't call for it regardless of the next data releases. And then there's also the option where he just says, we're not going to cut rates this year. Inflation's too high. The labor market's still too strong. I'm not sure where you peg your probabilities for each of those four outcomes. I'd probably say that number 3 is most likely, as it were, insofar as Powell says that we may not get cuts and the market could be set up for a disappointment. The data just aren't there right now, Thomas. Plain and simple. And we have a PCE report coming up in the next few sessions that will ultimately give us more insight. But PCE on Friday morning could really spoil expectations for that September move. We talk about a pullback in tech stocks here on this Wednesday right now. Tech stocks off the lows. We should go to our NASDAQ chart, which is still off by about 1% here. If there was a place for trend buyers to buy the dip, Mr. Westwater, we have entered the zone. We're at the uptrend support of this rally that's been in place since May. We're back into the area between our 1-month and 50-day moving average. This has been a catch zone, as we've seen quite some time. In fact, ever since crossing back above the 21, we've seen this area serve as support. So what say you? Has this been the Fed meeting flush? We've already priced out the highs. What can Powell say that will disappoint us further?
Yeah, the question is, do you do it? Do you get long here? I mean, technically, it looks like a decent place to get long. There's risk ahead. I mean, we have FOMC today, right? Personally, I'm long equities now. So I'm long Palantir, Oklo, Nvidia, Alibaba. So I'm loaded up for, a retracement back to new highs. And, just express through my trades. I'm long. I think the market's going to, it's not going to fail and keel over here. So that's my view.
I mean, if there was a time of the year for the market to have a pullback and you see the defensive position that's kind of taking shape today, this would be it. Past 10 years, the S&P 500 has averaged a loss of 1.7% in the August through October window. For the 20-year window, it's about minus 1.2%. Now, volatility tends to go up at this time of the year as well, and we've certainly seen a little bit of a rise. IVR's in the teens. We were in the low teens earlier this week, now up to 18.8 in NQ. As it goes into VIX terms, that gives us a VIX that's now back at 16.27, but again, not that we do any technical analysis on the VIX here. It's a non-stationary time series. I would point out that recent touches of what would be considered a 50-day moving average, Thomas, April, here in May, again in June, start of August. This has been more or less a capping point for where vol has petered out after rallying. So maybe you get a little bit more overshoot into the 1820 area. But this action today harkens to an environment where dip buyers have actually succeeded before. You can see it in ES as well, which is now back above its 1-month moving average. Earlier this week at the Monday show, we were talking about how only 65 points were priced in either way. And that seemed a little light. We could easily test downside of the 1 month or the channel, and we've gotten there. So I suppose the question is, do you buy the dip? First blush as a trend person, the answer is yes. How could you say no to it? It's been rewarding us for the past several months, and this is as good as you're going to getting to support. You're already on that boat, though, so I don't need to convince you, Mr. Westwater.
I'm on the boat, and, we've talked about it before. Picking a top, you have to do it once, and you have to do it right. I mean, it's hard, whereas you could ride the trend, and, it's a little bit more in your favor momentum-wise, so I think this is where you do get some long exposure, even if you want to go light. I think this is a good place to do it.
Taking a look over at the ESU 5 contract here and going out to 41 days, I already have my upside exposure in terms of those calls looking for a move towards 6,700. Now, whether or not that's still appropriate, given the breakdown and loss of 6,470 is another story unto itself. But in terms of a typical Tasty methodology going out to 44 DTE here and thinking about short put spread right now, there are decent enough risk to reward trades that you can find. You just got to be a little careful about how you structure it. That October 3rd expiry is not giving you a ton of strikes right now, right? So going out to, say, the 10th here, not exactly what I want to do. 58 days is going to give us those 25-point increments right now. So keeping that in mind, if we're thinking about looking to, say, do this in a typical Tasty way, where has support been found in the broader channel? About 62.40. So if we go out to 62.40, this being ESZ5, we'll just want to quickly double check the pricing on the chart, and that's going to give you a low near, we'll call it 63. So 6,300 going back out to 58 days. Just on the other side of that, 62.50, 6,200. Okay, so this is a 70% probability of profit right now. That may not give people the risk to reward they're looking for. This is a little light, closer to 5-1 than a 3-1. Pulling this up by 50 points on each strike, getting a little bit better, Thomas, a little bit better than 4-1 here, and you're still in that 60 to 70% range. I actually think that's an eminently reasonable trade. I already have upside exposure in the S&P 500 here, so it's not necessarily something that I want to put on by adding more long deltas, given the momentum of the market right now. But looking at this with fresh eyes, given the dip and where we've come into, had I not put on a different long delta trade just a few sessions ago, this is the place where it is appropriate to get long and new. Let me put this a little bit differently. I'm revenge trading against Ilya as well. So when we had a flash higher here, I got filled on an MES long. So I'm already in. I'm looking for a rebound. I think this thing is going to be going back up. Prove me wrong with a break below today's low, and then I'm out on the long side. We'll revisit you down near 62.40.
Yeah, I think it makes sense. You break today's low, which, I mean, you got to watch the post-FOMC reaction. I wouldn't take the first 5 or 10 minutes worth as anything, but, after that, as the market trends into the afternoon, I think that's going to be telling. We still have Powell's speech on Friday, so it's, I think the 20-year bond auction did it come out already 13 minutes ago or?
Mm-hmm.
All right.
We're going to get to that. We have the bond section in 15 minutes. We'll get there.
Yep. Yeah. Okay. Yeah, so I mean, I like that, but how do you play this in a slightly smaller account if you don't want to take on as much exposure to an index futures contract? I mean, do you go shorter duration?
The thing about MES is that there are listed options. So we could do it in MES. You could go out to 41 days here, and you could do something like the 63, 62.50. This much smaller, right? Risking 204 versus max profit of 46. So still in that 5-1, 4-1 neighborhood, 64% probability of profit. This is also the ESU5 contract. So if we were to go over to Z5, that's 58 days. Okay, this is actually listed MSZ5. So you could do it in here. It's not the same type of liquidity, mind you. Open interest in these strikes smaller. If you go to ES itself and looking at the equivalents out at 58 days, just ESZ5 here, several thousands of contracts for the open interest in the volume. But it's feasible. And then you don't have to do this, of course, through futures. You could always go over to SPY. SPY has listed options at 58 days right now and 41. So there's something to operate in here as well. Very similar type of trade setup. Risking 1, risking 4 to make 1, risking 5 to make 1, somewhere in that neighborhood. There are many ways to crack this nut, is my point, Thomas. It doesn't need to be through the futures.
Yeah, definitely.
The Russell 2000 here had been a leader in recent sessions, and now it's actually underperforming the S&P 500 on the day. This is a chart that looks uglier and uglier, although we do have that bounce off of that 1-month average again, which if you've been doubting the veracity of that in recent months, look at every other test of that yellow line going across the screen here in April and May and June. And yes, there was a dip in August, but this 1 month, 50-day seems to be catching things. We've touched that zone here right now. The uptrend off the April and early August lows are still in place. Volatility is not screaming higher. It's only a 17.5 IVR. Is this the best place to buy the dip? No, I'd much prefer to do it closer to 2,200. But first blush, all of a sudden we're back through 23. That's enough to think that this market is going to reestablish itself to the upside. But I have my exposure right now. I can't add anything more to it. Otherwise, I'm going to have to deal with more of Ilya's grin. And I'm really not in the mood to do that today.
I'm going to play this short term near the lows of today. And I'm selling a put spread at 63.80, 63.75 for the 1 day.
Okay. All right. 63.80, 63. What'd you say?
63.80, 63.75. So I'm going to bet that we stay at least above today's low, and just putting some chips on the table there.
Plus or minus 33.5 points through the end of the session. We're currently trading at 64.02. Could that happen the rest of today? Sure. At the 1 DTE, the expected move tomorrow is down through 63.45. Yeah, Thomas, you're risking 3 to make 1, 66% pop. Has the worst been priced in, I guess, is the question. The market, the conversation I'm hearing from people, everyone that I'm talking to, no one's expecting a dovish Powell tomorrow at all. I don't know who is, honestly.
And we're not expecting
tomorrow,
it. So
Friday.
Is that already priced in? Does he have to go? Is he going to be much more hawkish than even the expectations? But I think it makes sense because it aligns with what he's already been mostly saying is, taking a very cautionary approach to these rate cuts, even though the market has largely, said the Fed is going to cut in September. We had the 2 dissents in the last meeting, and that the trend is that the board overall is getting more dovish.
Yes, and we do have the call from President Trump on Fed Governor Lisa Cook to resign today. Whether or not that goes anywhere is another story, but if it does, that's just another seat that he's going to have the ability to appoint someone into, and that's probably going to be someone who's leaning more favorably towards cuts. Which, if you believe the Fed's literature, we shouldn't be concerned about the inflation. It's transitory. If it's transitory, then we need to be worried about GDP and housing and labor. And those are moving all in the wrong direction. And you could absolutely make a case based on those metrics that it's time to cut rates.
Do you think they're considering, this pullback in AI spending already? Do you think they even factor that in, even if they don't communicate it?
No, because the Federal Reserve, as was stated early on this year, when there was talks of what Trump's tax bill would look like, what the tariffs would look like, the Fed said, and Powell said several times, we're not going to make policy based on what might happen. We need to see it happen first. So along those lines, if the CAPEX spending happens, doesn't happen, right, they're not going to do it until the shovels are in the ground, the money's been spent or not spent. So they're never going to put it into their outlook moving forward. But also to that point, Thomas, the money that we've seen spent to build out the AI capacities here in the United States, it's not exactly filtering through into substantial economic activity. It's creating a tangible physical tax base for municipalities, which is really important. And that's why a lot of these municipalities have welcomed them in. But it's not bringing significant jobs. The data centers do not require a lot of employees for upkeep and maintenance to keep the lights on and the machines whirring. So you're not adding a lot of aggregate demand to communities that are seeing data centers built out in, which is then just resulting in a strain on local resources. So areas with data centers are seeing inflation go up at like a 7%, 6% year over year clip right now, compared to areas without, which is a closer to 3% year over year run rate. So the Fed could just see data center build out as being something that's kind of inflationary. That doesn't actually add growth, but it just adds to structural inflation pressures at the bottom line.
Yeah, that makes sense. So until it actually shows up in the data, if it does, Okay.
Until it does, the Fed can't do much of anything at all. And they're not a proactive policy institution. They're reactive.
Right.
They're always fighting the last war. And if inflation really is transitory this time because of the tariffs, Thomas, guess what? The last war they lost was about inflation being transitory. So they are going to be late by design. They always do this. They did this in COVID. Why did we get so much stimulus in COVID? Because they didn't do enough during the global financial crisis. And so then they were going to look through inflation because they knew that if they didn't do enough, then you'd have deflation. So then we get the transitory. It's just an never-ending cycle.
Does that change next year with the new Fed chair?
That's a great question.
To a more proactive institution?
I would say probably yes, which puts the market in unique waters because that's not something we're used to.
Right.
It also means more volatility in policy. Okay, so sector rotation today. We talk about how this is not necessarily a day of good rotation. How do we substantiate that point of view? We look to how the various ETFs are performing. We track 25 here on Futures Power Hour. Even though rates are down a bit, Thomas, and just to make sure rates are still down. Yeah, rates are still down a bit. Bonds are trading higher after the auction. It's the rate sensitive things that are coming back in a bit. Home construction is the leading loser today, 1.77%. All this talk from the Trump administration requiring companies who are getting grant money through the CHIPS Act from the Biden administration, they're now going to have to give a stake in the company to the US government moving forward. That doesn't seem to be running too hot with semiconductor companies today. They're off 1.61%. Tech likewise leading the way lower following this AI warning from MIT, from Sam Altman. And then you look on the plus side, never a good day when GDXJ is the top performer. It's all the commodities for what it's worth. XOP is up 0.96%. And then the staples. XLP here having a good session. You and I were chit-chatting earlier before we go to anything else. You were mentioning that Home Depot and Lowe's have had pretty good performances here recently. Home Depot had earnings. Lowe's had earnings. What does that say to you when all other retailers are actually struggling a little bit?
I mean, for me, that kind of shows higher income households are, still or wading back into those home renovation projects, things like that, things that require a lot of money, right? Redoing your kitchen, redoing your bathroom, etc. Lower income households that are still feeling some strain and perhaps forecasting a gloomier economic picture for themselves with cuts to some social benefits in the next couple of years are more restrained, possibly. I mean, that's kind of my take on it.
Yeah, I mean, it kind of reminds me of what happened during early COVID, where people, what were people doing? Well, they were upgrading their homes, right? Because they foresaw an economic environment in which they wouldn't be able to spend their money. They weren't allowed to go out in some states, some countries. And so home refurbishment went up. In the last quarter or two, if you're worried about tariffs, you're worried about the cost of new decking. I did this last year, at the end of last year, so it didn't really affect me now, but we put in composite decking, Trek. Just looking at the prices, they were like 30% higher than they were a year ago, right? So people are probably front running a lot of these home renovations because the materials that you use for home renovation, knobs, screws, drywall, that's not made here in America. We have to import all that stuff.
Right. But they also, I believe Home Depot and as well as they reaffirmed their forward guidance too, right? So they're expecting these tariffs, it can't only be front running if they're expecting this spending to continue. I mean, what are home builders doing today? I'm
down.
I'm interested because I saw a report that said it is now the first time ever where buying a new construction or a new home is the same price or cheaper in some areas than buying an existing home. That's interesting for the future of it, because if that continues, that's going to be a way that adds supply to the market, right? More people are building new homes, so supply goes up in a way.
I would think so. There's an interesting dichotomy there, and I'm trying to actually find the data source on this to see if it breaks down by region. I would think that given where homes have been built in great capacity in recent years, I'm going to sound so condescending. These are areas of the country where people don't really want to live, right? They're not like the main economic drivers. It's not a New York. It's not a San Francisco, Los Angeles. It's not a Houston. It's not a Chicago, right? And so the places where there's the most dense need or the highest demand for housing right now, because it's closely tied to centers of economic activity, they basically built what they can build out there. And so if you want to live close to Chicago downtown or New York downtown, you don't have the option to build something new. You're going to have to buy something that's existing. And so a new home that's built 50 miles outside of New York City, yeah, that makes sense to me that it's going to cost less than an existing home in New York City. Right? But how does that change the incentive for builders? If you're in an area like it, why even build? I think that's the problem. Why even build?
Yeah.
Home builders offer flexibility though, right? Like they can offer to give you a better mortgage rate. They can pay down a chunk. They can give you a discount. Existing homes don't have that. You're relying on the gratuitous nature or the generous nature of a seller, which I think they're trying to maximize their own dollars at that point. It's a mess. Housing is such a mess in this country, Thomas.
Yeah.
It's a disaster. Absolute disaster. XLRE, existing real estate, for what it's worth, that's up today. Home builders lagging, existing real estate up. Maybe I'm wrong. I'm curious. What is the best play then? If this is the world we're going into, asking the chat here, would you rather be long the real estate sector for REITs, existing homes, existing buildings? Or would you rather play into new home construction for the next 5 or 10 years? That's not really a tasty trade. That's more of just like, where do you see the world going kind of situation?
Yeah, I mean, if rates are coming down, maybe they're both a good play to get long.
Why not both? Real estate, one of the best hedges for inflation, historically speaking, in the post-World War II era. Thomas, you mentioned bonds here earlier today. We had a 20-year auction that hit the tape at 1 p.m. Eastern. Bond market is trading higher over the course of the session, playing into this kind of classic risk on, risk off move that we're seeing here. ZB at session highs right now, up 12 ticks. Was this a good auction? I don't think so. The baseline here, last 6 averages, bid to cover ratio 2.63. This one, 2.54. But it stopped through by 0.1 basis points, which is good. We don't want to tail. Indirects 60.6%. That's foreign buyers. That's lower than what we had seen previously at 67.4%. It stopped through though. I guess that's the news. So it's not like there was a big tail. The price is right. Demand is enough. We're gently moving up here after those results. We were about 114 and a half. Now we're up to 114 and 22 ticks. Are you still leaning long bonds here, Mr. Westwater?
I am not long the bonds. I got out of my Xeon last week. I've been out of ZB for 2 weeks now. And, I was thinking maybe this is the time to get long again, although the reason I'm not putting them on this week is because we have Powell on Friday, right? And I'm just not confident enough and to know how the market's going to take that to get long the bonds.
Could I posit that when we saw Fed rate cut odds reach their peak last week, okay, 105.7% chance of a 25 basis point rate cut in September, which is to say that a 100% chance is priced in, and then a 50 basis point rate cut is leveled at 5.7%. As we've seen those cut odds come off, net bonds have been able to recover. Thinking through the lens of what happened last year, a Fed that gave us 50 basis points of cuts in September triggered higher yields across the curve, especially at the long end, because the market viewed the cuts as adding fuel to a pretty warm fire as it was. Inflation was still above target. The unemployment rate was in the low fours. GDP was cruising around 2.5%, 3% in real terms. So rate cuts not necessarily needed. You're inflating your growth and inflation expectations at the long end of the curve. I'm still of the mindset that this is how the market views the long bond. Aggressive easing could stoke more inflation, and it's going to stoke more growth. Plus, it also speaks of potential Fed interference, lacking of the independence or loss of independence at the Fed, which I think would then require an additional premium, more compensation from investors to own U.S. debt. So Fed cuts in September, bad news for bonds. No cuts, good news for bonds. Powell probably directionally going to be open-minded for a cut, but not giving it to you. I think those cut odds have to go back to 50-50, Thomas. I have no idea why they're trading at 85%. So to that end, I actually think if we do get a less compliant, less Trump-friendly Powell this coming Friday, 115.5, not out of the question here in ZB.
Yeah, that's interesting. I was not reading it like that too much, but
well, then go the other way. Make the case why I'm wrong.
Well, just what you said makes sense, I think. It's just when I trade bonds, usually, the Fed cuts and you're getting lower yields. I mean, maybe not as long, maybe not on ZB, but for trading ZN, where you're closer to where it affects policy changes. Yeah, I mean, if the cuts do stoke inflation higher, cuts more economic activity, inflation is still above target. I think what you said makes sense. I don't really think there's a good argument against that.
Bonds notes not really seeing vol go up here today ahead of our Federal Reserve event this coming Friday. Notes here are finding a nice little bounce, though. Yesterday, we flagged the fact that there was this potential 3 candlestick pattern coming together, the Morningstar cluster, right near where the market had turned higher in recent weeks. And we were starting to get that nice little former resistance become support situation. So the turn higher does continue. Directional neutrality, Thomas, has continued to serve me well. We're continuing to be directionally neutral in notes and bonds over here. It is something that has been working, although can't dismiss the fact that we're starting to turn up. There seems to be a little bit more of a lift to the market at these levels up here. And I only point that out because if we're thinking about the positioning and the sector rotation today, bonds, notes, gold, healthcare, staples, this is a very defensive rotation in nature. It doesn't matter the fact that we have an S&P and a NASDAQ that are rebounding, and they've continued to rebound over the course of the session. 6407 right now for ES, 22,290, only off by 0.75%. Cut the losses in half, basically, over the course of the day. But there's still a defensive undercurrent there. And if the economy is going towards recession, why else would Trump at all be calling for rate cuts? Because the economy is weak, despite what inflation says. That's the argument they're making. And without the rate cuts, it's going to get worse. Fine. What does well in those environments? Notes and bonds. So yes, I'm still directionally neutral. May have to abandon that. Now at where are we here? Z5. Z5. There's still 37 days to expiration. So I have a little bit of time here. I may need to make an adjustment and pull up my short strikes, at least in the short put spread side, because I'm not going to get much more juice if I'm still looking at the 109, 110. It may be prudent to pull this up to 110, 111.
Yeah, no, I mean, the IV rank is pretty low. I mean, last week we were trading, low teens, right around, or 10, 9?
10, 9. 59% pop using the strikes that I have here, 108, 109. It's still a 58% pop. It's a little bit under 4-1. It's not the greatest risk to reward, so I can't say that it worked. Well, it's going to work again the same way, but I would probably change it. Is it worthwhile still at a 5.7 IVR? Anytime I can get a 3-1 in a 60% probability of profit range, Thomas, I just got to take it. That's the mechanics. So I would tinker here a little bit, but worthwhile still. Yeah. Why not just give some upside room if we're heading into a bit of a more problematic situation?
Yeah, I mean, I'm tempted to kind of join you in a trade like that, but I'm going to wait for now.
All right, let's move on to gold here because metals haven status is shining once again here today. Metals have been an absolute thorn in my side the last few weeks, Thomas. And as metals don't go anywhere, my P&L tends to suffer. Well, here we are back on the up and up, and oh, what a day. Why do I say it like that? There's been this tendency, for whatever reason, gold, when it's reached into the lower part of its trading range, it's given you some sort of candlestick formation to indicate that a low's been formed. We've seen this a few times, in fact. Here, you have your Morningstar candlestick cluster, right? You have something similar down here with a piercing candle. We have here with another Morningstar candlestick cluster. Even recently, here's your evening, saying all these terms to drive Josh crazy, but here's your evening topping pattern. Green candle, doji, red down one. More recently, outside engulfing bar leads to more downside. But you know what the opposite of that is? A bullish engulfing bar instead of a bearish one. We did set a low relative to yesterday. The high for yesterday comes in at 3389.70. We're in at 3388.60 right now. So a few more pennies, Thomas, and we've put in a bullish engulfing bar here, which would suggest that the recent sell-off has finished. It sticks us right back to 3400 effectively on the nose, which is the midpoint of the trading range that gold has been in post-Liberation Day freakout. In terms of the IVR, 13.6 isn't rich, but directionally neutral has been the trade in gold for months. And it still looks appropriate. So I don't know if it's long. Long has been wrong. So too has been short. I think that's the only way to go through this right now, at least in gold. Directionally neutral.
Yeah, I mean, gold, I was thinking about an iron condor yesterday. I think here's a good place to put it on. We're, back a little more towards the center of the range here. Why change, the strategy when this range has been playing out quite well? I think I'll get pretty neutral gold today.
Thinking about the range in the GCZ5 contract, 32 and 35.75 is the short strikes. You might need to go $50 wide here, given the open interest in trading volumes. But if that were the case, 60% pop, risking a little over 2 to make 1. That's your short iron condor play right now in gold. Your buying power is a little over $1,000, which $1,000 account, that's 4% of your equity. But you're also risking, the buying power used is to make a little bit more than that and max profit. That's a trade-off you have to consider. Am I willing to put up 4% of equity for a trade that could net me 6% of equity, given the max loss?
Right.
As long as we hold the trading range here, the bet is that we stay above the lows that we have in May and we stay below the highs that we had in April. And we've done that every month since then. What will dislodge us? Maybe that's hindsight, Thomas. And the right trade right now is to just get long gold off of this reversal candle. But we have to assume the environment hasn't changed. And I don't see any reason to think the environment's changed.
Yeah, I mean, barring a huge risk-off event, I mean, we're risk-off today. We're up a little bit, but gold is still down, over the past week. It's this range is not going to break, it looks like, for a little bit. I mean, maybe we're not even really coiling into a triangle type pattern here. This is a pretty good, carved out range that we have. I'm not in gold, but I'm a little long silver. I'll probably get directional on gold right now. And,
apologies for convincing you to join me in silver.
Hasn't had the best week until today. So, I'm going to let this play out for for at least another
Just when I
week
thought
or
I was
two.
out. Yeah, just when I thought I was out, Thomas, it loops me right back in. The high that we have here from June 18th is 37.73. That's been the line in the sand. You had the pullback to the 50-day, which you flagged yesterday, because the 50-day has been so important for silver prices really since May, hugging it through the end of the month. Pullbacks into that 1 month 50-day envelope have been bought up even at the start of August. Here we are again. Could it be a triangle? Could it be a tilted head and shoulders pattern? Sure, no one knows. But 37.73 has been that line. And we are returning through it once again today. So by the skin of our teeth, my rationale is to be long through 37.73. I was going to abandon this position by Friday if we hadn't recovered there. So it's pulled me back in. Still a reason to hang on, given the broader uptrend. This still looks like a flag or a symmetrical triangle. No reason to change as comfortable it has sat with us, Thomas. And I apologize for convincing you. Or maybe you convinced me. Should I be blaming you?
Yeah, I don't know how that went. I think that was 2 weeks ago, getting in the 69-day out contract or whatever it was at the time.
Yeah.
I mean, I still, I don't hate it. I'd love to see us get back above these EMAs for some more strength. I'm sticking in it for now. I'm not going to get out.
Not going to get out. 37.78.5 right now in silver. Copper prices are up by 0.27%. I don't know if Dr. Copper still has his degree, particularly in this post-tariff influence world, but I will say that the trading volumes in here are very, very light. Usually, pre-July 8th, we were seeing trading volumes in copper futures that were on par, if not better, consistently than what you saw in silver.
Yeah.
That's just not the case right now. It's just not the case. People have been spooked out of this market. The market's not moving. IVRs a few weeks ago, even pre-July 8th, were persisting 40s, 50s, 60s. I guess you could use something like CEPR as a potential corollary here, but you see going back to June, IVRs, 40s, 50s, 60s. They've just really started to come back in across the board.
Yeah.
So in terms of trading, I'm not doing it.
And the chance that tariffs come back on to a significant degree for copper is pretty low. I mean, Trump just said we need more copper, right? So why would you say that and put on, tariffs again? A lot of that volume was driven on the thought that tariffs were going to come. So it's just, there's not volume in there. I'm not trading it. I don't think there's, too many good ways to structure a trade right now in there.
No, there's really not at least through the futures market, which I suppose can bring us to what's happening in the energy sector. The energy sector here having another jumpy kind of day. It's been back and forth, it feels like. We've seen the same levels all week. Let's see. Where were we? Yeah, where were we on August 7th? Okay, that low is 62.87. The high for today was 63.01. Every single day since then, we've been touching right around 63. Crude oil itself has been incredibly range bound. This has been one of the bread and butter trades that has worked. Neutral in energy, at least neutral in oil, I should say. Neutral in notes and bonds. Those have been the best things that have worked for me the past month.
Yep.
Would you still do it again?
I have an iron condor on in crude for the 57 days out, between 60 and 67.5. And the longs are just 50 cents out from those, so right at the next price.
The exact halfway mark of the range in the CLV5 contract is going to be closer to 64, but do we really want to nitpick over that? At 28 days, that's not the contract I would execute in. I would go out to the CLX5 contract here. CLX5, midpoint of this range. Going to give us... There we are. Just right around 63, call it 63.75. So 63.75 is a midpoint, thinking 57 days. Short iron condor. We'll take a look at it, 2 points wide on either end. All right. So where are our high and lows? Where are our high and lows, 54 and 73. 54 and 73. We can space you out a little bit more. Go down to 54. Okay. So playing at the exact high-low range in oil prices in the post-Liberation Day, post-Israel-Iran 12-day war world. 2 points wide on either end, 62% pop, risking just over 3 to make 1, barely over 3 to make 1. Seems reasonable.
Yeah.
You can do this at 38 days. You can do, I mean, this is the trade right now. Do we really think either of those highs or lows are going to be broken? If not, then continue to place the trades around those levels.
Yeah, I mean, the outlook for crude into next year, if you look at OPEC's a little bit more bullish, EIA slightly less bullish, more of a balanced market going into 2026. You got this Russia-Ukraine talks going in. I think the risk of that right now is that the talks don't work out the way people are being optimistic about it right now. You don't know what Russia's going to do. That's kind of the wild card. There is a lot of appetite from Europe and the US too to get some kind of a deal with these security agreements. So, the market has sold off a little bit on running up into this negotiation period. So naturally, if that unwinds, it puts a little bit more geopolitical risk premium back in. Tariffs stay on Russian oil. They keep sending most of their product to India, but maybe U.S. slaps, the secondary tariffs on India in response to that. So,
do you know how ridiculous that is, Thomas? Just people need to understand this.
Yeah.
We are trying to thaw relations with Russia. We're going to unfreeze all the sanctions. We're going to let the oil flow again, but we're also punishing India, who we need to counter China for dealing with Russia.
It's a cohesive strategy.
Oh my gosh. It's going to make my head explode. So yeah, India is being punished for dealing with Russia directly, and we are dealing with Russia directly to end the war.
Chris, but also, we had the EIA report. It's Wednesday.
There's that. Oh yeah, how was that?
Crude stocks commercial, excluding the SPR, dropped 6 million barrels. The consensus estimates were looking for around 1.2 million barrel drop. So, we beat that by a good margin if you're bullish. We also have total motor gasoline inventories decreased 2.7 million barrels. They're back below the 5-year average. At the same time, total product supplied, which is kind of a proxy for demand, averaged 21.1 million barrels a day. That's up 3.3% from the same period as we were last year. But again, over the past 4 weeks, the average is down 1.2% from last year. So still some weakness year over year, although we've been getting stronger on total product supplied. So meaning that demand has come up a little bit, but still those inventories dropping 6 million barrels. That's bullish for crude, of course. So for right now, that's helping prices today.
Helping prices today for oil, natural gas here still leaking lower. This is why I put things in my timeout box, Thomas. Because sometimes I can see there is temptation sitting there, and I need to get it away from me. The 44.50 IVRs that we've seen in natural gas, to me, were put more money back into the machine, Chris. Keep playing, spin the wheel again. But you know what? I haven't had good trades here, and I really should be applying this methodology to what I've been doing in gold. But with natural gas, trying not to jump in and call the bottom has saved me more heartache than I've needed over the past month. It's been, the AC going out, the tree hitting the house. It's been a month. The spring rib, I've had enough. I don't need natural gas too.
Yeah, I mean, I have tried to call a bottom. I sold the put spread at 3. I'm going to keep it on. I got 36 days. We're 17 cents away from it. If you look at what natty gas does, just yesterday we had an 18-cent range. So, one day we could get back above there, but the risk is that we follow this downward trend, which has been pressured by this 9-day EMA lately. And it's just been a bearish August, bearish July. The weather has not been good. The weather still doesn't look good until September. If you look at weather forecast, I mean, the easiest one visually to look at is the NOAA's 8 to 14-day outlook. But if you look at that, the East Coast just, encapsulated in that blue color, which means, they expect seasonal temperatures to be below the average for the next 2 weeks. So that puts us at what, September 3 or something, September 2.
Yeah, September 2. I mean, just thinking about the population having done this, if you were to take a straight line here and run it straight through Indiana, 50% of the country lives to the east of that line. If you want to take in everything over here, this is like 75% of the country. So just there's not a lot of demand. It was a hot summer. This is obviously welcomed. Although, we're supposed to go to the beach next week and it's going to be highs of 76. That's a bummer. Guess we can't complain about everything, Thomas.
Chris, we're going into what's called peak hurricane season. Starts August 15th. And what you see there from the data I've run before, the threat of a hurricane hitting the Gulf Coast where a lot of those export facilities are, and also a hurricane going into those states, also takes off the power grid because it causes, severe damage. That's demand you get taken out. That's export capacity you get taken out. That's more natural gas within the United States. So naturally, you can get those. Even the threat of a hurricane can drop natural gas prices.
Do you find interesting, because I think about wells getting shut in and supply being constrained as the bigger issue long term, because once the storm passes, everything on land opens up, but shut in wells may stay shut in for a little while longer. Do you think that Hurricane Erin, this storm it looks like it's going to miss the US, do you think that's one of the reasons why we've seen natural gas perform the way that it has?
I think it's more with the weather. Inventories have been rising. The outlook for it is, we're in the shoulder season, going into winter, in a pretty good position. It's just been. I don't think Hurricane Erin. It would have to be more in the Gulf Coast threatening that. If Hurricane Erin did, make a churn and went into the East Coast where a lot of, population, like you said, is concentrated, then you get that, immediate demand suppression effect.
Okay.
I'm not sure how many rigs are concentrated right on the East Coast. I don't think it's too much.
Not a significant amount.
Yeah, so I don't think Hurricane Erin is really weighing on prices right now.
So we see Erin is supposed to turn just a little bit more towards North Carolina and then jut out, so it's not going to make any landfall. But there's 2 more that are currently forming in, so just keep an eye on this. Energy this time of year with the Atlantic basin activity tends to be a little bit more interesting. Okay, so we need to move on to the US dollar here, which is having a bit more of a mixed day, but that's not necessarily a bad thing. The US dollar here is still in the process of trying to find some sort of bottom. It traded higher today only to fall back a bit, and it's closer to the lows than the highs. I suppose that's a good sign, though, because yesterday, what was the modus operandi? It was safety in FX. The yen, the Swiss franc, the dollar were all leading. Today, where do we see ourselves? The Swiss franc, it's up. The yen, it's up. Okay. But the dollar's down. The Aussie's down. The pound's down. FX is not giving you a strong signal one way or the other. As for me, I still like leaning short deltas in the Canadian dollar, which has a 40 plus IVR still. Same thing for the British pound, although it's only a 19.3 IVR. The euro's up there at 35.3. But you know what? The Canadian dollar to me has been the one that breaking below 73, clearly the weakest of the bunch, has the worst data right now. And Trump and Carney are not getting along. So any quick trade deal, I don't think that's going to happen. Looks like it's renegotiate USMCA or bust. I digress, though. Long dollar in selective batches. It's still the most hated trade in the world. I want to be on the other side of that. It's been a long time. Contrarianism is an ethos around here. So what better to do than pick the other side of a trade that's disliked by everyone on planet Earth?
Yeah, Canadian dollar technically definitely looks like the best short. I haven't actually looked at this one in a little bit. So 42.5 IVR, I'm sure there's some trades to be had there.
There are, and I'm in at 50 pips wide, but even going to something like 100, so 73, 74 here at 44 DTE, it's not great, right? It's a 4-to-1, but 68% probability of profit, 4-to-1 risk to reward. Currency tends to move a little bit slower, and it's actually a decent technical setup, Thomas. So maybe 6C isn't the place to do it. Maybe that's a dollar CAD on the Tasty FX side of the platform, which everyone can access here. There's a new tab. Go check it out. You have one more thought before we go into the calendar?
I was going to say I need to convince you to add an AG section. The time is limiting, but I always want to talk about live cattle. It's the gift that keeps on giving this year. And I've harped on it on OTCL quite a bit. But it's, a really good story in live cattle right now. And it's just, making new highs. It's been a really, really strong trend with these short pullbacks that are very viable. High IVR or, pretty good IVR. So maybe we'll talk about it next week.
You'll turn a cattle trader out of me yet.
Yeah.
Tomorrow, PMIs coming out across the board. PMIs have been points of sensitivity for the market.
Risk for the euro.
We saw this in risk for the euro. This is Germany manufacturing sliding deeper into contraction. Composite maybe going into an area below 50. You can see it here for the UK. Not exactly strong, but we want to go to the US. US manufacturing PMI sliding deeper into contraction. Services sliding off. This is what spooked the market in February. We've seen it spook the market before in recent weeks with the PMIs. Could it spook again? I say yes. We seem to be sensitive right now.
Yeah, I mean,
you and
PMIs,
I are done though. Oh.
We are done. No, go ahead. I was just saying PMIs are, besides for GDP, you get quarterly. PMIs are the nice thing to get on the monthly for insights into economic activity.
These are useful, and in absence of other meaningful data this week, coupled with a thin market, a miss here could really spook people again. Thomas, you and I are done here, though. After this, of course, we're going to take a very quick break because it is Wednesday, which means it's time for Truth or Skepticism. Tom Sosnoff, Dylan Radigan, coming up next here on Tasty Live.
Hello, everybody. We're back. We're filming this one a day early because I'm on the road tomorrow. So, but we're excited about topics today. Dylan, thanks for accommodating.
It's always a pleasure. And anything for you, sir. I mean, as you know, I've been traveling myself quite a bit, so I'm sympathetic to your sort of scheduling challenges. In my travels, I've spent a bit of time back in the States here. As you know, I'm an honorary Italian, but I'm back here in the United States, and I've been, I was down in Florida. I've been in New York a bunch, and so I've sort of been getting a refresher on American sort of street culture, if you will, or sort of the nature of the people. And I have to say, I'm suffering from a fairly large amount of consternation, bordering on concern. But I've definitely got a bit of consternation on a few issues.
Okay.
Particularly, I don't know. I mean, because I know you travel a tremendous amount, and so you're familiar with this. I probably travel a little bit more cross-border than you do. But either way, I can't help but notice. I mean, now basically I think when I came back from Italy, whenever it was a week or two ago, the camera just took a picture of my face, used facial recognition, and admitted me. Like it used to be that you still had to see the customs agent when you came in, but by the time you get to the person, the robots have already taken your picture, scanned your passport, and given you the green or the red light. And then you see the person just for a stamp and a welcome home kind of thing.
Yeah.
It's the same thing when you arrive in Italy. Your first interaction is with a robot and a hand scan and a face scan, and then they're like, okay, we know who you are, you're fine, or we know who you are, you're not fine.
Yeah.
And it sort of lent me to some insight that the data, because I was match that obviously all the AI conversation, the cameras everywhere, all these things. That the level of surveillance, and then because we've all studied, the spending, your online habits, what websites do you go to, where do you use your credit card, blah, 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 blah. And it really led me to think to myself, they know exactly where you are. They know how you spend your time. They know how you spend your attention to such a sophisticated degree now that they are willing to put a camera at the border of the United States of America, one of the most defended immigration, the Trump thing with all the immigration, and even with all the carrying on, they are confident enough in their intelligence gathering and in their surveillance that if they just put your face in front of a camera, that they immediately are like, okay, Tom Sosnoff's okay, let him in, or Dylan's okay, let him in, or Dylan's not okay, ask him a question. And I just wonder the degree to which, the whole New Hampshire, live free or die, or the United States Constitution, the right to life.
I'm following you all the way.
Life, liberty, and the pursuit of happiness. You might have heard of it. And the degree to which liberty is restricted by the surveillance state, so that we sort of are sleepwalking our way into an imperial control environment. That's because people are carrying, China has these social scores, and Tom gets a bad score, and I just think that we are naive in allowing the total takeover of the surveillance of cameras plus AI plus metadata integration in a way that how can you be free when you are, that freedom by definition means the liberty to act without being surveyed, and that we're forfeiting our freedom, and that the country is forfeiting its freedom in the name of having a well-served algorithm of TikTok content and an expedited border crossing, and it's a sucker's game. I have to say, as a hillbilly from upstate New York, I'm a little concerned, and I know you're not, but I'm interested in why are you so?
I love your definition of freedom. You're being surveilled, and I love I love how everybody that's opposed. I love how everybody wants to talk privacy, and then they want to talk freedom, and the whole live free or die, perfect example. But let me give you an example, Mr. Radigan. Okay. It's called life, conveniences, value of time. It's called best use of your resources. It's called true capitalism to a certain extent. You brought up the topic, so I am going to finish the line of thinking here for you, counselor.
So, okay.
You fly into the United States. Let's say you came to see me in Chicago.
That's right.
So you landed Terminal 5 at O'Hare.
As I would.
And as you do. And you get into some Sunday nights or Wednesday nights, a 2.5-hour wait to walk through the line, because the old school way of punching passports is outdated, archaic, and beyond ridiculous. I, on the other hand, have global entry. Mm-hmm. I walk through. I don't even have to put my passport in. I just walk through, and it doesn't even hand you anything anymore. You just walk through, and then as I'm walking past the immigration agent, they say, "Thank you, Tom.
Welcome home, sir. Welcome home.
Welcome home." My point is, assuming you don't have global entry, which 98% of the people don't have. You're in a 2.5-hour line of which you are bitching, not talking about you necessarily, but everybody's bitching.
One might be.
Everybody's bitching nonstop. But these are the same people that say, I want my freedom. I don't want anybody surveilling me. Okay. I want my freedom. But yet I'm very comfortable with the convenience of being surveilled so that I don't have to wait in a 2.5-hour line. And that's just the tip of the iceberg. I went to the Cubs game on Sunday in Chicago, and the lines for the concessions were like 20 minutes long. We're taking a whole inning to get through, but there was no line where you scan your credit card and just take whatever you want, and it just charges you when you walk out.
Robots.
So I went there instead, and next thing you know, I'm out, and the people in line are like, "How'd you get that?" I'm like, "Right there." Like anybody can do that. And I'm sorry, but for the conveniences, and we haven't even scratched the surface of what these conveniences are. Like everybody wants to play the downside. Oh my God, they know where I'm going to be, so they're going to shove an ad down my throat or something like that, or they're going to, the absolute convenience, the safety, and the validation. Let's talk validation for a second. The validation, we live in a world right now where you can give me all the freedom crap you want, and everybody else can give me all that crap. And it's like, I absolutely can't stand that argument. But the reality of it all is that there's a lot of people out there. I don't know what percentage of the freedom seekers are also, and the no surveil people are also full of crap. And there's a lot of stuff that's questionable, that can't be validated. The flip side of that is if you're being surveilled, everything is validated instantly. And so life is completely different. It's safer. It's faster. It's way more efficient. It's way more productive. There's way fewer errors. There's no ARB anywhere. It's all been ARBed. All the inefficiencies have been ARBed out. So all these conveniences are at your fingertips. I don't think there's a person in the world that would say, I'll wait 2.5 hours here rather than walk right through. I don't think that's a personal thing. And so I think we've made this into something that it doesn't have to be. The technology's too good. And frankly, America's behind. We go to restaurants, in Italy, you go to a restaurant, you pay your bill, somebody brings,
at the table. You don't have to send your credit card back and wait.
Nope.
It's ridiculous.
Somebody brings the machine right out to you. They hand it to you. They punch all the numbers. You just you swipe your credit card. You're done. Okay. In America, we're still handing out things, paying bills the old school way.
Pen and paper,
signing stuff. Everything here, like the rest of the world, like you said, well, China does this or this, Europe does this or that. You know what? Good for them. They should be. They're way ahead of us. That's why they have.
I would say you're speaking like a candidate for the dictator of China.
I'm not. I'm also speaking like
you're trying to persuade me that any country. You're trying to say that forfeiting my liberty and my freedom. You're saying convenience trumps liberty.
Well, we are all capitalists in this room. We are free market capitalists. So it's not just convenience, it's production. I don't know how, on the one hand, a Dylan Ratigan, who owns his own business, who's got his fingers in lots of different things in his life, okay, as busy as you are, you don't think about, how when you're productive, you're efficient. Mm-hmm. And when you're efficient, you use your resources so much better. Why should we go backwards? It doesn't make any sense.
I mean, obviously, there's no argument against the convenience of the surveillance state. The only
you were making one.
At what price? The only reason to resist the surveillance state is America is a country's Second Amendment. Where tyranny, whether it's sort of the reaction to the COVID lockdowns, or the sort of that where the desire to have the ability to avoid becoming a slave to the government, that the risk in all of this is that ultimately you have an increasingly, the government has such better data about whoever you are and groups of people, individuals, and as a result has a much higher ability to control you. And that basically you're giving the argument against this is that you're giving the government a level of power, that they like, if you, as you know, because you've traveled all over, but again, you land in Dubai, super convenient, to all the latest technology. I haven't been to China in 10 years, so I don't know, but I'm sure it's the same sort of situation there.
And that's bad. I'm getting really confused by this, and that's bad
because now the Emirati, now if you say the wrong thing, if you speak poorly of the Emirati government when you're in Dubai, like if you and I go out for dinner in Dubai and I'm like, the Sheikh Mohammed, this guy's a clown, and these people, it's just a bunch of oil money, they don't care about it. I speak negatively about the government. There's a reasonable chance that when I go to the airport on the way home, I'll be called into secondary, and they'll say to me, I know people that this has happened to, and they'll say, we would prefer you do not come back here because we heard what you were saying at, the other night at the Burj Al Arab as you were having falafel.
Okay. I think there's
your little government gossip over your little falafel gossip is a problem.
I think there's a big difference between listening to what you're saying when you're eating a falafel with your friend and having the conveniences of modern technology. I am not.
And I'm just saying it's a slippery slope because of the phone. Like this phone is listening to me right now, right? Like these phones are always listening. So basically, if the government wants to wire into the, we're constantly monitored, even at a level that we don't understand, just by the virtue of the fact that we all carry around these devices, which have cameras and microphones that are constantly listening to us, which right now is used for marketing. So if I talk about buying a car, all of a sudden I'm going to see like, took a look at this Toyota or whatever.
Listen, there's no, you can never make an argument. If you can't make the argument to resist technological evolution, no matter what, because if you do, we will fall behind. And whatever advantages we have right now, we won't have in the future. I have seen.
But so then, is that the end of democracy? Does that mean that
I don't think it has anything to do with
Dubai
democracy?
Model and the China model is the future, where they basically have total awareness and total control?
I don't think that has anything to do with the end of democracy. Okay, you can put guardrails around things, but the whole concept of a purist, I hate purist, because the idea that, this is the way it always has been, this is the way it'll be in the future. It's ridiculous that you can't stay competitive. And it doesn't have to mean the end of democracy by any stretch of the imagination. Okay, I don't see how that even comes into play. That's so easy to put guardrails up of what is acceptable and what's not acceptable. Getting easy entry into the U.S. acceptable. Listening to my private conversations not acceptable. Okay, so I don't understand.
But where's the line? But the thing is, once the surveillance infrastructure,
that's why we have laws. I mean, that's why we have regulators. That's like, I don't understand.
But the government is listening. I mean, the government does have a record of everything they're running keyword searches. We have between the Patriot Act, between the NSA, the surveillance is in place.
Listen, there could be a lot of things that can be made better, but to give me the purest the argument about I'm an old school purist, I'm a traditionalist, it doesn't fly with me, because
you're basically saying it's the same as being an Amish who refuses to operate a car. Like at this point,
exactly.
It's
a modern generation. That's exactly what it is.
And it's like arguing cars are the end of democracy.
Well, of course, it's like arguing. If I give you a car, you're gonna drive to a brothel. That's what it is. That's why.
Why are you so confident in the decency of the American government and the value of our laws to protect you from sort of the ultimate surveillance, which is falafel eavesdropping?
I'm less confident at this point given what's going on in Washington now. I'm less confident in the ethics of our government, both sides of the aisle. But I am, I feel like I'm been in a unique position in my life in the last, 25 years or 40 years, whatever you want to say. I haven't been living in the consumer world, in the customer world. And so I only interact with other people, but not just a few people, like hundreds of thousands of people over the last, 25 years. Let's just say 500,000 people at least. And people are good. People aren't bad. People are good. Like, anybody thinks people are bad. People are not bad. There's a few bad apples, but people are genuinely good. And so in a society of people that are genuinely good, I really don't have a problem with doing things that push us forward into kind of a new paradigm. I think that's kind of like I don't see why anybody would be against that. I just don't get it.
And the only reason to be against it is anxiety about future controls, giving the government the vulnerability to excessive government power.
Yeah, but that's the Dylan Ratigan answer, which I agree with is the one that should be the argument. But there's a lot of other people that use it as an advantage because there's a lot of other people that don't really understand things as well, and they are able to manipulate lots of other people, like a whole certain percentage of the population, into thinking that if we move forward, you're going to be left out. And nobody should control you. It's the same thing. It's the same argument for guns. It's the same argument for all this ridiculous stuff that needs to be that, basically if you're worried about your privacy, you're also, you're worried about somebody taking away your gun or somebody doing, all this ridiculous stuff that we need to address in order to be a civilized society. And I think that's where the confusion is. It's because a lot of people are conflicted because the people that they listen to are telling them, it's the same ridiculous argument of we're turning back the clocks on science, on technology, because it's more of a political movement than it is, science.
Right.
And I don't understand how
that it's a misguided social political.
Of course,
it's not. It's like
it's a power grab.
Right.
It's an absolute
just a way
power
to
grab.
acquire power.
That's right. And you more than anybody, it doesn't make any sense. I just don't get it. That's all. I don't understand how anybody can't see that it's way more than a privacy thing. It's a control thing. It's a power grab. And as you make things more efficient, and that's one of the reasons that there's a certain amount of the population that really fears AI, because, I don't fear AI because all AI does, it standardizes everything. It effectively arbs out all the inefficiencies, and therefore it levels the playing field. That doesn't work for everybody, but it works for me.
Mm-hmm. You mentioned civilized society in your recent discussion here. And one of the other things that I noticed in my time back, I was in South Florida and then up here in New York, is that this so-called, semi-civilized society, ultimately, I think America is actually a beautiful place. So I want to be careful not to be inherently negative. So this is sort of like just observations. But I do notice that that there's a huge development in online sports betting. Gambling culture in general is sort of at an all-time high. That basically even I would argue a huge percentage of the entire crypto market is basically a sort of idle speculation, in my opinion. And I understand the utility argument, and I get it in the record keeping and the transaction and the cross border, but I do think that that's also a little bit disingenuous insofar as I think a lot of what happens, certainly with all the meme coins, all these things, is idle speculation down the line. I'll layer against that, certainly in New York, I don't know what it's like in Chicago, but the streets of New York are overrun with this gentle waft of marijuana smoke at all times. The whole of all the streets, it's nuts. Pornography is out of control. I would argue that the prevalence of online pornography, online gambling, and marijuana are the three horsemen of the downfall of society. And I agree with you. People are good, but I also think that young people do better, are healthier, have more. Not just all people have more opportunity to be fulfilled, to have purpose, to have meaningful personal relationships, to be challenged and to learn and to teach when they are not distracted by the sort of endorphin hit or the dopamine hit or the short-term stimulation of gambling culture, and then or the distraction of online pornography, or the sort of sedative of widespread marijuana use. And I mean, I'm sure obviously most people are not smoking pot all the time, and I mean all these things are still, you know, limited. I'm not suggesting that the entire country is sort of on weed, porn, and gambling, but
thank you.
But I am suggesting that there is a wider spread sense of the presence of either the search for distraction or the use of resources for, you know, Warren Buffett used to call the lottery, probably still does call the lottery, a tax on being an idiot. He called state lotteries an idiot tax, where basically it's 100% chance that you're just being taxed for a dumb bet. And it's a dumb bet because you're going to lose your money.
Is he wrong?
No, I think he's right.
Okay.
And so isn't sports gambling and crypto speculation and meme stocking also ultimately another version of an idiot tax?
Not exactly. Because an idiot tax has to do with the reason that Warren Buffett called the lottery an idiot tax is because the cost of play, it's an unfair playing field. Okay, it's not level. I mean, if the odds were exactly like, if you had a 1 in 100 million chance to win the lottery, but the payout was 99.999% of what the take was, of what the pool was, then Warren Buffett could never have said that. He might hate the lottery as an investment, as a shot, whatever you want to say, but if the payout was the entire pool, then he never would have said that, you know, it's crazy. So the reason that we live in a culture of betting, no question about it, and we call it the casino culture. And
but isn't casino culture another version of an idiot tax because it's always stacked against you?
Well, I do think the casino culture, parts of it are. Like, if you're asking me about DraftKings and FanDuel and you know, and all this ESPN bets and MGM bets and whatever else it is, the answer is yes. That's an idiot tax, because at 10%, it's math. At 10%, you know, drawdown, it's essentially impossible to ever get back to even. It's not a level playing field. If you're going to ask me about a technology like digital assets with basically no commissions, just a small bid-ask spread, then I'm going to argue that that's much more of a standardized asset class, and that is not an idiot tax. So when you said before, you lumped together a lot of different things. I agree that part of the digital asset culture, which is like, you know, meme stocks and shit coins and all that kind of crap, those are scams, and those should be regulated out. But the core technology behind, you know, ETH and Bitcoin and some of the other blockchain technologies out there is just incredible. And it is game changing because it's going to be the future of tokenized investing. It's going to be the future of true globalization. And so, no, I do not consider that to be part of the casino culture. So I think there's a distinction there.
So what is the distinction between?
The distinction is the width of the spread, essentially. So if you're going to create an asset class where it is mathematically impossible, except for a few outliers, it's generally mathematically impossible for the person who's making the bet or whatever it is to win over time, then that's a very dangerous direction. I would argue, like you said, that we've gotten into a culture where, where I do think that people, whether they're meme stocks or meme coins or, betting on fantasy football, whatever else is, I think that's part of today's culture. But, I don't necessarily know that that's a bad thing. I just think,
but it was my thinking right now. So, like, humans are good, which we I should think is your most important point.
Right,
and also, I don't know if I've interacted with as many people as you, but I may well have, especially in my years as a television host. And
sure.
Events. Like, I have the same response where it's like, no matter what town I'm in, no matter what place, no matter what country I'm in, people are generally good people. Chinese people, Japanese people, American people, Mexican people are people. At the end of the day.
Yeah.
At the same time, all across the range of governments of the world, including the United States, there's always some moral compass for what's permissiveness versus restrictiveness, right? With sort of the icon of permissiveness being the Netherlands, I'll say, and Amsterdam, where it's basically, all drugs, including hard drugs, are legal. Prostitution is legal, like whatever. That all sort of the sins of mankind are permitted and regulated. And then let's say that the most restrictive version, I'll say, is Saudi Arabia, where no alcohol, women can't wear, have to cover their bodies, all these things. And then every other, I'll say, then you have Amsterdam at the permissive end, and then you have and Riyadh at the restrictive end.
Okay.
In the scope of government morality, how do you even interact with that? Because the reason I say that is because, again, gambling was much more restricted in the United States 25 years ago than it is today. Drugs were much more restricted in the United States 25 years ago than it is today. Like, the United States has drifted from restrictive towards permissive, and it's unclear. For me, the jury is still out as to whether that's a good or a bad thing. But I'm just interested in even how you even conduct an analysis on the government on regulating human behavior, as the government's role in regulating human behavior, speed limits on life.
It's a tough one because, we would like to think that there's a reasonable combination or integration of common sense and capitalism. So, part of the reason that certain let's just say like marijuana is pretty much legal now is because it also helps to create a lot of tax revenue. Part of the reason for the casino culture is that it creates a lot of tax revenue for the states. That's why they still control it. So, it's not like, everybody, every city in America wasn't standing around going, wow, I want to put a casino right in downtown. But they realized, what? How do I create any more revenue? And so, that's the real challenge. And so I don't know. We've been fighting it. And we'll continue to fight it, as far as, are we going to, what are the sin taxes going to be, so-called sin taxes going to be, and all that stuff. But I think that everything that we just talked about is something that you can work through. It's not that complicated. I think the bigger thing is that I think the real issue is that we are the downside here. Let me say it this way. The negative side of the casino culture is that we are teaching young kids or young adults that maybe it's okay to get rich quick, or to try to get rich quick, or it's okay,
or it's the only way, that there's no hope for you.
Yeah,
in a normal
or there's these non-traditional ways. Like the traditional way is you go out and, when you're in high school and you work at McDonald's and you save some money. The new way is, you scrape up some money and then you fire it on the Bear game on Monday night, or you buy
some meme coins.
You buy some meme coin, and that's not a great direction. But we can address that stuff. But that's not a great direction to be going in. But the reality of where we are is, you can't turn back. Like, you're not going to say, oh, now we're not going to allow gambling or whatever it is. Like, the casino culture has to be dealt with in a way where you basically have to commoditize the markets. And then everything works. So rather than thinking, oh man, how do we get kids to stop gambling? Let's make the gambling markets way more efficient by taking, some of the regulatory burden off the states and putting it into a more cohesive policy, so that we go to an exchange-based gambling, essentially, cut out all the middlemen, and let people, essentially, it's almost peer-to-peer at that point. And at that, then I don't care. Then people will be like, oh, this is it's crazy, but it's more normal.
So your issue is not with the activity itself, which could be argued as moral rot or idle.
Right.
You're saying if you're going to allow these activities, at the very least, do them in a way that's less financially, give them a chance, improve the odds, basically. I mean, tightening the spread improves the odds of making money at the end of the day, metaphorically and literally.
Tightening the spread, what it does is it cleans up all the slop, and then it forces you into actually taking a more legit path. Because it's like what happened in the financial markets. You're essentially you're now the engine. Like you take this casino culture of young people and you make it into the engine of the future, because you create this, efficiency around it. And I think that's really what we need to do. We can't just say, hey, we're not going to do this. Like, you can improve everything with different kinds of advances in technology. And that's all there is to it. You just make things work better, rather than say, because you're never going to go backwards. You can't go backwards. It's not possible.
So basically you're saying restriction culture. The worst version is the restriction culture, being Saudi. I think we would all agree of course. But if you're going to go drift in the direction of a permissive culture, which is what America's doing and where Amsterdam lives, then do it in a way that is the most transparent and efficient, so that because as you move towards permissive activities, it also opens up opportunities for massive exploitation and abuse, basically.
That's right.
And so, okay, if we're going to go permissive, then have a high standard of business practices for permissive activity, so that at the very least you scare away the worst aspects of it. Clean it, keep it as clean as possible.
Yeah, when you remove the slop, you get rid of a lot of the bad actors. That's all there is to it. When that's just how everything starts to get better, and then you focus and you build other stuff. I mean, that's essentially how, when you want to think about like kind of the genesis of AI, that's essentially what it was. There's an incredible amount of slop out there. Let's get rid of it. Yeah. I mean, that's going to be, the future of all technology. It's just going to get better, faster, and it's going to eliminate whatever kind of, hallucinations, weirdness, whatever. I just keep using the term slop. Whatever slop's out there, it's going to remove it.
Yeah. Nice to see you,
Mr. Radigan. That was a really fun conversation today. Yeah. Thank you so much. And we will see you next Wednesday.
I look forward to it.
Cheers.
All right. Safe travels.
I don't know how to do magic, but I do have a sense of how to use magic to steal money from the taxpayer. First, you need to take off anything that makes you look like a magician. That's key, Alex. The critical thing is to look like you're just a man in a suit trying to make a living. Goldman Sachs pulled off the amazing trick of making $3 billion in 3 months' time while the entire financial system collapses, foreclosures are at a record, and unemployment skyrockets, and the US dollar collapses. Shall we begin? TheFacebook.com. Mark, if somebody was to put the question to you about the magnitude of what you think you've launched, how big do you think your product or your service is?
Well, it's impossible to tell.
You said something interesting, which is not within their economic means. I don't know that their economic means should take precedent over public interest. Welcome back. Here's a story to add to your bailout rage. It turns out we weren't told the entire truth about the banks. Honestly, you're probably not even hugely surprised by that. That's your plan for financial reform: printing presses and accounting fraud. And it's happening at the expense of you, me, and every future person in this country because of the money machine that the bankers have running to pay off our politicians. As long as you can risk as much money as you want and pay yourself for all the upside and stick the downside with the taxpayer, human nature will just leave them to screw everybody in America for as long as it's legal to do so. Remember, it got so bad in Egypt that there was a direct correlation between the growth in the GDP and the deterioration in the quality of life of the people, because the people at the top were making their money at the expense of everybody else. It's connected. I'm not here to talk about plans to deal with this till 2017. I'm saying we've got a real problem, and I'm tired of Republicans and Democrats who either want Republicans who want to burn the place to the ground, and Democrats, with all due respect, who want to offer a plan that gets it through their end of their second term of their presidency and then screws me and my kids when it's over. And until we do that, we have to deal with the extraction that is at foot. It is the reason the financial markets are behaving the way they're behaving. That is a mathematical fact. This is not some opinion. This is a mathematical fact.
Started trading around 2018, as soon as I got out of college. Stumbled upon a couple of different YouTube videos and learned that way. Truth or Skepticism with Dylan Radigan was actually kind of what really caught me in the early stages, because Dylan was sort of the skeptic, and like I was a skeptic as well. And Tom was able to sort of convince him, and that was kind of my favorite show from the beginning. The fundamental principle that present fear of future uncertainty is fundamentally overpriced. In other words, volatility and selling volatility is the key to getting a statistical advantage in financial markets, is the biggest takeaway. And that's kind of just the overarching principle I follow.
The beauty of Thinkorswim was that we were different. From the name to the front end technology was clearly what we wanted as traders. Second time around, I think we did a better job. Yes, we are known for our ability to support complex derivatives traders, but we also have the tools for somebody who's brand new who wants to come in on the first floor and work their way up to the top of the building.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80 plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
The amount of time I spend interacting with our customers via email or anything else is pretty much my entire life.
To be so powerful and so valuable, and then to be that approachable,
Just amazing. Where else are you going to be able to email a CEO, get response back?
But you know what? Before he even knew who I was just some idiot trying to learn how to trade. And he still would email and help me learn and everything like that.
Some people say it's nuts. Some people say it's insane. That's what I do.
On today's Trader Taste Test, Tom has a fever, and the only cure is the KFC Chizza. What? Let's go.
Let's see what we have here. Okay, I don't think it's elevated chicken parm, okay? I don't know.
What are your thoughts? Just visual presentation.
He's just going in with his hands.
It's pretty beautiful. Let's see. I'm gonna be totally objective.
Okay.
Impossible.
Okay, Jamal, you're black. We're eating fried chicken.
Yeah, all right.
I knew it was on there.
It's warm.
No. I like it. It's hot. It's delicious.
It rivals the chicken parm in prison.
Out of 5 stars, what do you give it?
1. I'm going 4.2.
Wow.
I'm easily impressed, as Tom will tell you, though, but I think it's very good.
3.5, just because I like Kentucky Fried Chicken.
Come on. Do you want to be KFC's proud?
3.7. I gotta be real. 3.7.
Okay.
Because the chicken's good.
Yeah.
I mean, the chicken's not bad. The sauce tastes like pizza sauce, like bad pizza sauce. I like it.
Out of 5, what do you give it?
3.5.
That's what you do. What?
He likes it. 3.5 stars. He doesn't like it a lot, is what he's trying to say. It's an elevated. It's an elevated. It's an elevated nothing. It's a chicken. It's actually pretty good.
Beat the opening bell. Get trade ideas and market insights before the open. From the creator, Tom Sosnoff, and our chief market strategist, Tom Preston. Every weekday. Sign up at tastylive.com/newsletters.
Woof! The first half of this year's market has been giving the good guys the business.
It's certainly been back and forth for sure, Pete, and I'm getting whiplash over here.
With good mechanics, we can see Team Tasty stay strong in the second half.
Absolutely. Let's check out our starting lineup.
Dr. Jim Schultz, Central Michigan University. Number 51, because trading the Tasty Trade way, that is our minimum probability profit.
Kai Zan, University of North Carolina, Chapel Hill. Number 16, because 16 is one standard deviation on one side.
Brittany Sherrick, Bradley University. Number 15, because I like to carry a positive theta of 15 and make $15 a day. Whoop, whoop.
I like the looks of that lineup.
Well, be mechanical is always better than just trying to run plays and see what sticks, Pete.
When you got skin in the game, you stay in the game.
That's right. Now get off the couch and get into the game.
Watch Tasty Trade.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
What is going on, everybody, and welcome back to today's assignment. It's been a really volatile day, pretty aggressive sell-off to the downside, pretty aggressive dead cat bounce, little bounce into the afternoon, or whatever you want to call it. But we're back with Dr. Jim. Before we get into it, Dr. Jim, how are we doing today?
Man, what's going on, dude? Today's been crazy, man. Like, huge sell-off in the morning.
No doubt.
And then, a little snapback here, rally into the afternoon. The Fed minutes didn't really seem to be much of anything in either direction. So now the question is, of course, what happens the next couple of hours? You know, what happens tomorrow? I think we might have like PMI in the morning or like just some random number, whatever. And then, of course, it's all eyes on Friday morning.
Yeah,
it's all eyes on Powell, 10 o'clock. So we'll see.
Yeah, I was going to ask you got any thoughts, insight heading into Friday for Jackson Hole? It feels like that was going to be like the big binary event everybody's kind of waiting for, a big event we're waiting for, but we've been getting some massive moves way before Jackson Hole on Friday. I mean, Monday, Tuesday, now Wednesday, some large moves.
No, I have no thoughts going into Friday.
Same.
I don't know what's going to happen. Nobody knows what's going to happen, right?
Yeah.
But I do think that I really kind of was getting lulled to sleep just like everybody else, to where I was kind of like, all right, are we going to sleepwalk into Friday, VIX at 14, VIX at 15, like whatever. But now it's like, okay, we got some things shaking up. The VIX is 17. VIX futures are 19 or whatever. Yeah. It's like, okay, Friday comes. Powell says whatever he's going to say, you know, how many bison he caught or how many hikes he went on, whatever. And I mean, it could move the markets, man. Like things could really get shaken up a little bit.
Well, we might. You know, this sell-off does feel a little different this time around, Dr. J. I know we always get sell-offs. We got bought back up pretty quickly, I think the beginning of April. Now we're still trading from those lows here now, but this sell-off feels a little different, right? This might just be my own personal hunch on the market, but this sell-off was pretty aggressive. Not only that, Dr. Jim, I'm pretty surprised at the lack of pop we have seen in the VIX, considering the continued sell-off that we got into today. So I was pretty surprised about VIX not popping more than I thought it would have. I thought that there would have been a little bit more fear induced into the market, but I guess not. And then when I zoom out even onto the daily, Dr. Jim, we really haven't gone anywhere. This sell-off is peanuts in comparison to what we put in the last 3 to 4 months.
No, that's so true. And I'll tell you what, so why do you feel like this time is different? So why do you, I have my own thoughts. I'll share them in a second, but I'm curious, like, so why do you feel like when you say this sell-off, I'm assuming you mean yesterday and today, correct?
Correct. This week, yeah.
Okay, so why does this feel so different to you?
You know, it's kind of funny, Dr. Jim. It always revolves around just a personal hunch, really, at the end of the day. But like, when I sit here and think about it, I think about, on a macro level, disposable income. I think about inflation. I think about a lot of the things that we are just waiting to rip the Band-Aid off of, and I see a lot of that coming around. I mean, student loans, student debt, reports hitting credit bureaus again here soon. Markets at all-time high. I mean, stuff just still not making sense, really, even from 2020. So, I mean, this time feels different in the sense of, I don't know. It feels that way almost every time we get some type of aggressive sell-off, Dr. Jim. It kind of just feels like we've been waiting for something to budge, kind of hitting like a pinnacle point. And is this it right now? Is this the time? VIX still having a lackluster pops? I mean, I don't know, but that's really what it is. That's the hunch.
Okay, so for you, it's kind of it's the macro backdrop. Is that fair? It's the macro
100%.
backdrop.
Yeah, absolutely, 100%. Not that the economy is a reflection of the market by any means, but I digress.
Well, no, I think that's really fair, and I mean that's 100% fair. I do think though it can be very dangerous, kind of tapping into macro backdrops for whatever the market's going to do in a given day, a given week, like a short-term time horizon. Because in my experience, the market doesn't give a rip about the macro backdrop in the short term. It really truly doesn't.
Clearly.
Because exactly. but it's fair. It's fair because it could eventually be the catalyst. I was curious if what you were going to get into.
Yeah.
And this is kind of my own take. The actual, like, if you're watching the tape, like if you spend time in the morning or whatever, you can watch the charts, you can watch the tape, whatever. I was curious if you were actually referring to the actual velocity of the move. Well, so let me share my thoughts really quick. So I actually, I go back and forth on this all the time.
Yeah.
So like if you're watching the tape and you're like, man, like they really want to take it higher, or man, they really want to take it lower. Like if you're watching the tape, it's pretty obvious, honestly. It's not obvious what's going to happen next, but if you're watching it like in hindsight over the last, 5 or 15 seconds or whatever, you're like, man, they really want to take it lower, or they really want to take it higher because the velocity of the moves is picking up the pace and it's picking up speed. I was curious if you meant that because I do think that there could be something there. I really, truly do. However, I cannot tell you how many times I've been like, oh my gosh, it's so obvious.
Yeah.
They want to take it lower. And then what do? They stop and reverse it and just moonshot that thing higher.
Right.
And so I go back and forth all the time, but I was actually curious if you were kind of alluding to the velocity of the moves.
Not which adds to it, obviously. But one thing that I didn't mention today that was pretty obvious today was just the amount of volume in that direction of move that we got to the downside today, which I think adds to the velocity, right? I'm using volume, but, volume and velocity, we can't get those moves without volume anyways. But that's one thing that I saw today, too. And I mean, I don't know about yourself, Dr. Jim, but the beginning of the week, it was a pretty solid week. We were able to catch some decent moves to the downside, and we'll hop into the slides here in a moment. But for today, at least, Dr. Jim, I know chasing directional moves has always been really difficult, for me. And when I was looking at the tape even today, I was recognizing the large amount of volume that we were getting, right? A lot larger than we typically would. And then in hindsight, we ended up having a massive sell-off with a ton of volume hitting the market before that. Nobody could predict that we would have sold off that far, but the volume was definitely there. And it was one of those days where it felt like any type of entry where you felt like you were chasing the move. It kind of just felt like the market just got away from you today. And that's kind of my experience with the market today too, and just sitting on the sidelines and observing and seeing that volume, kind of you were mentioning the velocity of the move, did also play a little bit into that hunch too, right? I know one single trading day has nothing to do with what the market's going to do in the next day or week or month or year for that matter. But from a short time frame perspective, it was definitely an odd move with the lack of VIX.
So are you in the camp of the higher the volume, the greater the conviction behind the move? Are you kind of in that camp?
More so in the camp of the greater the volume, yes, but with caveat, the greater the volume, the more so big decisions are being made right now. So whether that's about to fake out a ton of people, whether that's about to continue in the same direction, it just lets me know, pay attention, something is going to happen. Try to position yourself, try to find your risk to reward, but lights are going up, flashing, caution, something might happen. I don't know what. It could be a massive fake out. We might rip 50 points and dump 150, but somebody's getting involved in the market when we see that volume pick up.
I think that's really fair, especially when you add the snaps. Like, you got a snap and then a double snap. It's like, all right, I should probably pay attention.
It's just like, pay attention, lock in real quick. Yeah.
But I don't know. I mean, that's obviously a very common old adage, whatever. Like, if there's no volume, it doesn't count. Like, you've got to get the people to show up. I don't know. I don't know how I feel about that, honestly.
No, I hear you.
But I really like the way that you phrased it, though, which is, it may not necessarily be telling you anything about the conviction of the move or whatever, but it is telling you that people are showing up.
Right.
Like, people are at their desk today.
Yeah.
Like the hedge funds, the institutions, like they're all there. And so I like that. I like that a lot.
And sometimes there's some volume levels, and it's like, that's either a retail order or that's Tom's order, or that's an institution's order. You know what I'm saying? So some of these large orders,
I always thought it was your order. I just assume it's your order.
Yeah, right. Yeah. No, we can go ahead and get into the slides here. We'll talk a little bit more about the price action, what we had seen today in the market. But Dr. Jim, we're going to talk a little bit about futures tick size and the multipliers that go with a lot of these other future symbols. But we have the tick size, and I just want to start there, and then we'll go down the list of the futures products that we can look at and what's going to be most conducive for you, your account size, and your personality, really, because all of these underlyings do have a personality kind of feel to them. And we'll get into that here in a little bit. But the tick size is going to be your minimum price increment an asset can move by the smallest step in price. Now, Dr. Jim, I know you don't have your glasses on for today, and I didn't recognize how small this was. So let me go to the first one here for you, Dr. Jim. So right up here at the top, we have the symbols on the left side. We have the description right in the middle. So it'll tell us what underlying we're looking at. And then we have the tick size, and then we have the tick value. Right up there at the top, it says the E-mini S&P 500s, the E-mini S&P 500 futures. The tick size for that is going to be about a quarter of a point. Now, the tick size is going to move in quarters on something like the S&P 500. So this is going to be 0.25. Now, there's going to be 4 quarters, or there's going to be 4 ticks within 1 point. So this is important because when we go over here to the tick value, you'll recognize that a quarter of a point is going to be 1 tick, but 1 tick is going to equate to $12.50. So you can imagine if you're trading size or you're trading multiple contracts, you don't just want to go by the points, because if you're setting your risk parameters, you can see just by being off by 3 quarters, 2 ticks, 1 tick, whatever it is, whenever you're measuring what your risk is on any given trade, you can see that margin of risk can be pretty large. Like, we don't really want to be rounding up or rounding down. Again, depending on what your risk tolerance is, or depending on the size really that you're trading. The more size that you trade, the more obvious you rounding up on these points and ticks will become. Because these ticks, again, do have a pretty high tick value depending on what you're trading. That is going to be the tick size. We just kind of indirectly went over the tick value, but the tick value is going to be the dollar value of 1 tick, and how much money you can gain or lose when the price moves by 1 tick in that direction. So we just went over the S&P 500. One of my favorite products to trade is the MNQ. And if we go down here, the NASDAQ, if I'm not mistaken, for 1 point on the NASDAQ, it's about $20. So if 1 point on the NASDAQ is $20, I understand 1 tick, if I can find it, 1 tick is going to be $5. So let me go down here. I think I need my glasses for today too, Dr. Jim. Right over here, so the micros is another good example. The micros, a quarter of a point is going to be 50 cents. So one of the reasons why I like using these products like the micros is because 1 point is going to be $2. It's also really easy for me to calculate in my head, and I think depending on the product that you have most experience with, you're going to be able to do the calculations a little quicker in your head. So I know if I'm trading the micro NASDAQ and I have 10 points of risk on this trade, I know 10 points on NASDAQ is going to be $20, because I'm just going to multiply everything by 2 if I'm gauging everything by points. So I know, because I have so much experience with trading the micro NASDAQ, I understand and I can calculate in my head very quickly that if I have 20 points of risk on the trade and I have 1 contract, I have $40 of risk on the trade. Or if I have 2 contracts, I have 20 points worth of risk, I have $80 worth of risk on the trade. So I can kind of do that math in my head just because I have experience with trading MNQ and I'm familiar with the tick size and the tick value. So whenever I'm getting stopped out of a position, it really shouldn't be too much of a surprise what that dollar amount is going to look like, because we can get these exact tick sizes and tick values right from this chart. Do you have a favorite futures product, Dr. Jim, and what were your thoughts on this slide right here?
I mean, I kind of do, and it's not even on this list.
Okay,
dude, you're forgetting my boy.
Which one is that?
So which one do you think you're forgetting that's not even on this list?
We're gonna go with it's not gold. I know we don't have the micro gold on there, but gold is at the bottom, so I'm gonna assume you weren't talking about gold.
No, it's not gold.
I'm gonna go. We got the Dow. Is this a trick? Wait, real quick. This isn't a trick question, is it?
No.
Okay.
I mean, from what I can gather,
it is a trick question.
I mean, I love I love the NASDAQ just like everybody else.
This is a trick question.
No, it's not.
Guys, look at that. Look at his cadence. Look at Dr. Jim's cadence and the tone in his voice.
This is my normal cadence.
All right. He's better.
The one that you're missing, bro. The one that you're missing is silver. Silver's not even on here.
The silver futures.
Silver, dude, silver's crazy, dude. Oh my gosh, silver's crazy. Now, if you're brand new to futures trading, don't start with silver. Like, I would not start
crazy
with that.
As in volatile?
Yes.
Okay.
Extremely.
Okay.
Extremely. Now, here's something that's interesting, though, that I just realized this just recently. So, like, if you look down the list, like, you have ES, you have NQ, you have RTY, you have, the Dow, then you have gold, and then even micro gold would also be the case.
Yeah.
The relationship between the minis, which you've called the standard here, which is fine, the mini and the micro, the relationship is what? The micro is 1/10 of the mini, right?
Right.
Okay. Silver, the big silver contract is SI, also has a micro, which is SIL. But here's what's interesting. The SIL contract, the micro, is not 1/10 of the mini. It's actually 1/5. So just to throw you off and like totally confuse all your calculations, it's much bigger than you think.
Right.
And so I was like, I was looking at SIL. I'm like, man, this is kind of a big contract. And then I like actually went to like, I was either at CME or wherever. I think Silver's at CME. I was at the CME website and I was looking at it. I'm like, oh, wait a second. It's actually 1/5 the size of SI. And so, Silver is like, man, if you're looking for something that moves, give it a look.
No, I definitely will check it out. I've been saying this. I'm such a creature of habit sometimes, Dr. Jim. Like with M&Q, I'm such an M&Q person. I remember for a while I was trading MES for a little while, and it was like only MES. I'm literally such a creature of habit. There was one year where I ate like peanut butter jelly for lunch like every day just because I got to do the same thing over and over again. But when it comes down to silver, gold futures, I think the Dow, there's a lot of micro products that we can get involved with. So I think, diving into some of those, and when we hop into the platform, we'll check out some silver, Dr. Jim, see what we're talking about in there.
Yeah, give it a look. And, obviously, I mean, if people are getting started, right, with futures,
right,
obviously start with the micros. It doesn't even matter what your account size is. I don't care if you've got $300,000. It doesn't make a difference. Start with the micros because you have to kind of gain some experience. Like, you have to build up some reps. Right.
Oh,
and it's going to be a very different experience. You've got to get used to the leverage. You've got to get used to the velocity of the move. You've got to get used to that specific product. Like you were saying, each product has its own kind of feel, right? Like, for example, the NASDAQ is much more volatile than the S&P 500.
Right.
Like, would you agree with that?
Absolutely, 110%.
And it's not,
from a data standpoint, too,
close.
It shows us that, right?
It's not even close, right? And so it's like, they're highly correlated. Right? I mean, they move together most of the time, but the NASDAQ, the back and forth little wiggles are way more pronounced than they are in the S&P 500. The Russell 2000 sometimes is even more volatile than the NASDAQ.
Right.
And so just understanding kind of the characteristics kind of underneath these guys. And the Dow is kind of off the reservation. The Dow like sometimes moves a lot, sometimes kind of doesn't move a lot. And then obviously gold and silver, they can both move pretty significantly, but silver is going to be the big mover between those two.
Yeah.
But maybe not as much of a difference. Gold and silver can both move quite a bit, actually.
Okay, we'll start to check it out. I know there's the platinum futures as well. I've seen people trading before. I haven't traded the platinum, but we'll jump to the next slide.
I haven't traded platinum either. Do you know what the ticker is?
I don't even know what the ticker is, but we'll jump into more of these futures products in the platform in a moment.
Here we go,
yes,
baby.
Sir.
This is my slide. This is
I already know. It looks slightly different.
Oh man,
I changed it just slightly. So the numbers are the same. The numbers are the same, but the branding is slightly different. I was like, that pop of red at the top, like Dr. Jim, we got 20%, 30%, 40%, 50%, 60%. But what are we even looking at if you're new? This is going to be the risk to reward paired with win rate, and this really gives you your expected value. So what this communicates to us is the fact that if we have a 20% win rate, we need at least a 1 to 4 on average risk to reward to break even. So 20% sounds terrible, right? When you hear 20%, I don't want 20% of nothing. If my doctor told me, you got a 20% chance of blah, 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 I'm going to be like, I don't know how I feel about 20%. But with the 1 to 4 break even, this really puts things into perspective. So if we go over here to the 50% win rate, right? 1 + 1 = 2. A 1 to 1, you would need a 50% win rate to just break even, right? You're risking 1 to make 1. It makes sense why you would need a 1 to 1 to break even over here. So I love to bring this up right after looking at the futures products, the tick value, and the tick size. I was blanking right there. Tick value and the tick size. When we can really calculate those things, we can calculate if we're taking trades that might make sense into the long run. Because if I'm taking a trade where I maybe am looking to make 1 and then risk 2, or that's just how maybe I'm not trying to do that, but because I'm very loose with my risk management, that's how it's panning out. After a series of 20, 30, 40, 50 trades, you're going to kind of see your trading performance land into one of these buckets. But Dr. Jim, we kind of went over this last time again, but this really just highlights the fact that risk to reward, in my opinion, especially risk to reward is something that you really have to lean on, especially when you're trading directionally with something like a futures contracts product or even a 0DTE contract, something that you're trading just straight direction, no neutral positions. Then risk to reward and probability, I believe, is going to play a larger role in your performance, at least.
Yeah, and I totally agree. And when you think about this, right, you want to think about this in a very similar fashion to how you would view a short premium trade, like a vertical spread or a short put or a strangler or whatever, right? It's like you're thinking about the probabilities, you're thinking about, the maximum profit, you're thinking about the maximum loss, like things like that. If you want to get into futures trading, I would begin to apply a very similar framework so that, okay, I'm going after a 1 to 2, a 1 to 3, a 1 to 4, whatever. Like, understand, like, what type of probabilities do you need to make that work in the end? Like, here, let me give you a great example. I think a lot of people don't spend enough time on this, regardless of which side of the fence you want to be on, right? Like, if you want to risk 1 to make 5 and you want to play that game, hey, go for it. If you want to risk 1 to make 1 and play that game, go for it. If you want to risk 2 to make 1 in the futures world, go for it. I think you can be very successful doing that, actually. But I think a lot of traders don't spend enough time thinking about this so that they understand what they're signing up for. They understand what they're trying to accomplish. Case in point, so the Tasty research has been so good and so effective at uncovering different opportunities for us. One of those is the following. So for the longest time, selling premium, selling strangles, whatever, we've been kind of just anchored on 50% of max profit, like 50% of max profit.
Right.
That's what I'm going for. I'm waiting until I get there. I take it off, whatever. Well, the Tasty research started to look at that, and the guys and gals on the research team started to kind of do some work around that. And what they noticed was, hey, if you're actually up 20% after a day or after 2 days or whatever, you're actually outperforming what you technically, quote unquote, should be performing at that point. So you should consider taking it off because you're ahead of the curve, if you will. I think that's great. I think that's terrific.
Yeah.
But here's the problem. Here's the issue. And it ties right back into what you have on this slide. I think a lot of traders started doing that and they started racking up a bunch of wins. But then I had so many conversations live at the events, so many emails, so many back and forth saying, Dr. Jim, I'm doing this, I'm doing that, I'm managing early, I'm managing even earlier, whatever, but I'm not making any money. Like, I'm not actually moving forward with my P&L. And the thing that kept coming up over and over and over again is the traders hadn't quite realized that, hey, if I'm going to be, instead of 50% of max profit, I'm going to be taking things off at 30% of max profit on average, or 35% of max profit on average. I need an even higher probability on the back end to make all the numbers work. I can't get away with the same pop that I had before that because now I'm not getting as much from each win. And so having some kind of, framework around what you have on the slide here is so important because you understand, like, all right, this is the game I want to play. I want to play a 1 to 1. I want to play a 1 to 3. I want to play a 2 to 1, whatever. And this is what I'm going to need to be able to do to be successful. I think a lot of traders should spend time kind of figuring that out.
No, I like how you brought up that was one of my favorite studies that we did, Dr. Jim. And shout out to the guys on the research team because I think I might have asked them, yo, can you send me that study again? Can you send me that study again? Maybe like 3 times over 1 year. But just the one where when you're up the credit you receive maybe 20% in a day or two, just knowing when to take those off a little sooner. But it's funny you bring that up because that happened to be one of my favorite pieces that they used to do. Because again, it brings things into perspective. And I think data and pieces that are able to just show you the larger picture view, I find to be a little bit more fond of.
Mm-hmm. No, I think it's good.
Absolutely. And we can go ahead jump to the platform here. We'll start checking out some of these other futures products. There we go. Start checking out some of these other futures products. But before we do that, Dr. Jim, let's get your thoughts on some of these positions. We got a couple new ones. A position or two did get bailed out because of the sell-off the last couple of days, but who knows where the market's going to be by the end of this week. So as we do that, Dr. Jim, we got Microsoft. This was an earnings trade, I believe, if I'm not mistaken. Went completely against me, and look where we're sitting now here, Dr. Jim. We still have 30 days left till expiration, but it is nice to just have an earnings trade. That went, let me see. This was the earnings move, I believe. And now we've finally given back most of the move from that gap up and the continued move after earnings. Now we're finally coming back down to earth here. So going to be a little bit patient in Microsoft. I'll ride that one a little bit longer, maybe up until next week at least, and then we'll come back and reconsider. RKT, this was another smaller stock that started to pop off for whatever reason. This was a position that Gus and I had put on for risk and reward, which is, again, every Tuesday, Thursday, 4:30 Central Time. Come check it out. But this was a risk reward speculative position that we put on in there. Just had bought a put in there, smaller trade. SPY finally coming back in my favor. sold in out of the money call spread on that one, Dr. Jim. $5 wide, was able to collect about 274, so a little bit more than I typically would on a $5 wide. And then UNH, Dr. Jim, I don't know if you heard the news. The news with Warren Buffett and Berkshire Hathaway got involved in UNH. So, my contrarian self and my rebellious self, I had to get short UNH. So I went and sold an out of the money call spread just for the short term, just for the time being, hoping to fade the hype move and talking about the hype from a name like Berkshire purchasing UNH. UNH was a really interesting one. It got absolutely hammered. Obviously, there's been a lot of headlines with UNH and the whole scandal and this and that and all of those things. And it does seem that like when Berkshire decided to buy into UNH, that was just like the signal where people had just enough confidence to get involved with UNH. But anyways, we're gonna get short here, see how that one plays out. But we have these positions on here, Dr. Jim. Does any of these stand out to you?
Well, I give you some credit for kind of fading Warren Buffett there and getting short UNH.
Oh yeah.
I mean that takes some cojones, man. Like I got to give you some credit there.
Thank you, brother. Then, we definitely have a different time horizon and definitely a different bank account. He can absorb a lot more than I can, but the little dog is gonna fight in this race. So.
Well, I think you've got a longer time horizon than him. I mean, he's like 97. I mean, he may not make it to October expiration.
I mean, when you put it that way,
I think you're good. I think you're good for a couple rolls, man.
Yeah, I might be.
But Microsoft. So, man, look at Microsoft. So, how amazing is it that you put this trade on? It's defined risk, right? And you just get you get put in the pain cave like pretty early on, and then the next thing you know, it comes back.
Yeah.
No, it comes back, man. Like that's the beauty of what we do, and that's really the beauty of you sell premium, you control your position size on entry, you know what you've signed up for. You're like, hey, I'm gonna give this thing the full time if that's what it takes. And now look at where you're at, man. It's awesome stuff.
No, thanks, Dr. Jim. We'll be a little bit more patient on here, and then again, I think next Wednesday we'll be with each other again. We'll circle back around. And we'll talk about how I'm gonna continue to manage this one, unless Microsoft continues to sell off for whatever reason throughout the end of the week. Then we'll take it off, but we'll circle back to it. With that being said, anything else to add on to this?
Pull up some silver.
All right, that's what we're gonna jump into next, Dr.
Silver
Jim.
is SI, and then SIL is
all right.
The micro silver, which again is like 1/5 the size.
There we go.
You can look at either one. They're gonna track. They're gonna track the same price. SIL.
SIL. There we go. Look at some micro silver. We'll look at platinum right after this. I think Ajit and a couple others in the chat we're talking about some platinum, but we'll check that out.
Yeah, I mean, you look at silver. I mean, silver's had a pretty. Silver's what, up 50 cents today or something?
Yeah, Dr. Jim.
Silver's
the roll expiration, that was kind of funny. That was pretty fun. I'll give you that.
Oh yeah, no, I see him in the chat. Yeah. No, it's true though, man. I mean,
that was good. That was
the only thing that's going to expire in October.
I give you
but
that.
Yeah, no, but silver.
Yeah.
I mean, if you're looking for something that moves, like if you're looking for something that can really be volatile, and you want a little something that's going to kind of cause the old blood pressure to tick up a little bit, get into some silver, man.
I really, it would be such a fun video to make, Dr. Jim. I really wouldn't be against, like, let's say one day we get one of those, it just tests your blood pressure, like put it on your finger, wrap it around your arm, and like just trade with it for one day. Like that would be such a funny video. I don't know why we haven't done that. I might have to whip something up.
Yeah, didn't they do that? Didn't they do that with poker players back in the day?
They?
I think they've done that before. And it's so interesting. Like, it's so interesting to watch these guys like under incredible amounts of stress with like huge dollar amounts on the line. They're making decisions, and you can see some of them are like barely awake, and some of them are like flipping out. Like it's pretty cool.
No, it'd be kind of funny too, because you can kind of see that heart rate going up, and some of them probably have their poker shades on. They're all calm on the outside, but their things going all crazy. Excuse me, all crazy. But no, I think that would be fun. We'll circle back around to that. I'm looking at silver right now, Dr. Jim. We're trying to look at silver. I don't know if you saw NASDAQ as we went away from that for a quick second, but the market is rallying. The market is getting bought back up from what we sold off from this morning.
No, I saw that. I'm wondering if, I mean, it's not a huge rally, but it looks like the NASDAQ just jumped like 30, 40 points in the last couple of minutes.
Yeah.
I'm wondering if something came out. I don't know. I mean, 30, 40 points, that's kind of normal market behavior. So, I mean, you don't want to read too much into that, but I am wondering if there might be a tweet or something that we missed.
Yeah. Maybe so. Maybe so.
It could just, honestly, on a day like today, though, I would probably chalk it up to just normal market behavior because the market has been very active all day. I mean, it's been moving. I mean, the NASDAQ's been moving 5, 10, 15 points every couple seconds, pretty much the entire day. And so today might just be one of those days where you're getting quite a bit of back and forth movement, like inside these bigger moves that are taking place in the market.
Yeah, pretty much. I mean, what do we got? We got about an hour and some change left until market close. I was taking a look over here, Dr. Jim, at some of these other products. I'm looking for some platinum right now. I want to take a peek at that, and I'm not against like some corn. I'm not against for the weird stuff. I'll start trading some of the weird stuff too.
Oh man, like that's how you know you're on the struggle bus.
I'm just calling how it is. The weird stuff. The weird stuff,
Man.
like the wheat.
Wheat, that's some crazy stuff. All right, platinum. Yeah, but do we even know? Like, do you even know the tick size of platinum? I have no idea.
No, I can see here. Platinum. Let's go with some micro platinum. See if we can get some micro platinum.
They may not even have it though.
No, maybe not.
Would it be MPL maybe?
Michael Porter Jr. Yes, sir.
Yeah, right. No, platinum might just be for the big dogs.
No, it might just be for the big dogs, but I still want to take a quick look at it. NASDAQ, I just prefer the volatility and the behavior NASDAQ has. Like, NASDAQ is so different from gold. I was looking at gold a couple months ago, but it's just so different. I almost feel like whenever you're going to start trading a new product, like actively, you have to really commit, like even mentally. Yep. Live cattle, yeah, let's trade some live cattle. But you really do have to like commit to it mentally, because there were sometimes I was going back, I would trade a little bit of the gold futures, but I would then find myself just looking at NASDAQ again, and it's like, you know, it is one of those things. And another thing I even noticed, especially if you're actively trading or looking for scalps or whatever the case might be, like entering and exiting the positions even just feels completely different from product to product. So I'm going to challenge myself here, Dr. Jim, and also next week, just remind me, like, yo, Errol, did you check out a new product yet? Because I want to keep expanding my horizon too. So.
Well, yeah, you could check out. I would check out silver because it does have the micro availability. Platinum might be a bit more challenging if it doesn't have the micro availability. But you're 100% right. And so on that note, in terms of product differentiation, like one thing to know, like first of all, like if you're going to trade gold or silver, one thing to understand is that, I mean, the metals open up, like the opening moment is 8:20.
Right.
So the metals markets open up at 8:20 Eastern, so 7:20 Central.
Okay, so about 10 minutes.
That's when the futures market gets super. No, it's an hour. It's 70 minutes before the stock market opens.
Okay.
So the metals markets, that's kind of the opening moment of those metals. So you normally see them begin to get super active right around that moment. And so again, like the morning can be quite active, similar to equities. But then the evenings also, not so much for silver, but for gold. Gold can be like, normally if people watch the markets in the evenings, it's normally pretty quiet. Right? Like like sometimes you'll get a little something. And if it's like an election or something, it's obviously going to be crazy or whatever. But like on just any given like random evening, gold can still move around a little bit. So gold can be a good vehicle to use if you want to do some trading, in the evenings.
Yeah.
Whereas the equities are a bit more challenging.
No, I hear you completely. As you were talking about gold and some of the price action from gold, I was taking a look at silver. I mean, what is this price action, Dr. Jim? Coming from a NASDAQ guy, it's just like this price action is insane. Like seeing something on like this on NASDAQ, like, yeah, you might, but I mean, what a move on silver. And quickly,
it's a big move, man. And I mean, just to give you some context too, a 50-cent move in silver for a given day is not really that big of a move. Like silver will routinely move 60, 80 cents, $1 a day. So there's a lot of back and forth, especially if, I mean, I know your style of trading.
Yeah.
You're typically 1 to 2, 1 to 3.
Yeah. 1 to 2 at least. If it ever gets larger than a 1 to 2 or 1 to 3, it's because the market gave me more room than I was anticipating. But I never shoot for it. Yeah.
Well, then this could be a good option for you.
Okay.
Because if you are on the right side of that move for that day, as you can see today.
Yeah.
I mean, there were some opportunities this morning to get long, which of course, I mean, in hindsight, it all looks obvious. Yeah.
No, 100%. Again, volatility is a trader's best friend. So if these products have a lot of volatility, I mean, we're going to be attracted to it in some way. I want to take a quick look at Celsius. Dimitri, I see you were looking at wheat a little bit. We're going to quickly look at Celsius here. Celsius was absolutely popping off. I don't really want to sell anything in here. IV's pretty low. But if I go to the daily real quick, Dr. Jim, and then we'll go back to, we'll tie it up with the futures talk. But I was looking at Celsius. Celsius has been going crazy lately. As a trader, not exactly sure why, and not that I really care, but will it give me some type of risk reward that I find attractive? But I wanted to look at this quickly with you, Dr. Jim. I know we've looked at Celsius a couple times before, but I am part of maybe 20% of Celsius's monthly revenue. So that's exactly why I'm going to short and get my money back. No, $5 wide. Nothing super attractive in here, really.
I mean, it's only a $60 stock. I mean, what about doing something undefined risk in there? What about setting up a strangle?
That's true. That is true.
Hey,
okay,
man, we got time. We got time. Set it up.
You're right. I'm going to set it up. It is a cheaper underlying. I was saving some buying power for later this week. But let me see what the strangle's looking like. The strangle is just such a better position on this right now.
Wow, look at that buying power, man. That's under $1,000.
I know, and it's undefined risk.
Man, that's nice. That's really nice, man. I mean, look at the probabilities. Like, that's just a solid looking trade, man.
Buy and hold.
Oh, here we go. We're getting the secret sauce right here. What are you bringing up?
Bringing up the IVR. So what the IVR is going to calculate? No, I'm just playing. Just got the IVR.
Okay, I thought it was something super secret.
Nah.
You brought up the thing we've been using for 15 years.
Yep.
Yeah.
No, I was just looking to see what Ivy's been doing as we've been rallying. Interesting, Ivy popped a little bit in Celsius as we went into the highs, which is interesting.
Again, just going back to the strike selection, right? You've got the stock at 62, right? You've got a 57, 68 strangle. I mean, you've got so much room on both sides, right? And it's like, man, like it's a fairly small position, buying power wise. I don't know, man. Like I understand and can respect the fact that you want to save some capital, but this looks like a really nice trade that you can fit into, a lot of modest account sizes.
I think I might skew it to the downside just a little bit, Dr. Jim.
Okay.
I like it.
I think that's fine.
Yeah, I like it, but I think I'm gonna skew it just a little bit. We're gonna pull that down a little bit to 55. We're at least close to that one standard deviation, just a little bit outside the expected move on the put side. 55. Get a little visual. There we go. I kind of like this a little better because if the market sells off within the next week or two, then I can pull this call side down just a little bit more. So if I give myself some more room on the put side, we do get that. I won't feel like I'm trapping myself in a narrow range too much. But I'm going to go with that one, Dr. Jim. Appreciate you throwing the suggestion of the strangle, actually. Yeah.
There you go. I mean, I just saw the $60 stock, and I'm like, this could work,
Yeah, actually, it worked really
I
well.
understand. I mean, for everybody out there, it's like you've got 10 grand, you've got 15 grand, whatever. It's like it can be very difficult to find undefined risk positions that are going to fit that aren't just astronomically large relative to your account size.
Yeah.
But this is one where the buying power is $700. It's like, man, if you've got 10 grand or more, you can fit that in your portfolio, and like that is sized correctly. Like that is small enough for what we typically like to do.
Yeah, awesome. Let me see. We got filled on. Yeah, we got filled on Celsius. There we go.
Man, look at the market. It's rallying back.
Is it? There's just no way.
NASDAQ's at 335 now. If this thing closes green, that's going to be hilarious.
There's just no way.
Oh my gosh, it's going to be so funny.
I love that slogan. There's just no way. I might have to get that on a shirt. There's just no way.
Oh man, it's so funny, man. It's just, the whole thing just makes me laugh.
No, that's insane. If we keep rallying, I'm gonna get short again. So,
that's the contrarian in you, man.
That's just the contrarian.
That's the
I don't know where does that
Tom Sosnoff effect.
I mean, where does that come from, though? Like,
it comes from Tom. It's impacted all of us.
No, just
we're all the same. We all do the same thing.
I'm like, yeah, keep rallying so I get a nice short position on there. But no, I think that those are the extra positions I'm gonna get in. I really just wanted to look at Celsius with you, Dr. Jim. I'm gonna. The capital wasn't too intensive. I wanted to be a little patient as we head into the last couple of days of this week, and then with Jackson Hole, and then I'm going to deploy a little bit more capital there. But I mean, things are looking pretty up from here. I mean, Microsoft finally got that one out of the hole. You ever have that position in your portfolio for like 2 months, and you're like, at this point, I just can't wait to get you out of there and redeploy that capital elsewhere. But Microsoft took a little extra patience. I think at the time, about a 50, maybe almost a 60-day till expiration contract for the earnings. That ended up coming back, fortunately. And then RKT was a speculative risk of the week. SPY out of the money call spread, got another week to manage that. And then UNH fading the hype off of the news released last week. So that's what we got going on in the portfolio. That's a little bit more about the futures products, tick sizes, tick values. Anything else to add before we start to wrap for today, Dr. Jim?
No, I like it. I love the discussion, futures, because futures are just such a nice complement to an options portfolio. Yeah, because there's just so many things you can do with the futures that you can't do with the options. There's so many things you can do with the options that you can't do with the futures. But when it comes to like liquidity, it comes to leverage, it comes to wanting to be directional for whatever reason you might want to be directional. It could be a hunch, it could be a scalp, it could be it could be a hedge, it could be so many different things. The futures are going to be such a nice complement to what you might be doing kind of, with 80 to 90% of your foundation with options that I really love the discussion. And I think it's something that if you're not trading futures out there, I think it's something to consider. If for no other reason, definitely consider futures options. Mm-hmm. So, and we didn't talk about that today.
No, we didn't.
But futures options like MES, like MNQ, they can give you really, really nice exposure in the indexes at only a fraction of the buying power that you would have to put up in the like SPY or QQQ.
I think quite literally a fraction. We'll look at that next time, but I think the capital and requirement is a lot lower, so we will touch on that.
It's a lot. That would be a great topic for next time, because yes, it is a lot lower. And here's what's crazy: it's even super low in an IRA.
Okay.
Which that's what's crazy. It doesn't make any sense. I don't get it. But if you go in, like if anybody out there is watching in an IRA right now, like do this. Set up a 10 delta strangle in SPY and look at the buying power. It's going to be astronomical. Now, go to MES and set up the same 10 delta strangle. It's going to be like nothing. It's going to be a literal fraction of what that buying power was. It's the same position.
Yeah.
The sizing's a little bit different in the tick sizes and whatever, but you still have exposure to the S&P 500 index in an undefined way, and the buying power is significantly less.
We'll definitely check it out. Maybe we even check out some of the options on futures, see how that silver market's looking, see how that platinum's market's looking. But no, I'm excited. We'll become a little bit more familiar with a lot of these other products. Let's not neglect any of them. A lot of them are trading a lot of volume for a reason. There's a lot of active participants in there, so we'll check out to see what they're talking about on that end of things. As we wrap here, Dr. Jim, anything else to add? I know you kind of gave your piece there.
No.
Cool.
No, that's it. Tomorrow morning, I think we've got some PMIs or something coming out. And then obviously Friday morning, the question is, how many bison did Powell shoot?
How many bison?
I'm probably 3 bid, I would say.
Was it this week when I asked you about that tide theory? I was going to, if I
yes.
Was that? Yes.
Yes. And I was kind of disappointed that you didn't know.
I totally forgot. So we were working on a video.
For people that are watching at home that don't know, like Errol, like you teams chatted me. It was either yesterday or the day before. You're like, hey, what's going on with Powell's tie color? Like, what's the theory behind that? I'm like, bro, you don't know?
I'm colorblind.
You don't know?
I get a pass. I'm colorblind.
Dude, I'm like, this is the most important financial indicator that exists, and you don't know this?
I get a pass, Dr. Jim. I'm colorblind. Hey,
I don't know, man.
Some colorblind glasses would be fire. I think that's the goal for at the end of this year into next year, 2020, 2026.
It does explain that shirt today.
Yes. I didn't realize it was that pink. I'm not gonna lie.
It's pretty pink.
I didn't even realize. I didn't even realize.
It's a statement.
I didn't even realize it was that
pink. You're making a statement.
Yeah. It was more so just laundry purposes as to why this needed to be whipped out for the day. But I'm glad.
I like it.
We like the shirt. But anyways, that's gonna wrap it up for today's assignment. Thanks for taking the time to hang out with us, Dr. Jim. We always appreciate you having you in the professor seat, getting your thoughts and insights as always. Be sure to stay tuned for more segments coming on next. We'll catch you guys next time. Peace.
Peace.
Dear Karen, thank you so much for the relationship advice. Of course, since you met your husband in high school, I should obviously just go back to high school. Can't wait to win the Nobel Prize for my development of a time machine. Signed, Regina.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
You're mistaking me for someone who cares.
From the smart mouths at tastylive.
All right.
Perfect. I would like to buy Park Place.
No.
What?
There is no Park Place in this game.
Yes, there is. I'm looking at it.
No.
I
This
will
is mine.
take
It's
it.
mine. You don't get it.
Okay, alrighty.
You know what? $500. $500 to the electric company if you want to keep all of your power on all these houses and hotels. And
You can't negotiate. I landed on it. I can buy it if I want
I'm
it.
the electric company. I'm the most powerful thing here.
Excuse me, to the person who owns one property on Monopoly. This is the mayor, and I'm overturning everything, and
You're
I'm
in over
allowed
your
to
head.
buy. Excuse me?
You're in over your cute little head.
Don't patronize me.
You
This
don't
is a
come
board
down
game.
to where the big chimps play and expect to get a banana, sweetheart. You gotta earn it.
Okay, asshole. Give me my money back. Come on, let's keep
Whoa.
playing.
Whoa. Whoa. Asshole. No, my father was an asshole. I'm king.
You are so wrong.
I'm very right.
Did you even take a wallet? Did you just eat my piece?
You don't have a piece now.
Seriously,
The
it's a
dog is
game.
gone. The dog is gone. You have nothing. I have a car.
Are you seriously pissed off because you're losing the game?
I'm not losing. I'm winning.
You are clearly losing. Look at the board game.
Every utility, 2 of the railroads, and what do you just have? You have a bunch of hotels and houses, which in this market is ridiculous. A nice, simple house on Mediterranean Avenue, a beautiful car worth 10 times more than your dog who is gone. Cut a deal with me. Come on.
Okay, I quit. If you're gonna be an asshole, I quit.
Then I win. The old bait and switch. I got you. I told you I'd never lose this game. I've always got a plan. And you fell for it. Boom! Shalaka!
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, 4 large, 4K, 4 grand. Get on the platform for traders who just want to trade. Tasty Trade. Make your move. The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Tasty Trade has crypto, and you can trade with 0 commissions, Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Ring the alarm, hey, ring the alarm, boys. Turn up the charm. Listen up, y'all. Get out the damn stall. It's the last call. Hey, the last call. The last call. The last call.
Mikey, we are back, my friend, and the dip has been bought. E-minis only down 13 here at the end of the session here. 64.19. You've got the NASDAQ down 140. You got the Dow up 74 and the Russell down 8. So very muted day if you just closed your eyes and woke up just now here. You've got the oil futures up at 62.93, up $1.16. Volatility futures unchanged. We did get a 19 handle briefly in the middle of the day here at the lows. Got bonds up 8 ticks. Gold and silver both staying near the highs here. Gold up $33, silver up 54 cents. Bitcoin has had some two-sided action, about $900 to the upside on the futures. Spot up 550, and then Ethereum as well has had a really big candle. Just some huge moves underneath the surface. Some big candles, as you'll see today. You look at something like Palantir, which went from 142 up to 156 where we're at right now. So it's had about a 14-point intraday range. We talked about Reddit as well, another one that's had about a $20-ish intraday range. Even the big names like Nvidia, which is basically unchanged here, traded in the 160 handle. It traded 168 earlier in the session here. It's now at 174. That's a $7 move in one of the biggest companies, the biggest company in the world right now. Some of the laggers, Apple, Amazon have been weak all session. Meta as well has kind of been in the doghouse here. Google below 200. It's been a quite a rally back in the last like hour and a half ish, about 30, 40 handles. Do you think it's over?
I mean,
is this it?
I'm actually shocked that we got inside the 20-point range. We had a 20-point projected range this morning in the futures.
That's true.
And then we were down 60, and I was like, okay, we're outside the move.
Yeah.
And now here we are down 12 inside the move.
See, that's
implied volatility. I just had to ring that bell, you know?
Vol never really got super bid today.
Yeah.
Like it was up, 0.5%, maybe 1% at one point today. I mean, it was up to 19. We opened at 1835, so we'll call it, about 0.5% to the upside. I mean, it was a nothing burger all day today, despite the move that we were seeing. So it did feel kind of like, a little bit of a capitulation and changing.
They tried.
I mean, I don't think we were playing for any sort of crash, but
no,
I wasn't expecting to see pretty much a complete reversal here.
Yeah.
To end the day basically unchanged here at 64.21 on the E-minis. I mean, that's a pretty big move.
Yeah. It was good for 0-day Iron Condor peeps
yes.
like us. We threw that on this morning. Legged out of the call side into that 60-point sell-off.
Took some heat.
Oh, yeah.
We were fully in the money. And
like 30 points.
Diamond-handed.
30 points in the money.
Yeah.
On the put side.
Yeah.
And then, I closed the put side at 12.45. So into that rally, we were down like 25 or something like that.
Yes.
Closed in 75-cent net winner on that 0-day Iron Condor. So that was nice. But we did get a bunch of other trades on from What's Your Assumption, which is always fun.
Yes. Got the Open Door, Kava, Roblox, SoFi.
Yep. A lot of diagonal spreads, long November, short September. And then calendar spread in Tesla, Iron Condor in Roblox, and short put in Open, which is basically, if it goes to zero, whatever.
Yeah, that's your pain point.
Yeah.
But that's okay. You can withstand that. I'm also up $2 on my long New Zealand dollar position.
Ooh.
You like that? $2.
I think I am. I forgot I placed that as well.
We did that for the Tasty FX takeover that we had, or the
98 cents for me.
Tasty Extra, I should call it, this morning. Also had the crypto boys on there, Dan, hanging with us to give us an update on crypto. We're going to have both Glenn and Dan back tomorrow, so it should be good content as well.
Yeah. You might ask why? Well, Tom is in Mexico City.
With Scott, with Bat.
Scott, with Bat. The trio, the Tree Amigos, literally. Today's session is over, but there's another one tomorrow. Looks like you can get free tickets.
Yes.
At rmtc.riskmathics.com.
There you go.
So yeah, it's been a crazy day. I was expecting to sustain the down move, maybe see a little bit more sprinkled to the downside, but this reversal is now in line with implied volatility, and I guess we should have just trusted it from the beginning.
Which is unbelievable, and it speaks to why volatility. We get that question all the time of like, why isn't volatility exploding into the down move, or the market's down today, but volatility's down. What gives is usually the question that we get. And, it all comes down to expectations. And we even had a segment this morning on expected moves. And anytime, even if it's a down move, if it's inside what the market projects to be the daily expected move, that's realized volatility being inside expected. And so, when you look at implied volatility expands when realized volatility is greater than implied. And so even though we had, a wide range today, you would expect volatility to kind of stay where it is, which is what it's doing right now. But even though it's been a downside move, volatility hasn't gone anywhere because the downside move has been relatively nothing. It's well inside what was expected.
Speaking of implied volatility, Walmart earnings tomorrow morning.
Yes.
Some people in the YouTube chat asking if we're doing an earnings trade here.
I put this in the cherry picks as well, so I'll give you a little bit of the risk analysis tool on the platform. So I have this on. So I have a crab trade. What I do on the risk analysis, if you click this Theo button here, this will give you your Theo zones. So this is the theoretical profit or loss. When you have the at expiration button, it's binary. So it's kind of tough with a two different expirations to kind of view it this way. So you have to flip it over to the Theo. If you go to the analysis mode, I'm long the 102 strike, which is in the September monthly, and short the two of the 105s in the weekly. So the 105s are trading at, a dollar-ish, a little over $1. I bought the 113 just to cap the risk. Once we move into the further part of the week, you can actually move the date here. So if you move the date forward, we go to the end of the week, you can see how this risk profile changes. It's very much like a butterfly. I did this for a small debit, so we can go over to the order chains, and you can see I did this at a debit of $1.20. It's currently marked at $1.12, so I'm out 8 cents or something on this trade, very small. But it's a setup for an inside/up move. You get a nice vol contraction that would help as well. Especially if it's an inside move within the next couple days here. So playing for kind of a 105 move in Walmart here into earnings.
Yeah,
but minimal risk to the downside, as you can see from the risk profile. I did this at $1 debit. So if the stock opens at 95, I might lose 30, 40 cents.
Yeah,
something like that.
Very minimal.
Yes. Expected move too. I didn't even mention that. $4.47. So it puts you at about a 106, 107 handle through the end of the week, which would be perfect. Maybe a little bit less.
Yeah, Target had earnings this morning. They sold off. It's actually rallying quite aggressively from the low.
Yes.
It's up 6 points from the low.
94 and change was the low of the session.
Yeah. They had some issues, customers turning away, CEO stepping down. Walmart, similar market, but they've got radioactive shrimp. I mean, you can't win.
Yes.
You just can't win. But yeah, I think it's interesting though, because Target was near lows, Walmart's near highs.
Yes.
Tale of two different stories, very different stories. But Walmart implied volatility is super low, regardless of the expected move tomorrow and IV rank. If you look at any equity and the implied volatility is under 30%, I don't really care what IV rank is. It's low implied volatility.
Yes.
So I like Nick's trade. I like going the debit route for these low IV products. I'll join you. I'll just do a straight up diagonal spread.
Yeah, you can do a cheap diagonal spread for $2.
Yeah.
That gives you, $100 potential profit and realistically a 50 or 60 cent potential loss if you get an inside move.
Yeah.
Maybe a scratch.
I'm going to
got to avoid the tail downside.
Yeah, because the implied volatility is so low, you kind of have to go inside the expected move if you're trying to collect $1. So I'm going to go with the 100, 105. Long October, short the 105 2-day for $4.50.
Very nice.
And that holds a little more risk than yours, but if Walmart sells off, even the out of the money option right now in Walmart, the 105 is trading for $3. So let's say $200-300 of risk tomorrow if there's a decent sell off, but a similar upside profit potential.
Very nice. That's pretty much it for earnings. One other thing that I wanted to point out: oil. There you go. You got filled. Oil /CL. I know we had both put on bullish positions with Thomas yesterday. I actually took mine off today. I added to my short put spread by widening out the spread. Oil futures up $1 and change. Oil volatility, which you can put up OVX.CGI, has come in pretty significantly over the last couple sessions here. So if you've been leaning long oil, might be a time to take some money off the table.
Yeah, it's been a wild, busy day. Even though the market's been pretty calm, we've gotten a ton of trades on. I'm working in order to close Adobe. I don't think that's going to happen with the sell-off today. But a lot of these trades from yesterday are already coming in. So, like ETH A, that call diagonal spread, the Kava call diagonal spread, silver seeing a nice move. SoFi call diagonal spread, that was down. That was down pretty significantly.
The SoFi puts I scalped out of from this morning for $20.
Yeah,
a little cheapy, but something.
It's very possible that tomorrow all of the trades we put on today I close. Like if you get 25-30% in a day, especially we were placing them into the 30-40 point sell off.
Yeah.
And now we're flat. If we get a 20-30 point rally tomorrow, all of these are going to be 30% winners.
Yes.
We'll just take them off.
Let's not jinx it. E-mini's the high of the session here though. Woo. Only down 9. 64.22. NASDAQ down 120. Dow's really been the strongest of the group. When you look at some of the biggest movers in the market, the S&P 100, Intel reversing some of its squeeze to the upside. You got Target in there, Adobe, Tesla's been pretty weak, Apple, Amazon. Those are the three that have been kind of the laggers of the of this bounce back. On the upside, you have some names in the oil space. Costco has been a pretty nice stock over the last couple weeks here, having a nice little move to the upside. MasterCard is in there. Walmart obviously having a strong day, but I think the real story is just the reversal that you saw in Nvidia and a lot of these chip names, a lot of the high-flying stocks like Palantir. If you look at AMD I think traded in the 150 handle. It was 158. AVGO, all these chip maker stocks have had huge reversals. Even if you look at SMH, it was at 280 earlier this morning. It's now at 288. So it's been a whippy little market here. And the first time I can remember, besides prior to yesterday, where the E-minis have traded over 1 million contracts. We have 1.3 million contracts today. So we're getting a little bit of activity in the market here. Maybe that's why we're getting this kind of two-sided swing.
Yeah, I think, of course, the sell-off brought a lot of people, or at least got a lot of people's attention. And this big buy candle here, what is this, a doji hammer?
I think this is a hammer because the gravestone is if it's on the bottom.
Yeah, this is certainly a bullish candle if it continues higher. But yeah, you're seeing it pretty concentrated around those chippies.
Yes.
So yeah, we'll see where we're at tomorrow. It's not looking good from an implied volatility standpoint, I'll tell you that. Another 20-30 point move tomorrow, but later this month we still have some more announcements, things that could move the market. But
you got J-Pow on Friday. Unemployment numbers come tomorrow. My Taiwanese sources just gave me the info that 4 million SPX options traded today. Pretty big number here. The 0-day options, obviously, a hot topic for the peeps.
Yeah, love the 0-day. I mean, the 0 days were smashed today.
We're 4 for 4, which means we are most certainly due. We were talking about being due this morning. We're most certainly due for a tough one because we're going to do it tomorrow too.
Yeah. We'll just have to see where the market's at. We might not do an iron condor. We might do a put spread. We might just do a call spread. We'll see.
You're going to get directional?
Yeah.
You think you know something?
If we're down like 40 or 50 tomorrow, I'm only doing a put spread.
So we're back. We're so back.
We are by the dip.
We're
so by the dip oriented. We've been conditioned by this market.
Yes.
Along with a lot of other people, apparently.
Yes.
But yeah, we'll see what happens with Walmart tomorrow morning. Nvidia is really the last big name yet to report. That's next week,
Yes.
next Wednesday, after the close. So we'll definitely be trading that. But yeah, everything else, you have some fringe names, but nothing that's too appealing here.
E-mini's down 11 here. Any interest in gold? Doing something in gold? Ivy rank of 14. I've been trading iron condors in here. I feel like it might be another spot to kind of get back in.
Yeah, I'm in a good spot right now because I've got the free butterfly on the upside. So my short options are at 3,500, 9 days left. And then I've got the 3,480, 3,520 butterfly wings around that. And I legged into that from a broke wing butterfly. And I have a $100 net credit regardless of what happens. But of course, if we continue rallying towards 3,480 and get closer to 3,500, this will explode with only 9 days left. So I'll probably just wait on this. But if we see any sizable move to the downside, I think I might do the same broke wing butterfly just on the put side. Because I like that it's bouncing off the lows here, and I'd rather be long gold than short it. Yeah. The only time I'm shorting it is when it rips into the high, and then I throw on a broke wing butterfly above that level. So, yeah, as long as it's two-sided action, it's good for everyone. As long as you have some duration.
Yes.
But yeah, crude, some things I need to work out. Crude oil to the upside, micro natty gas to the upside.
Yeah, natty gas has been just a pig. Got a little bit of a relief in some of the ags today. Natty gas sitting at lows. I mean, this thing just doesn't go up anymore. When you look at corn, was red to green today. You had a little bit of a bid in wheat as well. I know we have long positions in both those. I don't know if you're in soybeans. I'm not, but soybeans as well, kind of having some two-sided action. So those are kind of back in play as well at price extremes. If you have been looking for something other than, the wild swings in Palantir and Nvidia, you might be interested in a corn position.
I do have corn.
And we got long at much worse prices last week with Corn Man, Mr. Westwater.
Yeah, I got in the Z contract, I've got the 400, 420, October, September diagonal spread with calls. So long the 400 call in October, short the 420 in September. That one's actually up $140, but it's a longer term trade, so I'm staying in there. But yeah, I am in wheat and corn. I'm not in soybeans. We'll see what happens with these ags. But yeah, definitely looking for a bounce here, even if it's just a short covering, because these things have just been killed.
Yeah. You know what else you might be taking off here? Your lean hogs, live cattle, LE.
Yeah.
Still got that on?
I do not.
Ooh.
But it's climbing.
Yeah.
Continuously.
Westwater nailed this one with the screw worm.
Screw worms are
here, and are genetically modified screw worms that are impotent. Did not work.
Apparently not. I mean,
beef prices to the moon.
You hate to see it for steak summers.
Oh man.
But what are you gonna do? But yeah, maybe this is a broke wing butterfly candidate. That could actually be interesting. These markets aren't great.
Yeah, some tough.
Not great.
E-mini's down 14, just sold off about 5 handles here.
Ooh, scary.
You're gonna buy that dip? No.
I might buy it tomorrow morning.
You think we open?
I mean, I'm so long in this portfolio that the dip, I naturally bought the dip as it happened this morning.
And it worked out.
But yes, how broken are the butterfly wings on gold? I've been doing 20 by 40s. So when gold, let's see, I've been in this for 2 weeks. So when gold ripped up to 3,500 before that big candle to the upside, when it had those 4 or 5 days straight, I bought the 3,480, sold 2 of the 3,500s, and bought 1 of the 3,540s. And then when gold sold off, I moved the 3,540 into the 3,520. So 20 by 40s will yield you a $250 credit or around there. and then you use that credit to buy in the wing on a sell-off.
Yeah. Just remember with futures, you get a lot of leverage. So I just pulled up like a 50 by 100 broken wing butterfly. You have a max loss of, almost $5,000. You only use 1,800 to hold that position, and that's because of span margin, which is a beautiful thing, but adds a little more risk. Or you have more risk relative to the buying power that you're putting up for the trade.
Yeah. But yeah, I've been doing 20 by 40s. They've been great trades this year on the upside and downside. As long as you are buying in the risk whenever you can. As long as you're locking in like a 50 cent to $100 credit, that's where I'm at when I'm bringing in that risk. And yeah, it's been nice. It's been nice.
Very nice.
Ooh, I see some.
Do we have the boys? We'll bring in the boys.
Aha!
On my screen.
Yes.
Hello, gentlemen.
Gentlemen, how goes it?
We're hanging in there. Did you buy the dip, Ilya?
No, I've been selling the sell-off since Monday.
I feel you.
I reloaded up on shorts on Monday because, of course, that's shocking. I know I'm the bullishest of bulls.
I mean, I think this was a much-needed dip. I'm hoping there's a little bit more, but I don't know. The move in volatility here, with volatility contracting a little bit, kind of tells me maybe it's a nothing burger. And you have the event later this week with Jackson Hole. Everybody gets all, scared. You buy your puts, you buy your calls, and then kind of nothing happens. Volatility contracts. It's a story as old and beautiful as time.
It's the Fed party.
I think if that's the case, then we'll know on Monday next week, and that will be the time to be a dip buyer if whatever sell-off doesn't hold. But the story of Jackson Hole over the past years, in particular the Powell years, he tends to throw a grenade in there. So if it doesn't settle nicely on Friday, and then Asia has to open with that and price that in, and Europe has to price that in come Monday, the lead into Wall Street will be a big question. So if they shrug it off, so be it. I'm not so sure.
Let me fact check that there, Nick. Average move around Jackson Hole post-COVID has been only 0.7 points.
For how long?
The standard deviation of the move is about 80. I'm talking day of.
Yeah.
Oh, day of. Okay, yeah.
Standard deviation is 80 points because 2020 S&P closes higher 19.25, 2021 higher by 39, 2022 minus 141.5, 2023 plus 28.25, and last year plus 58.5. So when it's good, it's good. Less than a percent gain. Bad. When it's bad, it's horrific.
Okay.
But Dylan, you're on the phone. What's that song by Thin Lizzy?
What makes you think I know Thin Lizzy songs?
Because it's a classic. Because you're the old guy around here.
You're calling me old? You're just saying I'm the old guy?
Chronologically?
I don't know any Thin Lizzy songs. And chronologically means nothing.
Okay, so then Mike, the answer to your question is: are you buying the dip? My answer is the boys are back in town.
I'm second oldest. I also don't know any Thin Lizzy songs.
Come on, you guys suck.
Oh man, yeah. Honestly, there is actually some implied volatility being pumped into the E-minis on Friday. 55-point expected move relative to 29 tomorrow. So we'll see.
Yeah, you got 17% implied volatility through the end of the week.
Yep.
You think there's any surprise, Ilya or Chris, in what happens at the at Jackson Hole? Think there's any change in the projections?
I think the markets want for there to be dovish change, and I don't think they're going to get it. I think it'll be steady, but that's not what the markets want.
Fair.
Mr. Vecchio?
Who is actually talking about the Fed telling us they're going to give us a cut in September? I don't know anyone who's actually saying that that's the realistic possibility. So I don't know. Maybe the market move already happened
Markets
this week.
have priced it in.
Maybe it's already priced in.
Maybe I should be the Fed chair. I've been calling for no cut this whole year. And here we are.
You got cut 88% or 83%.
88.
You don't think so? If that flips,
it's 83 today. It's been hovering unchanged in the kind of mid to low 80s, basically since it came off from 100% after CPI. Also, that CPI number was the last real uptick in these markets, and that was last week. Since then, we've gone sideways and down. So I don't know. The market does seem to care about this stuff, but I think the speculation is really not around this year. For 3 months, the markets have been basically anchoring where the Fed told them to anchor at 50 basis points for this year since December. The real question is next year, where there's a big divergence. The Fed, again, in the minute today said, nothing's changed, data's the same, that means a quarter point next year. And the market's like, yeah, that's cute. You're doing at least 50 and probably 75.
And there's our bell. E-minis down 18. The NASDAQ down 144. A little bit of a pullback there into the close, but nothing compared to the rally that we had from the lows today. Thank you, boys, for joining us. We're going to take a quick little 90-second break, and they're going to come back with overtime here. You're listening to Tasty Live.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number one for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Why would anybody choose to match the market for the next 5 years?
Would you rather be guaranteed to beat the market by 10% in the next year or be guaranteed to match it for each of the next 5?
Can't you just beat it for the 1 year and then just go match it for the other 4?
Could.
I'm gonna think I'm gonna do that, yeah.
I think I want something a little bit more upfront, so probably just beat the market by 10% this year.
I'm going to say match the market. I do believe over the long term market goes up, so I'm going to say match the market.
Let's match it because there's a lot of psychological risk the other way of either pulling gains off too early or over trading the other way. So if I match it, then I'm locked in, no losers.
Why would anybody choose to match the market for the next 5 years? Like what? Any idiot can buy an index fund and match the market. So I'd always want to beat the market.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Calling all traders. Are you using Tasty Live mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, Tasty Live has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities, and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you would like the chance to share your trading journey and inspire others.
When somebody says tape action, what do you think of?
To me, tape action is a little bit of a historical term because that's how they used to relay the different information for all the different underlyings that you could trade. They would share like the price, the volume. So it'd be a way for people to kind of get a gauge for different markets. But now I just kind of think of it as that little line of information on your screen when you're watching your financial news outlets and seeing what all the different products are currently trading for.
What's a Johnny trader?
A Johnny trader is defined as Nick Batista and myself We are smaller traders, smaller accounts, mid-sized accounts where we can't sling anything we want. We can't do multiple contracts of anything we want. We are really defined to specific parameters in trading in a small way. So a Johnny trader is just someone that might be doing one lots, one contract here and there, or trading smaller price products.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're #1 for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Are the boys back in town? It's Wednesday, August 20th, 2025. This is Overtime. I'm your host, Chris Vecchio in New York, Ilya Spivak in San Francisco, Dylan Radigan in Milan. We'll take you through the rest of this hour. Futures market closes at 5 Eastern, 4 Central. If you're watching on the platform, Tasty Trade, on the website, Tasty Live, head over to YouTube. Tell us what you're trading. What you think of the reversal here, where stocks are down much deeper in the red today, led by the NASDAQ once again. More AI warnings coming down the pipeline. But the S&P 500 NASDAQ do recover, so losses, but less so than we saw. S&P finishes lower by 0.3%, 64.14, after the ever briefest of trips down into that 63.60 area. Bonds move up across the curve today. A decent 20-year bond auction. Nothing impressive on the bid to cover side, but it does stop through. Yields lower as we make our way into the second half of this week with Jackson Hole coming up around the corner. Gold, silver, they rally. It kind of feels like a bit of a defensive day where healthcare and staples are near the top of the heap, and then you see your gold and bonds outperforming your stocks. Either way, though, mixed performance for your US dollar. Dylan, the dip has been bought, my friend. We pull back into channel support here, and stock traders are all eager to lap it up, I should say. Was this the setback? Was this the opportunity to buy the dip before the next swing higher?
I don't know if it was an opportunity. I don't know if it was the opportunity, but certainly it was behavior that validates my optimism, which is especially with the AI names. Anytime you get pullbacks, you buy them. I mean, I think the fact that there's a little AI spook going on, sort of rolling off of the back of the GPT warning or the GPT CEO. I don't know if it was even a warning, but just a temperament, a cautionary tale, or a tale for a mild bit of caution. I think it's fantastic. I think if you're not involved, or you're not involved as much as you'd like to be involved, I think that every time you get a pullback in Nvidia, Meta, Microsoft, I just think it's a wonderful opportunity, and I think that I'm obviously in the majority in that, because if you look at what happened today with the sell-off this morning, and you look at how quickly, you just look at how reflexive everybody is to what I'm saying. I mean, I'm in the majority, I think, when I talk this way, as reflected by the recovery from the weakness this morning.
Oh yeah, whether or not the dip has been bought, that's, it's not another question. It was partially bought today. Was this the correction for Jackson Hole? Did everyone do their deleveraging ahead of Powell's speech? Is he going to surprise us, or do we know that he's not going to come in and gild Trump's lily?
I don't think this is emblematic of anything other than the idea that, in fact, everybody is waiting for this event risk and did not want to get out over their skis today. Because if you look at the last kind of big thing that happens today, you open the day with more tech selling, and of course that makes sense. If most of the market cap is in tech, then when people de-risk portfolios, considering how skewed they are in the direction of tech, even if they just own the S&P, even if they own broad-based diversified indexes. The majority of the action in those indexes, the overwhelming thing to be sold, even if you're selling indexes, is tech because of how skewed everything has been by tech in the past, let's call it 2 years plus. Really, it's more like 5. So when you consider that, you open this way, you get the FOMC minutes, they disappoint, markets fall back in the direction of the lows, and then at the end of the day, they re-anchor. Well, of course they re-anchor. In my mind, they have this huge event risk. Nobody is trying to commit ahead of time until that event risk comes. But the disappointment function is very much in place for that event risk if only you read those FOMC minutes.
What were the FOMC minutes telling us?
I mean, quite clearly the markets didn't like them because they were on the hawkish side. And if you thought that those two dissenters, Bowman and Waller, that wanted rate cuts in July were emblematic of some kind of a broader shift on the committee, you did not get that evidence. The minutes very clearly said that the majority on the committee, almost all participants in the meeting, thought inflation was the greater risk.
It clearly is the greater risk in the short term. The unemployment rate's 4 point whatever percent, right?
Moreover, I mean, that's right. Moreover, a really interesting comment from the minutes suggesting that some policymakers think we're not far off from neutral, which is interesting. And also a little comment there suggesting that maybe the softness in the labor market that's been seen is not so much a function of job losses, because time and again in these minutes, through multiple instances, they note there's not been significant layoffs. What there's been is a slowdown in hiring. And what they attribute this to, in part, is a collapse in immigration. So we perhaps, some of these Fed policymakers are positing here, we're not watching a slowdown in the economy when we look at the labor market. What we're looking at is immigration policy. And that's not necessarily a reason for monetary authorities to stimulate anything, because they don't have any agency over that. So there's an interesting mix here, because what it says is that but for Waller and Bowman, this was a very clear-cut thing. And even for Waller and Bowman, this was a question of timing strategy, not of sort of theoretical or philosophical difference. They also agree, seemingly, with the idea that inflation is the greater risk. They just think we can't wait for perfection on finding out what the tariffs are going to do before the Fed acts. That seems to be the upshot.
Dylan, I don't know if you can see it on the screen here, but one of the charts I'm showing right now is employment change by industry in the most recent jobs report. And, this is one of the reasons why I think that we need to really consider the fact that, inflation is the bigger problem of the two. But as the chart on the screen shows, if you take out healthcare from recent job reports, most other industries are in a state of contraction. Financial services
are they in a state of transaction? Are they in a state of contraction, or is it a transition, the ongoing technological transition towards efficiency?
Maybe
Meaning
that's what it
less
is.
Jobs, more wider, less, more profit per person and less jobs. I mean, because if you go into the future, if you believe the sort of techno-futurologists, if that's a word, we're going to end up with UBI. Like we're going to have a major jobs problem on Earth, maybe sooner than we think, and it's going to need to be addressed. I just don't know that the jobs report listen, the jobs report is the most important report in the world. Full stop. For any employment is the most important consideration for any country in the world. I mean, you can make an argument inflation, but it's between those two. And for sure, obviously, lower hiring is an indication typically of less economic activity. I just wondered what the mix is right now between the degree to which the jobs report indicates diminishing economic activity or the degree to which it indicates increased production efficiency. And obviously, it's a combination. I just don't know what that mix is. And the thing is, with the employment cycle what's that?
Because we have something up. We have something up on the screen here. This is one of the perhaps catalysts for the pullback of the past 2 days in these tech stocks. MIT just put out a report suggesting that while there's been $30 to $40 billion in enterprise investment into AI, organizations are basically seeing 95% of organizations are seeing a zero return on their AI enterprise investments. So the report summarizes just 5% of integrated artificial pilots are extracting millions in value, while the majority contribute no measurable impact to what would be a company's profits, Dylan.
Well, this is the key to the jobs numbers that you were just showing a second ago. They're not showing that there's massive layoffs in industries. What they're showing is that we're noodling at the margins. There's stasis.
There's stasis, but if not for healthcare, it would be an outright decline.
It would be very narrowly negative, but very narrowly. So manufacturing is a small loss.
With the Fed cut, if we had negative jobs growth,
small loss. Government.
Well, the argument I'm trying to make is that if but for healthcare, which is a highly unproductive part of the economy, right? If you're taking care of
very hands-on human.
It's important. I'm not saying it's not important, but it's not a productive area of the economy when you look at
very hands-on human. So probably the most insulated from AI things.
It is. So yes, you're getting this, and obviously we have an aging population, so it's going to continue to tick up. But the things that drive forward the economy, that grow the tax base, that increase incomes, that lead to greater job growth and proliferation, the majority of that's not happening across the board right now. So if I'm a Fed official, the determination that I'm making is whether or not I think inflation is transitory. And if inflation is transitory, then you have enough here to suggest that this isn't an AI-driven slowdown in the labor market. This is just a slowdown in the labor market. And were it not for our aging population, we would not be seeing meaningful jobs growth over the past several months. 416,000 people employed in the healthcare industry over the past 6 months subsumes everything else. Without that, we'd be nowhere.
Well, and this is the thing. We'd be nowhere, but also not precipitously losing jobs, which tells you that, to Dylan's point, this is not a switch from humans to Skynet. This is stasis. But for healthcare.
Okay, so then the Fed, maybe it does need to cut rates in September, Ilya. But if we were worried about it not cutting rates, I guess the argument I'm making is that the move that we saw lower in stocks this week, exacerbated by Sam Altman's comments, perhaps exacerbated by this MIT report. If companies aren't getting any return, Dylan, they're not going to keep doing the CAPEX. And to be clear, there's a difference. If you dig into this, and it's not really, this isn't the program to do so, but I encourage people to do their own research. There's a difference between a ChatGPT AI offering and an AI enterprise offering. The AI enterprise offerings are a lot more bespoke. They're tailored specifically to each company's need. They're not easy to implement. And clearly now the data is showing they're not providing much of a return. So why would companies keep plowing forward with them at the degree that they have?
Well, this is the picks and shovels stage of any new technological breakout, as we've been talking, right? The dot-com bust happens in 2000. The transformation of the entire world by telecoms happens after that. You get the big build out, the big hype cycle, the big, oh my God, this is the change that will upend everything. Then you hit the point where you've overhyped and overinvested And then over an extended period, the narrative bears out, but not before you hit this overcooked spot where everybody's essentially thinking too far ahead. But that happens every time. It happens with railroads. It happens with every major transformational change historically that you can think of.
There's an interesting day in terms of the most traded stocks. I'm looking at the high options volume watch list that's here on the platform. You can go over to liquidity and click high options volume. A lot of the names are the usual suspects, the Palantirs, the Teslas, the Nvidias of the world. There's also some meme names in here that I can't help but lose focus of. The Open Doors, not that they had a good day, but even something like Rigetti Computing, that's a quantum stock. You have your usual Robinhood and SoFi, which seem to be still very much in that meme name type of world. CoreWeave, yada, yada, yada. So Dylan, when you look at the broader scope of this market action heading into the second half of the week, given everything that you know about what Powell may or may not say, how worried are you about being long stocks into the Friday close if that's the time frame you're operating on?
I mean, I was just thinking about this exact question, Chris, when we were just talking about this 2 seconds ago. That I feel a little bit more anxious than I did a couple of days ago, because of the nature of the conversation we're having right now. Your point about the jobs number, I believe, is relevant. The ability to sort of interpret inflation as transitory is credible, although I still question how that works when tariffs are not necessarily going to go away anytime soon. But I do wonder the degree to which the margin, like last Thursday, I remember saying I don't think that, he has every incentive not to say anything. But now, considering that there's a little bit more uncertainty about September anyway, that there's incremental uncertainty about the mix and the nature of the jobs report, that there's incremental uncertainty about the nature of the inflation situation, and that there's incremental uncertainty about the sort of immediate degree of sort of unadulterated enthusiasm for the AI transition. I do kind of wonder if Powell has a slightly larger probability of saying something that matters, or even if he basically says what he was going to, no matter what he says, that there's a higher probability that what he says has more of an impact. I guess, if there is an impact, I would say it's more likely to be a downdraft than an updraft. It's more likely that he says something. I think that the market still wants him to say, I'm going to cut rates in September, and the degree to which he says anything that says that probability is going down is more of a liability for the market than the degree to which people read the tea leaves and think that he is going to cut rates in September. But I also think that if that downdraft manifests, that it would be an entry point.
JP Morgan put out a trade note this afternoon saying that this is the time for dip buyers to start to get back in. So clearly not the only people thinking about this, Dylan. A lot of these names here on the high options volume list, Ilya, they are, of course, some of these meme names. Does that intrigue you whatsoever, that traders, even in this environment where there's some weakness in tech, they're still reaching into the more Wall Street bets corners of the market?
No. I mean, I think you look at this and you say, okay, well, where is the sort of shakeout on how people are thinking? And when you look at sort of where the thinking is, at least sort of anecdotally, on the retail side of things, which is where you get interest in these kinds of names, it is buy the dip every time. Markets never go down. Everything is a buying opportunity. You've made the point that the average age of investors participating in this market lines up such that they don't remember the last washout, and didn't trade during the last washout, even when we're talking COVID 5 years ago. And that one is probably the easiest to dismiss because it was very short-lived and because it was clearly tied to a singular event.
Well, except for our audience, the one thing that I've noticed here, Hilly, is that the same names in the chat have been here since we've started at Tasty Live, which is obviously a testament to those folks who are. I mean, we started in 2022 after a very difficult
2022,
year.
they remember clearly.
Right.
But
they may remember 2022, but beyond that, COVID for a lot of retail traders, COVID washout may be just a story that they read in the history books.
never mind the '08 breakdown, which is a much more historically regular occurrence. Pandemics like COVID and the sell-off there, that's not like you can count those instances maybe on one hand as far as recorded financial history.
Yeah, but us complaining about the global financial crisis now is like when you and I started working, were telling us about the S&L crisis.
Yes.
And like the 87 crash. Like that's the time difference now.
Well, and we had to learn the hard way. We had to.
Well, every generation does.
Well, thankfully, I could not thank my lucky stars, frankly, that I was already into reading books on financial history by the time I started to participate in markets. And I actually had a very good '08. And the reason I did was because when you start to read about what debt crises look like, it's not that unusual of a pattern every generation or so. It doesn't happen at necessarily regular intervals, but as you might learn reading Howard Marks or Ray Dalio most recently, there are some common sort of cyclicality elements to the credit cycle.
Have you listened to his podcast?
History doesn't repeat itself, it does rhyme.
Howard Marks, he has a good podcast on Spotify, Apple, The Memo.
Howard Marks has a tremendous book called Mastering the Market Cycle, which in a very cogent, less, let's call it wandering in its prose than Dalio's work, which is also very, very good, just much more extrapolated and long form. Howard Marks explains very, very cogently and clearly what the credit cycle is and why it's the most important thing. Highly recommended.
So Dylan, the question I have for you talking about this move on through the end of the week around non-farm payrolls, going back to the trade here, the S&P 500 hits a low in 63.62 and change today. If you were trading this market into Friday, right, thinking about short-term opportunity, would you sell the put spread just underneath today's low and treat today's low as the low for the rest of the week?
Man, you have the Powell issue. I mean, the reflexive answer is yes, but you have Powell risk. I mean, I guess that's why you're getting the premium. Like that's why you're picking up some of that volatility. And I guess you have come back off of that low. You could argue, maybe I would cautiously say, take a percentage or so lower than today's low, and then you may have yourself some Powell protection as well.
You could absolutely surmise, by the way, that
okay.
Yeah, I mean, you could surmise, and I think we can see this technically on the chart that essentially the August 1st low was the last time that the S&P tested the big support that's been in place since early July, right around, let's call it 6250 on the S&P. And until that cracks in a meaningful way, the bias is to the upside. And also, volatility is still really, really cheap, and buying protection is still really, really cheap. And you need to be able to hold both of those ideas in your head at the same time. There's a lot of room between just over 6,400 here and 6,250. So you don't necessarily want to be overly cavalier, but also to be convinced that this market is really going to reverse in a big, holy moly kind of way. I think 6,250 has got to be taken out clearly, and that's obviously that's not what we're seeing yet.
So Dylan, if it's not the not non-farm payrolls, not the Jackson Hole report that we're worried about, I'm assuming, Ilya, then he's going to have some concern about the PMI reports tomorrow.
Oh, yes.
Tomorrow morning, of course, is PMI day for much of Europe, UK,
and the US.
But it's the US that we care about most. I always go back to that February 21st PMI day that we had several months ago, which is here on our chart. That kicked off our growth scare, right? Is the potential there for the PMI report tomorrow and the PCE report on Friday to spook this market before Powell speaks?
PCE, I think probably less so, although it is noteworthy that markets usually are very good at forecasting PCE because CPI, PPI come out first, and you can unpick those to basically reconstruct a fairly accurate model for PCE. And yet, the last couple PCE numbers, in particular the very last one, the most recent one, surprised on the top side, even though that number rarely surprises at all. And so that's something to keep in mind here. It could be, but I think on Friday the market's going to be listening for Powell. The PMI numbers are a very interesting thing because we just got these minutes and the minutes were hawkish and the market didn't like it. But ultimately, I think they said, okay, well, that was July. These things are dated. Since then, we've had some terrible jobs numbers. The ISM numbers told us the economy has stalled. So that was then and this is now. The PMI data will update us to what is now. And the expectation is that they're going to be a little bit softer, which I think the markets are going to like. If you get a little bit softer, then you get rate cuts. If you get not softer, I think the markets aren't going to like that because then the rate cuts probably don't get the green light. But if you get a lot weaker, given how reluctant the Fed is to jump out the window, that might be the most damaging of all because it would scream to the markets, you really do need the cuts, and the Fed is going to leave you at the altar.
Dylan, let's get away from the world of stocks here today. I can't help but notice that crypto rebounded from a good level. Good level, what I mean by that is if we look at Bitcoin, it's bouncing near 113. And when I take a look at IBIT on the screen, the highs that we had carved out here in May served as support in early August. They're coming back into play again. It's another bounce at its 50-day moving average. Ever since we broke through there back in early April, subsequent tests have produced rallies. What's the case against holding something like Bitcoin in this this new world order we find ourselves trading in, Mr. Radigan?
I mean, I would say from a trading standpoint, there is no case against holding Bitcoin. I mean, the only case against holding Bitcoin in general is because it is a giant scam and a concoction of madness that never should have happened. But that's a philosophical point of view. I would say thank you, sir. From a trading standpoint, I think that it's a darn good idea to own some Bitcoin based on the mathematics of its own behavior, which has validated itself despite my moral objections.
Ilya, say your little Butters coin speech.
I mean, I look at this, and to me, much as for Dylan, there is the ticker agnostic, let's look at the chart and see where this thing might be going perspective. And then there is the philosophical perspective. I'm going to leave the philosophical aside because in any case, that's a buy and hold conversation, not a trading conversation. Whether you believe in the sort of philosophical underpinnings of this or not sort of puts you on the opposite side of the forever hodlers that think this is the future of money, which in my mind could not be a more ridiculous conclusion. But let's leave that aside. From a trading perspective, you don't have confirmation that support has held. What you have is this market pulling back right alongside stocks since CPI day having failed a breakout. So with that in mind, I don't think you have the risk reward to be a buyer here. What you want is for this support to hold. And then you can be an incremental buyer. But the same things that have held down stocks and helped the dollar to recover, basically since the 12th of this month, when CPI came out, that's the same thing that you're seeing here. Just look at what the NASDAQ has done. Look at what the S&P has done. It's not different from Bitcoin. It hasn't had, neither of them have had any juice since that attempt on CPI day. It's the same thing. It's a dollar and a Fed story in Bitcoin and a sentiment story, which is all, by the way, one story, because the only thing going for sentiment is the Fed and the hope that they will make the money cheap.
I see the world a little bit differently. If the boys are back in town for stocks, and they're certainly back here for Bitcoin, we're going to roll that dice.
But it's the if.
63.70 high on May 22nd. You have your low of 63.93 on August 5th. Last 2 days, lows of 63.90 and 63.74. That 50-day moving average is 64.19 in IBIT. So if we're wrong, we're going to know we're wrong pretty quickly. If we get below 63.70, it's probably wrong. So is 50 cents of risk worth loading the dice? I'm thinking 58 days here, Ilya. Risking 1 to make 4 in that neighborhood. Long the 70, short the 75 call, or going 10 wide.
It's not bad.
I don't know, man. I think it's kind
It's not bad.
I think it's kind of the kind of thing that we want to.
It's not bad.
Dude,
I don't think that you're going to get like when I think of Bitcoin, I don't think of, oh, this is gonna hold close to relative levels and not overshoot them by a meaningful margin. Like if this thing breaks this support, it's not gonna break it by a little. It's not gonna break it gently. So the risk, obviously, is, I think, the same as the risk to stocks. It's the same as the risk to any kind of high beta, riskier side of the ledger asset, which is Powell is going to rug pull everybody.
So you mentioned the sentiment here.
Yeah.
Sentiment in the market's been falling in many regards. The latest AAI sentiment survey, which we're going to get an update tomorrow morning, so relevant to bring this up now to see how sentiment's changed over the past week. But only 29.9% of investors are expecting higher stock prices 6 months from now. That's below the average of 37.5%. It's below the 1 year average, 1 year bullish high, below the neutral level typically, Ilya.
I don't know whether this is a reason. I'm wary of taking this as confirmation of my skepticism, and instead look at this as this thing not being nearly overcooked on the bullish side enough for my liking, for my bearish liking.
The spread, and this is what gets me. We've looked at this in the past. Dylan, remember in 2023, part of the rationale for why we were feeling really good about buying the lows down there, being all hand over fist ape shit, was the fact that we had those signals of extreme washout. When the 3-month change in the bull bear spread exceeds 20 points, typically it means that you've reached an extreme in sentiment. We're not there yet, but we're getting pretty darn close. 3 months ago, going back to mid-May, is going to put you here at May 14th. If we have another sentiment reading like we did this past week, where we're basically at a minus 16-point spread, we're at a 20% rolling 3-month washout in terms of a sentiment swing. Institutional investors are actually not all that jazzed.
I'm sorry, Chris. What's the metric again? The spread between what and what?
Bulls and bears in the American Association of Individual Investors.
I see. Bullish versus bearish sentiment. I see. And, and you're saying the spread is in favor of the bulls right now?
Because it's swung so bearish in such a short time frame. as it did. And the last time we had one of these major readings, of course, that we've referenced here on the show, you have to go back to September 2023 when it first rang the bell. And if you started buying stocks in late September 23, you got pretty darn close to buying at the low. It's one of these reasons why I think that, Ilya, this is the wall of worry still, right? In the futures market is the most net short it's been in several months.
That's right.
Sentiment, but everyone's already on the bus. So who are going to be the people?
That's the futures market, though. The futures market is not a reflection of the bus that's driving up equities. The people that are driving the bus, driving the equity bus higher, they're not long it in the futures. They're long it in the cash. They're long the equities. They're built, and we can see that.
Sure,
because obviously the market is going up.
It's like the IGCS, right? It's like the IGCS. You have
they're hedging.
Proxy. No. These are the speculative flows that I'm looking at in particular in the futures market are not for hedging for financial purposes. These are people who are just placing bets in the futures market for directional alpha, right? And these people are the most short that they've been all year. So if these people are trend followers, typically, that's why I find this behavior so fascinating. Everyone is waiting for this market to fall. We're not like here 2% off the high.
Seemingly.
Well, yeah, I mean, that's the interesting thing. So institutional investors are backing off, professional traders are loading up short. You're going to have to get retail to break. Retail doesn't know anything other than buy every 5% pullback. The NASDAQ just had a decline from 24,000 down to 23,035. Almost a 5% pullback.
Well, and again, you're looking, I think, for these professional traders, because you couldn't be a professional trader in the past 4 years, let's say. Let's hem it in. Let's take let's take the 2022 sell-off off the table and be even more conservative. You couldn't be a professional trader in the past 2 years and not be massively long equities, or you'd be out of a job. Because your job is to generate returns, and the market has been up a lot from the lows after the rate hike cycle. So these people on the futures side, they're not hedgers in the traditional sense, perhaps, in the sort of wheat hedgers sense. But they are hedgers because their core exposure has to be, by definition, or they wouldn't be in business, a long-term allocation, long stocks.
Mm-hmm.
Maybe not long the index, and this is why they're not hedgers. They're not hedging exposure to the index. They're hedging exposure to this name and that name and whatever they've allocated, mostly tech. But the build up in index shorts, that's hedging.
We'll have to look at the closer data for the COT report to articulate this further.
Unfortunately, the COT report obviously doesn't have futures for individual share names. So in any case, you're kind of surmising some things as you break it down. With something like a corn or a wheat or even currencies and interest rates, it's really easy to say, okay, I have exposure over here. Now I'm hedging against that exposure in the futures market. With equities, it's not so clear cut because you're hedging via an index that you don't necessarily own on the flip side. So are you hedging? Well, you are, just not against index exposure. You're hedging against shares exposure.
I mean, not
Russell
to flip back to the go ahead, Chris. Sorry.
No.
I just think that the biggest risk in this whole sort of mix right now for, let's say, the next 45 or 50 days is no rate cut. You know, and I know that you can kind of jabber about this 10 ways, but if the Fed comes out and doesn't cut rates, and even if the expectations are being pulled back a little bit, et cetera, it's still, I believe the expectation of lower rates, especially understanding who the president is and the president's saber rattling around rates and around the Federal Reserve. We get into September, essentially you get a little bit more jobs weakness, but then let's say you have some inflation heat, and you just get a mix that's a mix, which is probably what the most likely thing is, a mix, right? Where you can kind of see it one way or the other, and then the Fed doesn't cut rates. I think that's where you're going to get yourself into like a lousy September, October. I just feel like that your risk right now, because I'm inclined to be as long as I've ever, I love to be a bull these days with the AI and the supernova and all this, and I'm less worried about Powell this or CPI or PMI or PCE or even the jobs report or whatever. I think that the number one boogeyman here is that the Fed comes in September and does nothing, and then I think it's going to be a little bit of a moment of reconsideration. That it might be the biggest moment of the year.
So September 17th, if the market falls apart, there's an interesting, Ilya, that's a really interesting view. Let's just say September 17th is the event horizon.
Yeah.
Is the market collectively in a state of stupor where even if we get a good jobs report and a warmer CPI, enough people have convinced themselves that the Fed is going to cut because that's what Trump wants? And so it hits them like a ton of bricks when the Fed doesn't in September.
I think the bar for the Fed not to cut in September is so impossibly high that they are overwhelmingly biased to cut. And I don't think anybody cares, because I think that has been consensus for so long. It is so thoroughly priced in that this is just not going to mean anything. I don't think September is the question. I think the action in September isn't going to be in the rate change. It's going to be in the update of the summary of economic projections. Because the markets have been on course with the Fed. They've anchored around the Fed's forecasting for the past 3 months, as far as this year is concerned. Couple basis points here, couple basis points there is a rounding error between friends. We've been hovering around 50 basis points in Fed funds futures for this year since May. The real question is not that, in my mind. The real question is that the Fed told us in June that they are going to cut only once next year, and the market thinks that that's insanity, and that the Fed has to do at least 50 basis points and probably 75. And if you get a summary of economic projections in September that tells the markets, you're dreaming, no, we don't see the world that way, which incidentally, these FOMC minutes suggested is the case. Because what they showed is that from June to July, Fed officials' staff projections for growth and inflation hadn't changed. So when you look at this and you say, okay, where's the letdown? Is it in there being no cut? That's unlikely. They're going to cut, most likely. The question is, what do you see beyond the calendar turn to 2026? And if the Fed says 1 cut and the market says 3, that's going to be an issue.
Might be an issue. Hasn't been an issue in the past. Although we haven't had a weakening labor market, a housing market that was slowing down so clearly in the past.
Last year was a case in point, right? The Fed, instead of fighting the markets, leaned all the way in. The markets were screaming at the Fed to get dovish, basically from mid-April through all of August until the September meeting. And then when the Fed goes, oh, you want us to be dovish? You want us to be really dovish? Here you go. Here's more dovish than you even thought. Now what? And sentiment gets short-circuited and goes, wait, what? And for the next several months, the markets wildly correct the other way. Because they go, whoa, hold on, whoa. What? This is like judo. And so when you look at what this could be now, it could be the flip side, where once again the market is all hopped up on rate cuts, and instead of leaning in, the Fed goes, nah.
So Dylan, what's the trade in rates this week? Yields are a little bit lower today. If the Fed pushes back on these cuts, Powell's non-committal. We're waiting for more data. We want to do it, but for tariffs, yields going up or down
No,
by
but
Friday
I think
close.
Ilya sort of validates my point, which is the reason no cut it will be so catastrophic on the 17th is because of the strength of the certainty of those cuts. And so,
yeah.
You know, I mean, that's whether it's any Powell rhetoric that indicates no cut will be interpreted horrendously, and no cut will be interpreted horrendously. But the probability of both of those things, I think the probability of some Powell, tea leave action is probably higher than the probability of no cut.
Yeah.
And so when you say what's the trade, gosh, and relative to Powell, I would think that you're actually probably better off to do something neutral that just is selling a condor kind of situation on the TLT, or just be short volatility on the volatility contraction on the other side of Jackson Hole, with the understanding that you might not get that much of a contraction because of the 17th. But again, if you can make it through Jackson Hole and you avoid any indications of no cut or any marginal indications of caution to cut, then it'll allow the volatility to come in that much more on a neutral position but short volatility.
That actually is a very interesting thing from a sequencing perspective, because while there is absolutely no volatility to extract in the bond market here, I mean, we have ZN up on the screen here. The IV rank is 5.7. There's no juice there to speak of. But after Jackson Hole, to Dylan's point, there may be. Because if Powell comes out and says some things that people don't like, things could get fuzzy. And if they get fuzzy and then there is volatility to sell, then maybe there is some sort of a neutral exposure strategy that makes sense, because then you're just looking to see some sort of a tightening up ahead of the 17th, because nobody wants to jump in front of it and recognizes it as a risk. And so if Powell sets everybody off, you then probably get a vol squeeze because nobody wants to jump on the train en masse until the 17th and validation.
If you're a trader or an investor who decided to get off the train in April, and you decide to get off the train right now, and Powell turns around and decides to cut, and the stock market shoots up another 4 or 5%, how do you feel about your job coming at the end of this year? I mean, what's the incentive structure right now to do anything other than treat the market as innocent until proven guilty, as it has been doing since mid-May?
In my mind, the cut is so thoroughly priced in that a rate cut in September will not give markets anything like a lift. The question will be, what is the forecasting forward? And the risk, as I think we're watching very clearly, these markets haven't gone up since CPI. That was on the 12th. It's the 20th today. I think the critical question here will be not whether there is a cut, but whether Powell tells them that he's had a head change and now the cuts are on in earnest for next year as the markets want them. I don't think that's a risk the market is dismissing, or it would be rallying. And so there is some movement potential there. If the Fed goes from 1 cut next year in the S&P to 2, I think the market would be mollified. Doesn't have to go all the way to 3. It just needs to start moving in the right direction as far as the markets are concerned. If they went back to 2 cuts, I think the markets would be mollified. You would get a rally. You would then have to see, since the markets already price in more, you would have to see if they care in any kind of a way that lasts longer than 24, 48 hours. Because again, it's already in the market. You can see it. So
no, I got that. I'm trying to think about the path forward here because, you know, if we think what matters more, the journey of the destination. If the
which
Fed comes,
journey and which destination?
Well, I mean, if the Fed comes out and says, like, listen, we're not cutting rates this meeting, sorry to disappoint you, but we're going to give you 50 basis points in October. We're going to give you another 25 in December. We're going to give you 4 more cuts next year. Market's not going to be upset.
Markets would take that.
Markets would take that. Right. I think that's what you're getting at here.
That's why I think, again, September on or September off, I don't think is really.
So then the
that's
question
not
is,
the main question.
The question is, are we still getting 2 by the end of this year?
And what are we getting next year?
And are we still going to get the additional 3 next year? Right now, 3 priced in for.
That's the question.
100%, 12.2% chance of a 4th.
Yeah.
So net, as long as we get our 2 this year and we're queued up for, well, 1, 2, 3, 4, 5 cuts.
Yeah.
Through the end of next year, that's the floor.
And the Fed has 3. So if the Fed starts going from 3 toward 5 and gets to 4, I think the market would go, okay, welcome to the show. Good of you to show up. We know.
Right, and now Trump gets his few more people on the board, and the market goes, yeah. You're saying you're giving us 4. Let's wait for Trump's pick for Fed chair. Let's wait for Cook to resign her seat and get replaced by Trump. Let's wait for Mirren to get formally confirmed. We're going to get our cuts. It may not be through you guys, but we're going to get them.
Yep.
A brave new world of Fed independence or lack thereof. Ilya, I want to point this out on the chart before we go because we're running down time here. The S&P 500 first traded back above its 1-month moving average following tariff day on April 24th. Since then, we have had 1, 2, 3, 4, 5, and now a 6th run into our 1-month moving average. Like the other times thus far, it's been bought. We'll see if we can find follow through this week, but this is perhaps the single most defining important characteristic of the strength of the uptrend. The characteristic has been we have not seen 2 closes below our monthly moving average since the depths of Liberation Day.
No, the uptrend's holding. There's no question. I think the big question is, will it continue to hold? But the fact that it hasn't confirmed that it's in some sort of a larger pullback is clear. To me, what's kind of the most bearish thing here is you had an attempt at a breakout. You took out the previous high and it failed. And momentum indicators are telling you that there's divergence there into the highs. So the market went into those highs weak kneed, and now those knees have buckled. And so the real question is, okay, is this a pullback or a reversal? And I think, again, about 6250 on the S&P is probably where that line in the sand is. About 22.7, maybe 22.8 on NASDAQ. Is that line? Something like that.
Dylan, take us home. What's your final thought before we end this episode of Overtime?
I love the market. I think you buy the AI dip. I think that the only risk is no rate cut, and I agree with Ilya's assessment that risk is purely hypothetical, that there will be a rate cut. And I continue to maintain my basic optimism for everything. And I love the fact that there's a little bit of an AI spook because I believe it's an opportunity as I said at the top of the show, to get a bit more of all these things, even if it's just by selling some put spreads at some of these, at this morning. I'd rather sell put spreads on the AI names on this morning's lows than to sell it on the S&P, for instance, and do that incrementally going forward to the degree to which you get any more pullbacks, because of my confidence and certainty not only of the reality of AI, but also my belief in the market certainty of the reality of AI, and that all this sort of macroeconomic Fed, jobs-driven anxiety is exactly the wall of worry that you were talking about with the bullish-bearish spread indicator, and I think all of it is a lot of sort of anxiety-provoking data that actually is beneficial to drive some of these prices down a little bit and get more of them, because I think that the AI names are, as I've mentioned for a couple of months now, a supernova that must be ridden and enjoyed, and thinking is not your friend.
With that, Overtime is out of time. We'll be back tomorrow, same time, same place, every Monday through Thursday, 4 p.m. Eastern, 3 Central, right here on Tasty Live, immediately after Last Call. So for Ilya Spivak in San Francisco, Dylan Radigan in Milan, I've been Chris Vecchio in New York. We're done. Up next, more Ilya, macro money. See you on the other side of a quick break.
See you there, everybody.
Dear Cheapo Airlines, thank you so much for sending my luggage on a magical side quest instead of my planned destination. I am glad that I had the sustenance of the single pretzel I was served on board while I was waiting for my bag to arrive. Looking forward to your reply, because surely the response can't be as delayed as long as my flight was. Warm regards, Bettina.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
Every day I do God's work here.
From the smart mouths at Tasty Live.
If you missed the live show, here's our cherry on top yearly recap.
So, we're doing the show on Friday, and the bat, he's doing the show in the morning, then he's going away afterwards, right?
Yeah.
He's all packing up the car, he's doing his stuff.
RV.
Packing up the
Packed
RV.
up the RV for a 6 to 8 day trip. We're supposed to be there about
4
48
days.
hours.
I bet him $20, and I said, you'll be in a hotel by either the first night or second night.
And then I vociferously stood up for you.
Of course you did. You stood up because that was the smart move.
I appreciate you. You're
yeah.
good.
Saturday morning, I look at my phone and it says Venmo $20.
I almost had to pay him $40 because there was a little stipulation. If we didn't sleep there one night at all, I'd have to double the bet. I almost had to send him $40.
What happened?
See what happened?
Here, what happened was
we're driving up there. It's absolutely beautiful. It's like sunny as can be.
You were tweeting pictures.
Oh, yeah, it was
the
beautiful.
Girl
It was
on
beautiful.
Instagram, you're like, I'm here in the woods.
Absolutely beautiful. Absolutely beautiful.
Amazing.
It was gorgeous. We were gonna make a slight right-hand turn. We got about 10 miles to go, and up ahead there's this dark cloud, and it's raining. It started getting muddy, and dogs are getting all muddy. Wife's having a little problem. Bugs are everywhere from the rain. And I realized at that moment that my wife was not a camping gal.
That's a surprise.
So at 6 o'clock in the morning, I pulled everything out, closed everything up, shoved everything underneath, and I was home. We actually left because we did the show at 10 o'clock in the morning. Let's say we left at 10:30. I was home at 10 o'clock in the morning the next day. Look at him.
You were just
jumped in my pool, looked back at my house, and I said, why would I ever leave? Why?
He was going to go fishing, catch muskies.
He's hurt on this one.
Muskies. Some bass.
Very quiet.
I left Friday at 10:30. I was back Saturday at 10.
AM?
Yeah.
You didn't make it 24 hours?
No.
Who broke down?
They all did. They all did. I rented a boat for Saturday, but the boat was broken. It rained for 5 hours. When we got there, it was...
Now the RV on rvtrader.com.
Yeah.
Whoa, wait a minute. How do you get to Florida now?
I don't care anymore.
Oh my God. First of all, I'm sitting in the captain's seat. I've never been invited to come sit in the new captain seat. But what I'm concerned with is the size of these screens. And then he's still doing this.
Snow, let's take a look.
They did not hold that rally at all.
Phil, you got a partial.
You're like looking at this. You need some help.
Nope, I got everything fine. The problem is I just have a lot to do. You see, because in your job,
here we go.
Really, all you have to do.
Get the full scoop by checking out the archives at tastylive.com.
The markets fall for a fourth consecutive day, but a late day rally mitigates what could have been a much darker showing for Wall Street. Nevertheless, minutes from the Fed's July meeting don't give anybody anything to cheer about. Now we enter a kind of intermission period before the next Fed bombshell hits the tape. This is Macro Money. I'm Ilya Spivak, head of Global Macro here at Tasty Live. And lest you think this intermission period is going to be uneventful, think again, because we have something to chew on in this intermission period that will give us perhaps some very important stage setting for what we are looking at when we get ready for that big headline on Friday from the Fed chairman. So, what do we have here in the intermission? Well, let's take a look first at the way that the markets performed today, get a sense for what it is that we're doing here as we follow this story since the beginning of the week, this Fed-oriented story, and then consider what might move the needle here before we really dig our heels in and get ready for Chair Powell to speak at the Jackson Hole Symposium. Here's today's performance. It's a soggy one for stock markets. S&P down about 0.3%, NASDAQ down 0.65%. Kind of a mixed bag situation on yields. The 10-year a little bit lower, the 2-year relatively steady, although skewed somewhat to the downside, but bonds ultimately within their recent ranges. The story in oil positive, but again, we're still hovering around that center line of the price range that's prevailed here for the better part of several months. If we kind of take a look at where oil is relative to where it's been, going all the way back to October of last year, we've kind of carved out a broad range between about 74 and 54 a barrel on WTI. The midpoint there is around 63. We've hugged that level multiple times here, and we're sitting right at it. And so it doesn't really seem as though what we have is a situation where there is any kind of meaningful conviction from crude oil to what is going on, either around markets from a risk sentiment perspective or around what's going on in the geopolitical side of things. Crude oil seems broadly listless, and in fact has been kind of oscillating around these levels now, basically going back at least to the beginning of this month. So we do get a swing, but it doesn't look like there's much to make of it. It's a similar story with gold, which manages to rally today, but again has been listless in a narrowing range going back to about the second half of April of this year, sort of in the wake of the Liberation Day shenanigans, and increasingly is stuck in a still narrower range, the broader one somewhere between 3,500 and 3,100. We're increasingly getting squeezed into a narrower band between 3,250 or so and 3,450, and even still narrower recently between about 3,370 and 33 the figure. Maybe a little bit higher, 3,320 or something like this. So we get a swing, but it isn't very convincing. The dollar is flat. Bitcoin a little bit higher after a round of selling that's mostly mirrored what's going on in equities. So a soggier day, but not so convincing when you look beyond stocks to say, oh, this was a very clearly risk-off day, as opposed to, let's say, yesterday. But when you look at the charts here, you start to see that loss of momentum. So you can clearly see yesterday was a much more engaged sell-off. Here we tried for it, and that's where you get this lower wick. But ultimately, this sort of anchoring axis, give or take, for the S&P, that ultimately holds, and you can kind of see where the inflection point on sentiment probably sits here. So, obviously, very crude artwork here, but you sort of get the sense that somewhere here there is a kind of inflection. And we can see it as resistance, then as support, then as resistance again, now acting as support. And if you wanted to kind of make the case that this thing is rolling over in earnest, you'd have to say, well, the last time that we had a meaningful uptick was the CPI report on the 12th of this month, where we ultimately went on to break this high. We have since failed in the breakout and come back to essentially the starting line here. Moreover, if you wanted to see a convincing reversal, you'd probably be looking for a break of this here. And that's somewhere around, let's call it 6250 on the S&P, which would be kind of the larger bottoms here and here. And that would be kind of where you'd say, okay, a top has been formalized if you were to take all of this out and end up somewhere over here. Nevertheless, this market has not managed any upside since this CPI data. And if not for that, it has been listless and then erring down. The NASDAQ is a similar story. Again, you have this kind of center axis that seems to be holding around here. This is your big support, somewhere around 22.7, 22.8, right where these lows are. But again, since the CPI number, relatively soggy. Now, why this rebound and why the sell-off in the first order? Well, it began with tech shares, much as it did yesterday, and that's not surprising when sentiment sours in a market that's overwhelmingly tilted in one direction, where one sector has been the driving engine to such an extent that nearly all market cap is now stuffed in it. Of course, we're talking about tech, which is so wildly outsized in terms of its influence after these recent years of gains. As compared to anything else, it would make sense that when people de-risk more generally, tech is going to be impacted more. That's where most of the exposure is. That isn't necessarily negativity about tech itself, though, of course, OpenAI CEO Sam Altman saying yesterday that the current situation is analog to what happened with the dot-com bust, that's probably not helpful. Nevertheless, you do get this kind of a tech-powered sell-off today that seems not to follow from any new comments, but rather from the idea that if the market is going to be getting a little bit more defensive, it will be tech that will be most impacted. And then, of course, you get the FOMC minutes that we were looking at, and they don't offer much help, and we'll take a look at why momentarily. But ultimately, as we get into the end of the day, the upshot holds. The Fed is still overwhelmingly expected to cut rates in September. The risk this week was that that idea might be under question, or at least that the Fed's ability to convince the markets that it means business in starting a rate cut cycle, that's in question. But the actual probabilities for September have been relatively little changed. We're a little bit lower today at about 83% chance of a cut than we were yesterday, closer to 84, 85, but that hardly matters here. It's more of a rounding error than anything. We're still overwhelmingly convinced that this cut is coming. And so perhaps that's why the markets feel relatively okay about coming off the lows and having a much smaller down day ultimately than it looked like earlier. Moreover, the actual architecture of expectations for this year and next has been relatively steady also. We can see the market is anchored around 50 basis points in cuts this year and has been so basically since May. That, of course, lines up with where the Fed is. They're looking for a move from a median level of 4.4 down to 3.9 for this year. That's 50 basis points. So for 2025, the markets and the Fed are basically in line. We still also have this wide disparity for next year, where the market is overwhelmingly biased in favor of 3 rate cuts. 2 of them are fully baked in. The third has a probability of close to 70% of occurring, so relatively convincing. Whereas the Fed is only looking for 1 cut, from 3.9 to 3.6. That's a single 25 basis point cut rounded off. So we're looking at a much more dovish view from markets than we are from the Fed, and this perhaps is why these minutes didn't go over well today and why the market is so worried about this to begin with. We see that the majority view in July was that the upside risks to inflation are greater than the downside risk to employment. So it tells you the Fed is biased toward fighting inflation, that is, toward cutting rates more modestly, if at all, rather than toward boosting growth. They continue to think themselves well positioned to respond flexibly, so they're not feeling a sense of urgency, though they do see that the risks to both sides of the mandate are elevated. We also see that the 2 dissenters that we saw, Chris Waller and Michelle Bowman, the 2 governors that dissented in favor of a 25 basis point rate cut, we see that they are on an island. If that were indicative of a broader dovish skew starting to percolate on the committee, these minutes suggest that that's wishful thinking. There is no percolating. They really are by themselves here. Moreover, when we start looking at the details here, we start to see that their difference is perhaps not coming from some sort of a philosophical disconnect on the committee, but rather from more tactical timing expectations. So we see here that some participants thought that it was not feasible or appropriate to wait for full clarities on tariff effects before cutting. We likewise see that slower jobs growth isn't necessarily being attributed to a weakening economy, but rather the crackdown on immigration, even though clearly everybody is noticing that there is a slowdown in hiring. What's interesting here is that there is a reluctance to both hire and fire amid elevated uncertainty. And this is perhaps where things are especially interesting. So it's not as though the Fed is seeing weaker jobs numbers and saying, oh no, we have to fight a slowdown. It's more like they're saying this uncertainty has put a lid on turnover, and where this is impacting kind of the regular operations of staffing as need be for demand, it is through reduced immigration and a lack of supply, not through some sort of a conviction level on demand. We then see that we, from some corners, have an appreciation for the risks to long-term inflation expectations, and that those risks are being held at the same time that we have the appearance that growth is going to remain low in the second half of the year. There are some worries here, likewise, about elevated asset values, so stocks at record highs, basically. And likewise, an interesting statement about where we are relative to neutral, which seems to give a sense that there's not that much scope to cut rates when the cuts come. Because if the current Fed funds rate is not far above neutral, and we saw here that policy is being seen as moderately restrictive, well, then we don't have any hikes on the horizon as we worry about all of these inflation concerns because policy is already mildly restrictive, nor do we have a lot of room to cut because we're not that far off neutral and we don't want to let these inflation expectations out of the bag. And this is where the next 24 hours get a little bit spicy. It's very easy to look at this and say, well, since this, we have had a second quarter GDP number, or at least the day of, actually. This obviously didn't factor directly into forward thinking, but the same day, as a matter of fact, as this data came out, we had second quarter GDP data that showed us weak consumption. In fact, the weakest 6 months of consumption in the first half of this year that we've seen since the first 6 months of 2020, the COVID recession year. We also have obviously seen a deterioration in jobs numbers. And so it's tempting to say, well, all this hawkishness in these minutes, all this reluctance, it's old news. Now that more data has appeared, the Fed is going to be readier to go. And to test that question, we're going to have the next round of Purchasing Manager Index numbers from the major economies, excluding China. China's a little bit later in this PMI reporting cycle. They're coming next week in dribs and drabs, by the way. But the two things that we're going to learn over the next 24 hours will be how Europe is faring and how the US is faring, most importantly. And of course, the reason that this matters so acutely is because China, the Eurozone, and the US, as we've said time and again here, represent 58% of global GDP. These are by far the driving engines of global demand. And that's even before we consider that the rest of world, 42%, depends on the large three and exports into them as the main engine of demand generation for themselves. So clearly, these are important numbers because if the markets in fact say, well, look, we already have Europe near standstill. And of course, as ever, we have this centered around the 50 line, where that's neutral. Above 50 is growth, below 50 is contraction. The farther you go above 50, the faster the growth. The farther you go below 50, the faster the contraction. The story on these PMIs for the last month was China and the Eurozone are anchored within a hair of 50 and have been at least all of this year and most of last year. So there's hardly any growth there. They're basically idling. In the US, growth was the main offset, the single leg of this three-legged stool that was holding up last year. There was a tariff scare at the front of this year, and S&P Global's version of this data would tell you that scare has been shed, and we're back to basically where we were toward the close of 2024 on US economic growth dynamics. The ISM report, which is a rival view on PMIs and comes out later, would tell you that actually the story is darker. That you're basically at standstill on services and you're deeper into a contraction on manufacturing in the most recent numbers. In other words, it tells you that if the sole concern for global growth here is the US falters because then there is no safety net, buckle up because the US has started to falter. Which is what makes these numbers so very interesting and makes the Fed such a central point to this entire conversation. If the only point of support for the global economy is US growth, you do not want to see that US growth go south lest you risk a global recession. And if you do see it go south, you want a Fed that is quickly responsive and not dithering. Take a look at what we have expected for Europe. It is versions of standstill again. So going from the low 50s to a touch above in a adverse direction, let's say. So slower expansion overall, and again, hugging 50. Faster contraction on manufacturing, slower growth on services. Looking at the US numbers, we have a forecast for a significant downstep in services, faster contraction in manufacturing. There's not an official forecast for the composite, but it doesn't take a genius to see that if the two constituent parts here are ticking down, so will the headline number. And herein is where things get curious. If this ticks down in this relatively modest way, well, then maybe the Fed can, in fact, be convinced. And then maybe, in fact, these minutes are old news. And something more dovish is coming from Fed Chair Powell when he gives the lens adjustment that we look through to judge what data means and where policy is broadly pointed when he speaks at the Jackson Hole Symposium. That's coming on Friday. If these numbers are hotter than expected, well, then those rate cuts are probably not coming. At least not in the way that the markets expect. You probably still get the September cut because markets are fairly convinced about it and about this year. But the transition of a Fed from 25 basis points to the market view, 50 erring on 75, that's probably not in the cards. And there's a level of disappointment there because the markets clearly want these cuts. Else they wouldn't be here. So what we're looking at then is scope for disappointment going into Jackson Hole if the PMI data were to be warmer than expected. And then if the PMI data is weaker, but a lot weaker, much weaker than expected, well, then you really run into Jackson Hole with some concerns because then the market's position gets validated. They get to pat themselves on the back and say, oh, good, we knew we needed these rate cuts. But then, of course, the risk is the Fed isn't there, which is precisely what these minutes suggest. That maybe, yes, you get the 50 basis points this year. That much has been very clearly understood and priced in. But will they deliver next year? If the numbers are particularly weak, but the sense is that the Fed is not convinced, well, then where are you? And that, of course, was the story looking at these PMI numbers here. The Fed clearly at the start of this year was not convinced by a pullback in PMIs and remains unconvinced still looking at these minutes as of last month. Meanwhile, we already see the architecture of a slowdown. We looked at consumption here. We can see that consumer sentiment is already fading as inflation expectations rise. That's happening because goods inflation from the tariffs is accelerating and has in fact now hit the highest level in 2 years. We see that that's just the tip of the iceberg because, as we saw from the PPI report, businesses are starting to pass through inflation costs finally to consumers. Consumers, of course, being savvy, have noticed, hence the rise in inflation expectations and the downtick in sentiment. So the architecture of an economic downturn is here. If the Fed does not take the hint and meet the markets closer to where they are, there's disappointment to be had there, which is a problem for stock markets and probably beneficial for the US dollar. How much disappointment and how worried the markets need to be will be a check on the state of the economy, not just in the US but globally, and these PMI numbers are that over the next 24 hours. With that, we have macro money for today. As ever, we are here Monday through Thursday after overtime, show I co-host with Dylan Radigan and Chris Vecchio, looking at the Wall Street close and where things may go therefrom. I'm likewise on with Chris for Futures Power Hour Mondays and Fridays, back with Chris and Tom for First Call Sundays, writing for the news and insights portion of tastylive.com, and commenting at Ilya Spivak on the platform formerly known as Twitter and on Blue Sky. If you're watching on YouTube, like and subscribe. Macro Money's back tomorrow. Happy trading.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
What's up, everybody? Check out my new series, Life Cycle of a Trade, where I show you my real-time trades with insights into strategy selection, adjustment mechanics, all the way to the closing order for all of the Tasty Live core strategies.
Craig in New York City, what's up?
I just want to say, I've been with you since the very early days of Thinkorswim. And traded all kinds of markets here and there. And I got to say, I could be off so much worse if it wasn't for what you guys have sort of drilled into me over years and years and years. And so I just want to thank you, because you could have easily just taken the money and run when you sold Thinkorswim, and you didn't, and you started this. And you basically have just given me this full education in this thing that was completely foreign to me many, many years ago. And so even though I've lost money in the last few days, you've saved me a lot at the end of things. Like, losses could have been catastrophic, and they're not. Cool. So I appreciate you.
I hear you.
I appreciate you guys. Thanks so
Thank
much.
you, man. And I appreciate you holding on the line to say that to us. So thank you.
Global markets never sleep.
Explore them with Forex on Tasty Trade. Get in on 80 plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
What happens when two titans of trading come together to harness the power of their prowess? Let's watch these two master the precision of the short game. Wow, I've seen better putting at the mini golf in the Dells. Tom, do you see holes where there aren't any, mate? Well, lucky for us, Tom and TP are better at writing than they are almost anything else. Subscribe to Tasty Live Cherry Bomb to get piping hot takes on the market delivered right to your inbox. Sign up at tastylive.com/newsletters.
All right, we're back. Tasty Crypto Show. I'm Ryan Grayson. With me today, of course, Dan, Cecilia. Dan, how you doing?
I'm doing well. Second time on the network today. I was on my OTC live, with Ryan, Nick, and Mike.
Yeah, Tasty Live. Now they were sitting in for Tom and Tony, who I hear are in Mexico.
Oh,
so having a little vacation, I suppose, or a holiday, as our British friends would say. But you stepped in. You're doing double duty today.
Doing double duty, yeah. Until they tell me I can't be on anymore.
Well, we'll see. Appreciate you joining me here on the show. This is the second time we've done the show together this week. If you missed Monday, go check it out. We had the CIO of Mill City Ventures, the SUI, or SWE, depending on how you want to say it, treasury company that's launched recently. Had a great interview with him. Fantastic insights into the SUI ecosystem, kind of how they think about the investment, what's next for Mill City as well. So go check that out. And that will be linked in the email. If you're not on the email, get on the Tasty Crypto email list, tastycrypto.com, enter your email. I mean, it's pretty straightforward if you've used the internet. Dan, speaking of the internet, do you like talking to strangers on the internet?
I love talking to strangers on the internet.
I thought so. If you like talking to strangers on the internet, get your ass over to YouTube. We're streaming live. Pop out the chat. Type some crazy shit into the chat. We got Jose in there, Mark, Michael, James, Azender, Ben, what's up? Brian, Emmett. Gang's all here. Dan is here. If you want to talk to Dan live, you want to distract him while he's on the show, he's also running, I guess, double duty here in the chat. So hit him up in there. And yeah, let's get into it, Dan. We've got a little bit of a bounce underway.
Yeah, I mean, the market opened really red. I feel like it was on a sell-off. I felt like we were going to go to 110 on Bitcoin. We got pretty close, and then we recovered here by the end of the day, and now we got a little bit of a bounce. So if we want to go and take a look at these performance dashboards, just to kind of get a brief update here, yeah, I mean, Bitcoin bounced right back up to, 114, trading around 114,000, ETH back up to 4,300. I thought you were going to get your chance to buy the dip at 4,000. Thought that's where it was going. Sol at 186. Like, all things considered, I feel like we bounced back, recovered a little bit here.
Yeah, it feels a lot better than it did this morning for sure. I'm just checking my account here to see where I did buy some ETH. Bought a little bit at 43.23, or 43.15, excuse me. It's currently 43.23. Bought some at 41.50, 42.15, at some higher prices as well as we pulled back off of that 4,800 level on the way down. But yeah, didn't quite get that 4,000 number that we were looking for. But to put things in context, I mean, this move that we've seen over the last week off of those highs is well within the 1 week, 1 standard deviation estimated or expected move, whatever you want to call it, that we calculate based on the spot price and the implied volatility. So what that really means is the price action that we're seeing is not out of the ordinary. It's pretty much what the options market was pricing in a week ago. These are not static ranges, so we can rerun those ranges, and we'll take a look at that in just a second. But again, the price action is probably what you would have expected after just that massive run higher. The one thing I will point out, curious to get your thoughts on this, when we look at price momentum, we track those exponential moving averages in the crossovers, just a way to drive signals that help us to stay on the right side of the trend. Bitcoin, at least for now, flashing bearish, but we'll see if that holds, given you did get a pretty strong bounce back here. But as of right now, I do have that signal, and we've always said, look, we'll tell you when it looks bad. Not saying that it necessarily looks bad, but we can't ignore the fact that momentum did go neutral and now bearish on Bitcoin for a moment here. We'll see if that evolves into anything else. What do you think?
Yeah, so like I said before, I think we were going to always get a pullback after that kind of massive run up in July. You know, I would wait and see kind of where we begin to trade here. We've been ranging for the last couple of days. Obviously, that Fed minutes come out, or FOMC minutes come out tomorrow?
Jackson Hole Economic Symposium, I believe, is the 23rd. There's typically a speech from Jerome Powell. It has been a stage for policy shifts, important policy shifts in the past, but I don't think that's necessarily expected. We'll get a little bit more clarity as to how they're kind of viewing this upcoming rate cut.
Yeah, I mean, I've just been reading headlines, reading some popular analysts I follow. Greg mentioned this in his newsletter. It's a wait and see approach with the FOMC or the Fed, the FOMC minutes, the Jackson Hole speech, and Nvidia earnings. And I have seen there's been some weakness in Nvidia chart or price action. So that affects Bitcoin, and that affects some of the liquidity in crypto. I think
that did bounce back quite a bit here today, though. So just quickly looking at Nvidia, went down to sub 170 and right back to 175. So down about 0.1%, 24 cents to be exact. But yeah, trading higher post market. So strength, kind of dip buyers, I suppose, all around.
Yeah, for sure. We'll wait and see. I always thought August was going to be a weak month, given what happened in July. We have some headline news coming out. You know, I think we'll see what we bounce back in September.
Let's take a look at the expected moves really quickly. These have been updated. So we'll talk some trade ideas, how we're trading the market here towards the end of the show. We've got some, I guess, headlines that we want to hit on, narratives that we want to talk about in just a second. But before we do, Bitcoin implied vol still near those lows. It's picked up a little bit here. ETH volatility has picked up a little bit as well. Realized vol continues to kind of leak lower, though, 28% on a 30-day annualized basis. Implied for Bitcoin, 37%. ETH at 71%. ETH nearing the top of the range, not quite there, but certainly the opposite direction of what we've seen with Bitcoin implied volatility trends. All that said, looking at the current expected moves, about a $6,000 move in Bitcoin, about a $400 move in ETH. In Bitcoin terms, that gets you back up to 120 on the upside and underneath 110 that you called out earlier here to start the show. ETH takes you back up near where we were, but not necessarily pricing in those new all-time highs that we saw when we were running these numbers last week. That said, the downside of that 1 week move right now is 3,900. It's trading pretty well, all things considered here when you look at the short-term price action. On a relative basis, if I had to pick one, I'd probably pick ETH over Bitcoin. How do you think about that, or is there anything else that kind of stands out to you?
Yeah, I mean, we don't have it up here, but the ETH Bitcoin ratio is still, it rebounded since the low in April. I kind of look at that, and if you're looking at kind of how that's traded, it's been sideways, but it's still trending upwards. So I think that gives an indication that ETH is stronger than Bitcoin right now, and there's been that rotation to ETH. Look, I just think, when things run hot for all of September, ETH goes up 60%, 70% in the last 3 months. Pullbacks are expected. I still think the long-term trend here, given everything we know, is bullish.
Structurally, that's still what we see. Everything is in place that supports that today.
We'll have to monitor data, monitor the broader kind of macro environment. Obviously, flows in ETFs have been a little bit weaker this week, but I still think ETH is probably the stronger play here.
Yeah, I agree with you, and like you said, you look at ETH BTC, that could trade towards 0.05 of a Bitcoin. I think, look, in this market environment, again, it probably gets you to a $5,000 ETH price off of these levels. Nice move today. I think Bitcoin goes higher. If we see anything that changes in terms of what we read, what we look at, what we try to pay attention to, or the signals that we drive from the market here, we'll let you know. But as of right now, you got a dip, and it seems like, you can never really fully price in where it's going to go, obviously. But from a timing perspective, I think this is the pullback again we're looking for, and happy to buy at 439, at 42, right? It's probably irrelevant if you think that we get to from 4 to 6, 4 to 5. Did you buy it at 4.2? You buy it at 4.1? Doesn't matter. Doesn't
matter. Yeah.
So short-term trading ranges here. Let's talk a little bit more about what else we're seeing in the market. There are a ton of I wouldn't call them catalysts necessarily, but when you look at headlines, you look at what's on the radar. Everyone has ignored seemingly over the last couple of days the SEC chair just talking about crypto and the United States being seen as an innovator here in that space. You've got a lot of, I think, just bullish whispers, bullish narratives in the air. Let's talk about some of these here. Maybe starting with stablecoins. You brought this to my attention earlier today, Dan. Wyoming, I guess, what's the deal here? Launching a stablecoin?
Yeah, so Wyoming is the first public entity in the United States to issue a stable token called...
Public enemy or public entity?
Public entity. Did I say public enemy?
No, I just didn't. I can't hear. No, I'm just messing with you.
But could be public enemy.
I'm throwing you off.
Stable token called the Frontier Stable Token, ticker FRNT.
Okay.
This was launched on August 19th. Wyoming has always been kind of at the forefront of the digital asset space. I don't know if, Wyoming has very popular, friendly legislation for digital assets.
I think that's where Senator Loomis is from.
Yeah. So they've always kind of been at the forefront. So just 3 major points here. It's a historic first U.S. public entity to launch this government-backed digital currency. Multi-blockchain availability. So FRNT will be on Arbitrum, Avalanche, Base, Ethereum, Solana, a couple others. So there's widespread adoption and interoperability there. And then strong financial backing. I think this is one of the most important parts. Token is fully backed by U.S. dollars and short duration treasuries held in a trust. Legislation mandates 2% over collateralization. So it's an over collateralized stable token. Seems pretty safe, seems pretty secure. And the token will be available for purchase on Kraken and a Visa integrated card platform called Rain. I'd never heard of that. Avalanche, I guess we'll have to look into that. Never heard of that one, but broader public availability will be coming soon. And I think it's pretty interesting announcement.
It's interesting. Well, let me ask you why. I mean, this is a great headline. It's certainly bullish on the surface, right? States are launching stablecoins. Does that matter? I guess what I'm trying to understand is who's going to use this, or what's the use case? Maybe it doesn't need a use case. Maybe this is more novelty. I don't know.
Well, I think maybe it's kind of like one of those things where they're going to earn a yield off of it, and maybe have some reason for people to adopt it. I don't know. To your point, I don't know who's would be using this. I would just use U.S. dollar coins still, but maybe they'll offer some type of yield. Maybe they'll offer some integration with a major payment provider. It might just be.
You talked about the integration with the Visa, the card. I think it's a
Visa card provider, Rain.
Yeah. Rain. Yeah.
So maybe there's something there. I'm guessing they have to. If they're holding stable coins, they're going to earn that short-term treasury interest, right? So
maybe it's just people's preferred token. I like to use the Wyoming dollar.
Have you been to Wyoming? You've been to Wyoming.
I've been to Jackson Hole, where the Fed's hanging out with all their buddies.
You've spoken at the
maestros of monetary policy are all there right now.
You own land out there, don't you?
I have a friend that owns like a house in a front yard that's considered land. But yeah, Jackson Hole is cool. Wyoming is an awesome place. It's beautiful out there.
And now they have a stablecoin.
And we're gonna have to trade it, or I guess acquire some.
Some.
Chainlink, big mover. You were on the show earlier today, as you mentioned. If I recall correctly, Chainlink. Let's see here. If we go to highest volatility, Chainlink has been one of the higher volatility tokens that are offered through the Tasty Trade platform. At the time, up 52% last 3 months, up 14% on the week. I think it's a little bit higher here. I got 26.47 on my screen, so even better than this morning. What's going on with Chainlink? What's behind the move?
I think it's just all the integrations here. I'm looking at stories of 2025. Network activity reached nearly 10,000 active addresses. Whales accumulating over 1.3 million link. Bullish sentiment there. Data streams for U.S. equities and ETFs were launched in August 14th. Chainlink Reserve was launched as an on-chain treasury to accumulate link. It just seems like people are buying up link and there's reasons to own it. That's causing a bullish price action on it. And out of any of these protocol tokens, Chainlink is the one that's the most integrated both in TradFi and DeFi. So just seems like the sentiment's good. Seems like people are scooping it up. Tokens are, coming off chain. So
yeah, to that point, they launched data streams for U.S. equities and ETFs.
Yeah.
Bridging that gap, as you mentioned, between TradFi and DeFi. They've got a partnership with the Intercontinental Exchange, ICE, different ICE than maybe some people are familiar with. They just launched the Chainlink Reserve, on-chain treasury that's funded by both on-chain service fees from the network as well as off-chain enterprise revenues. I don't know what that means exactly, but it could be coming from some of these partnerships that they're spinning up. But basically, what we're seeing with some of these corporate treasury vehicles, some of these other vehicles, you're now seeing that spill over to alts. We talked about SUI again with Mill City Ventures with the CIO there, Stephen McIntosh, on Monday. But you're seeing this across the board, which I think like short term, it's good. It feels good. It gives it a boost. I think it's sustainable. But when I look at, some of the tokens that play a real role in bridging TradFi, DeFi, kind of when you think about DeFi tokens, Link isn't always included because people look at it as an oracle, but the role that oracles will play in that system, it's core to it.
Right, yeah.
Let's jump into the chart.
Yeah, let's take a look at the chart. We'll bring up the platform here.
Because we're at 26.56 now, trading towards the high end of the range.
Let's see.
Yeah, if we can get the chart on the screen here, just want to see where it's come from. So, here's 2025. This was $6, $7, $8 a while ago. But if we just zoom out a little bit, and you look at the prior cycle, you go back to 2021, and at the time, right, it's hard to understand what was driving this. Sometimes it's just FOMO in the market. But, we did have a price of $50. Doesn't mean that we get back there, but this isn't new all-time highs for Chainlink. This is, and you see this pattern in many different tokens, bottomed out, just left for dead for the better part of almost 2 years. And basically 2 years here. And we're seeing a lot better trading activity. So I think if you're looking for altcoin season, this is another one that I would have on the radar. I personally don't think that it's altcoin season necessarily just yet. There's been more of kind of a back and forth between Bitcoin and ETH from a relative performance perspective. But this would be one along with Uniswap, which we're working to bring to the platform, along with Aave, which is on the platform on Tasty Trade already. Those are some that I think, when you look at the real world use cases, you look at users on chain, you look at the actual revenues derived from fees, like it's real.
Yeah. I think that I call it the DeFi 1.0 trade. So
legacy stuff from the first time around.
Yeah.
Summer.
Uniswap, Aave, Compound to some extent, Curve, Pendle is another one, not on the platform, a little bit out there. You guys can look at, it's called Pendle, PNDLE. And then Chainlink, some of these oracles that are generating revenue. These are real protocols with real users. So looks like that might break out. If you go back to 2021 to see how it launched, I still think that's kind of got some room to run there. So definitely something to keep an eye on.
Yeah, just looking at 21 here, and it sold off sharply, but yeah, there could be some room to go, like you said. We'll run the expected moves on this and start to pull that into our dashboards a little bit more. But let's jump back to the slides really quickly. A lot of this you'll see is related. We've talked about Wyoming. Let's talk about Senator Loomis. I saw a headline earlier today. Everyone seems to be pretty positive, pretty confident that we're going to get a crypto market structure bill on Trump's desk by Thanksgiving. What does that mean? That would imply really passage of the bill and some rules here, regulation around crypto market structure. You got the Clarity Act looking at, is it going to be the SEC, the CFTC? How is that divvied up? We'll do a deeper dive there. But just heads up, if you're looking for a catalyst and you're looking for a time frame, maybe you have one. This is not necessarily new information. We've been aware that this is making its way through Congress. We just recently got the Genius Act passed. That's huge for stablecoins. Now we move on to the next possibly and bigger catalyst here, which is the broader regulation and crypto market structure. That said, Senator Loomis from Wyoming, stablecoins, Wyoming the first state to launch stablecoins. I want to just quickly look at stablecoin market cap.
Okay.
Dan, because last time we checked, it was 250 billion. It's 277 billion today, up 5 billion in the last 7 days. Tether minted $1 billion on ETH the other day. It's off to the races, and I have seen some headlines that analysts believe, for whatever that's worth or that means, we could have a multi-trillion-dollar stablecoin market cap at some point.
I was reading that too, and I think I've said this before. Stablecoin flows are an indication of activity on chain. It's an activity of flows to the broader crypto ecosystem. So that's a great trend. I think the more
this is what you want to see.
This is what I want to see. Yes, exactly. I do have a quick comment from the chat on this. Jose asked, with the popularity and adoption of stablecoins, will wrapped crypto tokens be needed in the future? I think it depends on which wrapped tokens you're talking about. I don't necessarily see stablecoins being similar to like wrapped Bitcoin. Like wrapped Bitcoin is getting liquidity of Bitcoin onto other chains. So I think they're two different things, but definitely stablecoin market cap increasing like it has is a good indication of liquidity on chain, which is bullish in my opinion.
Yeah, I don't think there's substitutes. I think, what you're seeing here, right? These are dollars with a token wrapper. So I think that's the theme that, look, we're already seeing. It's not whether I think this or not. You're already seeing this, right? You hear the tokenization of securities, the tokenization of equities, real world assets. All this stuff is kind of commingled. It's the same thing in many cases. What are we talking about here? We're talking about token wrappers, the representation of these assets on a blockchain network. There's efficiencies to be gained from that. There's a lot of flexibility, I think, composability as well that comes from it. So that, I think, is the theme. And I also think you probably do see more representations of Bitcoin, of collateral on these other chains.
Right.
We talked about this to some extent on Sui with Steven on Monday.
Yeah, exactly. So I do think they're not substitutes, a little bit different, but in general, I think they're probably going to be, you're going to see more of them probably, especially for Bitcoin across these different chains. So did you dig into this bill at all real quick? I
haven't looked at it that closely. Okay. We've got to do a deep dive there. We'll bring that out next week as we get closer, because if that's the time frame, it's only a couple of months away here. Does give you maybe some catalyst, right? It's not like the market doesn't know this or isn't starting to price some things in, but could be that there's an opportunity to get long some call options. Maybe you want to own some upside tail risk. I don't know. I think it's just, again, another box to check. We've known that this is likely coming. There's a lot of positive catalysts. In the space of the time, it doesn't mean the price is going to go straight up, but we're still pretty positive given all of the developments that are on the horizon. Dan, all that said, we got about 5 minutes or so left in the show. What are you trading? How are you trading it? How are you thinking about markets? Really enjoyed listening to your perspective on kind of, I'll call it loading the boat, and your approach to using GTCs, limit orders at certain levels where you want to buy or sell. That said, if you want to check that out, tune into the earlier Tasty Live show. What are you looking at right now? What's on your radar? We talked about ETH over Bitcoin as one way to look at this. Anything else that stands out to you?
Yeah, so like I said on the morning show, I think the way to play this is to play the ranges and have limit orders in, at the bottom of those ranges where you can catch a wick down if there's a sell-off, because like you've seen today, usually the market recovers pretty quickly, so you want to catch that move. That's a really simple way to play it with spot, with what we offer on the platform. Another one that I looked at and we mentioned before was Greg Magadini from Amber Data's trade. That's the MSTU or MSTR or MSTU. You can sell upside, sell the volatility in MSTR, and use that to finance the ETH ETF.
Okay, so you'd be coming in here, and we'll just pick some arbitrary expirations here, but let's just say that we're in September, 30-day expiration. You can see the implied volatility on a per strike basis here. The smooth VIX style calculation is about 79% vol. and you are selling what, on the surface looks like some pretty juicy premium, the underlying price here is $340. You could go to the $440 just to make it easy, $100 away, and you're getting paid about $250 to sell that strike. At the same time, you're going in and you're going to, let's say, ETH A, is that right?
ETH A, yeah.
And you're financing a long call position?
I think so, yeah.
Okay. So I'd want to do this in the same expiration. You can see we've got some spreads on in here already, but, depending on how you want to price this, you could do a call spread, but you would go long this. And again, you're just using that premium in MSTR to finance this position. The idea, or what makes this real, is that they're both positively correlated. That needs to be true. It is most of the time. ETH and Bitcoin are going in the same direction. Not 100% of the time, but it's pretty close. That said, that's the trade idea here, or conceptually how you might approach this.
Yeah, exactly. I think that's a really interesting trade, especially for utilizing the options and some of the volatility there on the platform. So it's either that, or let's take advantage of some of these dips and get in and have your limit order set.
Yeah, because I think, just sticking with this for 1 second, it would be odd to me if MSTR went up $100, implying that Bitcoin was just ripping, and in this environment right now, ETH A doesn't move. Right, so I can sell that in that same expiration, and you have to have the buying power available to be able to put this trade on, of course. But we're getting $250 for the what we say 420, 430 call in MSTR and strategy. And you could come in here and you could buy the 34. You could probably just buy the 33. So you're in the trade for 20 some cents. You have unlimited upside on this position. You're going to take on some risk, but you need MSTR to move 100 points. You could probably make up a good chunk of that here, in terms of that, how you think about that spread. So there's some risks, obviously, but an interesting idea and some different ways to structure it.
Exactly. How about you? Is there anything you're looking at? You have a ton of trades on here. So
I'll just jump over to the follow page, and you can see what I've been doing on here, at least as of recently, just kind of buying ETH, buying Bitcoin on the dip. In some cases, still underwater on some of these recent trades. So as we pulled back, and again, remember, Bitcoin was 123. We've got an expected move right now on a weekly basis, takes us maybe to 120. Bought some at 116, 115, 114, all the way down. Trying to, for the most part, and just for context on these trades here, because it could be, $1, it could be $10. I try to do about $100 per trade on this. So scale into stuff, scale out of stuff. If you see 4 or 5 trades come in, I'll probably sell 4 or 5 trades to get out. Maybe not all the time, but just to give you a sense of the size. We're not coming in here with, $1 million and buying one coin at a time or anything like that. But in terms of how we're just trading it and some of the price signals that we're seeing, that's where we're at. Bought a little bit of Litecoin at 119. You can see we're under on that right now. But as you can tell, adding some SUI or SUI here, but primarily has been ETH and Bitcoin over the last few days. And if we get a pop here, might look to sell out of some of this stuff as a trade. Do we think it's going higher over time? We do. That said, I want to trade around these positions actively. So if I bought some at 41.50 and it gets back to 4,500 really quickly, I'll take that trade off. Decent little percentage return, in a few days if you can get it. That's what I love about crypto, is the volatility, the realized volatility here on a very short time frame. In some cases, you get that with the equity market, but it's pretty standard here in crypto, which is what I like.
It makes for a fun trade. It really does.
Well, Dan, that's going to do it for our show. Appreciate you joining me here as always. We'll be back next week. What's on tap next week? I think we've got some guests coming up. What's on the schedule?
Monday, we'll do the Tasty Crypto Show regular with probably me and you, or Shelly and you, or whatever. It'll be just us. And then Greg is coming on Wednesday.
Hell yeah, so Greg's coming back.
We'll get an update there, and we'll see what trades he has for us.
Beautiful. Tune in to that. Are you on Liz and Jenny? Is anybody else on any other shows this week?
Shelly will be on Liz and Jenny Monday, I think.
Awesome.
And then we'll pop in probably tomorrow or Friday on one of the morning shows.
Beautiful.
Yep.
Get your fix. Crypto, Tasty Live. This has been the Tasty Crypto Show. As always, thank you guys for watching. We'll be back next week, but before we sign off, if you're not on the Tasty Crypto email newsletter list, get over to tastycrypto.com and sign up. We put out 2 emails a week. Maybe we'll do more, maybe we'll do less. It's a work in progress. But you get all of these dashboards, you get our commentary, you get the trading ranges. I think it acts as a decent guide for the markets if you're looking for something like that. But sign up over at tastycrypto.com, or it's also, if you're on YouTube, it's pinned into the chat. But that said, this is the Tasty Crypto Show. We'll be back next week. Until then, I'm Ryan.
I'm Dan.
Peace.